pushes back and says, look, this is not political. We are seeing disinflation around the margins. There are people in the markets, including in BlackRock's David Rogel came out with the FOMC meeting minutes and said that easily they could see a July rate cut simply because the inflation data has been relatively benign and there are signs of a slowing in the labor market. This isn't necessarily political, but it's going to be framed in a very political way.
Bond yields this morning are higher on a 30-year, up by 4 or 5 basis points, 491. We'll never move on. Highest yields on a 30-year, going back to 2011 in Europe, in France, in Germany. European stories still brewing. 2 hours away from the cash open in the equity market. Let's get you some morning movers. Let's cross over to Yahira. Hey, Yahira.
Hi, John. Any wavering you're seeing in the equity market is not showing up in crypto. Take a look at these crypto-linked stocks. Coinbase, MicroStrategy, Mara Holdings, and Bit Digital are all rising after Bitcoin surged to new highs, now topping $118,000. What a run. Next up, we have Freeport-McMoRan. The stock is down 2.25%. I've mentioned the American mining giant a lot this week. That's because it was thought that it would stand to benefit from President Trump's 50% tariffs on copper imports. But UBS just gave it a downgrade. It is now down to neutral. Analysts there saying that they expect a softening in demand and fundamentals to weigh on copper prices over the next 6 months. So throwing a bit of cold water on the optimism there. And we end with SoFi Technologies. The stock is down about 1% after TD Cowen started coverage on the stock, giving it a hold rating and saying that the stock looks fairly valued from here. But this stock has had quite the run. It is up nearly 40% in the past month as investors caught wind of potential policy changes coming to student loans that could funnel billions of dollars to private lenders like SoFi. John?
Yahira, thank you. More from Yahira in the next hour. On a radar this morning, President Donald Trump threatening a 35% tariff on some Canadian goods. The announcement coming after he told NBC News he's eyeing blanket tariffs of 15 to 20% on many trading partners.
I keep going back to my big question. Is this stock market pricing these tariffs in and saying it's okay because the stock market is not the economy and it's a lot of big tech stocks that are relatively immune? Or is this stock market betting that the president's going to back down? And if it's the latter, then how much does this set up a big game of chicken between the president and the markets where there is a clearing point and we could reach that at some point in the next few months?
Or it's fair to say it's a bit of both. It certainly feels that way at the moment, doesn't it?
So what is this, real-time calibration? The president like, 13%, the market's fine. 15%, the market sells off. Is he trying to figure out kind of what the economy can absorb by looking at the market?
It's fairly well understood this is a negotiation. So there is a belief that whatever the threats are now, they will be lower. Higher than the start of the year, but lower than the current threats. So that's that little bit of the trade story not fully following through. The second piece of it is the earnings are okay and they take some comfort from that at the moment, and the data is just about holding up.
Yeah, and just to build on that, who's he negotiating with? The trading partners of the stock market, corporate executives. And I think that we're going to see that come clear. I'm still struck by the fact that Vietnam was unaware of the 20% rate that they supposedly agreed to that was then announced. A lot of unknown, and I think people are clinging to the here and now, which is the reason why earnings will be so important.
Certainly the all-time high has given him some confidence through the next 3 weeks.
Yeah, maybe rightly so.
That's for sure. A key Trump administration official saying Fed Chair Jay Powell has mismanaged the central bank. The director of the OMB writing in a letter to Powell, quote, "The president is extremely troubled by your management." This pressure is coming from all sides on this Fed chair.
And this tends to be the president's tactic, right? It's sort of look for all of the ways to ramp up pressure, either related to monetary policy or not, to try to jawbone into a position that seems like it's more amenable to the White House. I just wonder if the president isn't looking to lose Powell, to fire him, is he looking for him to step down? Is he looking to scapegoat him if there is any faltering in the economy? Is he looking just to make them some sort of poster child of the debt problem and the deficit? He kept talking about this, and I think Jim Bianco really raised a good point. President Trump seems to see the U.S. rate structure as being a credit one, not a sovereign one, and keeps saying that rates should be lower because of the creditworthiness of the United States. Whereas sovereign rates typically are tied to growth and inflation, which is a completely different calculation. And that tension, I think, is really there.
In some ways, it's needless drama, because for most people, they think this Fed will be exactly where the president wants them to be in September and they'll start cutting interest rates. And that's only 2 meetings away. For the chairman of the Federal Reserve, he's obviously in a tough spot. He has pledged to anchor inflation expectations first and foremost, and he believes that's his most important job. A lot of people might agree with that view. The pressure that's coming, though, from the White House, and I've heard this argument made so many times, makes it harder optically for Fed Chair to transition beyond his current message. In some ways, it makes it harder for him to reduce interest rates. And I think the president deep down knows that because we've seen him ultimately say as much in public.
Which means maybe he wants him to hold rates where they are. I don't know. It's the reason why Chris Waller has to come out yesterday and say, look, this isn't political. For him to even have to say that raises a lot of questions for people. Okay, thou who protesteth too much, right? There is this sort of undercurrent of questioning of the validity of this institution, and I think some people are very concerned about
I think
that.
we as journalists have a role to play here to cut through some of the noise. Not all arguments for lower rates are political. That the argument that Governor Waller has presented is an economic one that we've heard from economists on Wall Street as well. There are credible economic arguments to lower interest rates right now, just as there are, going to sound like that two-handed economist sitting on the fence, but just as there are credible economic arguments not to. And that's a worthy debate that's taking place on the FOMC. I, for one, am happy there's at least a debate taking place on the Federal Reserve. I like to see that division instead of the groupthink that has really dominated that institution for quite a while.
I welcome it as well. I don't welcome the sort of questioning of the integrity of an institution. I mean, look, you can do that. I just think that that might undermine their ability to really monitor the inflation with
to do the right thing.
To do the right thing. And I think that is the one real question here. You know, are people going to be reluctant to cut rates because of the political pressure, sort of ironically? That's a real concern.
Unless they're political and they're running for that seat. But yeah, OK, let's move on to this.
Analysis paralysis.
I know. NVIDIA CEO Jensen Huang met with President Trump at the White House just yesterday. Sources telling us here at Bloomberg the meeting came just days before Huang is traveling to, guess where, to China.
Yeah, and he's going to be talking about the importance to really free up some of the chip sales and how an integrated ecosystem across countries is actually better for the AI development. Let's see how this goes. We don't know what he's going to talk about. Nonetheless, it's sort of who's got the preference in the C-suite of the White House. Right now, Jensen Huang seems to have the front seat, so let's see what he does with it.
Ed Ludlow, who led some of the reporting here, is going to join us in about 30, 40 minutes. We'll catch up with him a little bit later in the programme. Let's turn to the banks. The JP Morgan boss, the CEO, Jamie Dimon, warning markets are, quote, complacent on President Trump's tariff plans. His comments coming ahead of bank earnings season kicking off just next week. Looking ahead to those numbers, Erica Najarian of UBS. Erica, welcome to the programme. We've heard Jamie Dimon, Mr. Dimon, talk about clouds on the horizon, storm clouds, and then earnings come along and it's blue clouds and sunshine. Do you expect anything different next week?
No. Actually, it's not only the clouds are not just breaking in the second quarter in terms of the results, but it looks like blue sky as we think about the second half of the year. So think about it this way. There was really a pause in activity, whether it was loan growth or capital markets, in all of April and maybe into the first 2 weeks of May. And then what you're seeing in the regulatory data right now for loan growth and what you're seeing in industry data for investment banking is that June was a super solid month. In fact, we haven't quite had this start in first half loan growth in some time. And so you're going to have a pretty decent result. And you're going to talk about strong pipelines in the second half of the year. And by the way, what else happened in June? You had a stress test that unlocked, on average, 90 basis points more of excess capital. And so, you know, look, Jamie's Jamie, and he's always going to be cautious and warning us of the tail risks. But I think the clouds have broken in the second quarter, and you are seeing blue skies for the second half.
Blue skies, and did I call them blue clouds? I might have done.
It's okay. It's Friday.
Blue skies.
Are you kidding? I can
I'm
barely
with you.
speak.
I'm struggling.
So carry on.
Lucky we've got Erica with us. Erica, I'm picking out the numbers from your report. The rally we had off the low on the KPW Bank Index of more than 38% so far, close to 40%. Erica, just how much of that story that you described for the second half, the so-called blue skies, how much of that have we discounted so far?
Look, what we essentially clawed back in that rally is taking the tail risks off the table in terms of tariff policy. Like, you know, I listen to you and Lisa, you know, talk about your, you know, your views. Who knows, right? But I think what the market is saying is, I think that risk, whatever that was in terms of the low, April 4th, that we were pricing in is now off the table. What may still have, you know, legs in terms of continuation of the rally is the fact that deregulation is just so much more powerful, so much faster under Trump 2.0 than under Trump 1.0. I mean, we essentially had to wait 21 months after inauguration in Trump 1.0 to get our first regulatory proposal. We had a stress test proposal in April before Michelle Bowman, the vice chair of supervision, was even confirmed. And so we have, a pipeline of proposals that have already happened, whether it's stress test or the supplementary leverage ratio or SLR. And then we have more to come in terms of a more comprehensive stress test reform, GSIB recalibration. And, we said something, 100 basis points of, lower capital minimum is something like 150 basis points of extra ROE. So I think that's why, you can continue to see the rally in the banks.
Is this ultimately then a regulatory story, or are we going to see outperformers that we had been expecting heading into this year? And I'm thinking about mergers and acquisitions or IPOs in the investment banking space.
Yeah, I think it's going to be both a deregulatory and activity story. And thus, we also said in our report, you may see a broadening of the rally to scope regional banks who have woefully underperformed the money center banks really since election day. And so, I think what you'll see is the broadening of the bank rally because you will hear about these M&A pipelines getting better. And look, these regional banks not only benefit from that in terms of some of the small boutique investment banks that they have within their companies, but also what that could mean for loan growth going forward.
Erica, looking forward to bank earnings season, and hopefully we can catch up next week. Thanks for dropping by. Erica Najarian there of UBS, looking ahead to financial earnings about a week away. Blue skies and sunshine. Got that right this time.
Perfect.
For bank earnings next week.
They've got the deregulatory tailwind. They have investment banking activity that's been picking up, trading activity that's been robust, even if it's a trading environment that goes to nowhere. And then, of course, there's a steeper yield curve, which also benefits them. So there are a couple of different prongs that are all firing. So despite some of the pretty dire commentary from Jamie Dimon, expect the profits not to reflect that. A
close to 40% rally off the lows on a KPW Bank Index from the lows of April. Unreal. Futures this morning pulling back a touch from all-time highs. We're down by 0.5% with an update on stories elsewhere. With your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. Secretary of State Marco Rubio met his Chinese counterparts on the sidelines of the ASEAN talks in Malaysia. It's the first in-person meeting between the two since President Trump returned to the White House. After the meeting, Rubio told reporters odds are high for a meeting between President Trump and China's Xi Jinping. Elsewhere, New York City Mayor Eric Adams raised more than $1 million in his re-election effort in a single night in a fundraiser in Manhattan. It's a stark turnaround for Adams, who in March reported raising just over $18,000 in a two-month period. In recent weeks, his campaign's been boosted by donors and business leaders opposed to the Democratic nominee, Zohran Mamdani. And the original Hermes Birkin bag sold for a record $10 million at an auction in Paris. The 40-year-old black leather handbag sold after a bidding war that lasted more than 10 minutes. Tokyo-based designer goods reseller Valuance Japan bought the bag and said that it will exhibit it as a piece of, quote, global cultural heritage. And that's to be a brief, John.
Lizzie, thank you. More from Lizzie in 30 minutes' time. Keep it together, Bramo.
Well, I mean, first of all, two things. That's where AMH is, clearly, to bid on the Birkin
I was
bag.
missing her.
Yeah,
Lizzie
exactly.
Was I need the take from Anne-Marie.
And then the second thing, and this is pointed out by Chris in the control room, is sort of the Mamdani and then the Birkin bag is fantastic. Yeah. It's sort of this wonderful contrast of 2025.
Is that what he's campaigning on later on this year?
The $10 million Birkin bag.
Some people have got too much money.
Yeah, well, that seems to be his take, but there shouldn't be any billionaires, right?
So I hear. Up next on the programme, a tale of two consumers.
If we look at other categories, discretionary categories like restaurants, you're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
Up next on the programme, we'll catch up with Stephanie Roth of Wolf Research, live from New York. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to the job.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Slow grind towards the weekend, almost there. Equity futures down about 0.5% on the S&P. Little change so far this week, coming into Friday at all-time highs. Just a small pullback so far, down by 0.5 on the Nasdaq 100 also. Under surveillance this morning, it's a tale of two consumers.
There are certain households, lower income households, who are pulling back completely from making purchases in travel. If we look at other categories, discretionary categories like restaurants, on the other hand, again, same analysis. You're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
So here's the latest. Mixed messages for the consumer coming from two corporations. Delta Airlines restoring guidance, saying travelers are coming back. Meanwhile, Amazon seeing a plunge in Prime Day sales compared to last year. To discuss, Stephanie Roth of Wolfe Research. Stephanie, good morning.
Good morning.
Who's got it right? Is it terrible or great? Is it Amazon or Delta?
It's always somewhere in the middle. So I think what we're seeing is services were hurt in the first half of the year, largely driven by concerns around the economic outlook. A lot of that's super discretionary. So people pulled back there, especially when it came to travel. That's going to start stabilizing through the back half of this year. And then people pulled forward their demand for goods because they were concerned about tariffs. So now we're going to have the reversal of that, where the services side of the economy gets a little bit better, and there's a little bit of an air pocket on the goods front.
There's a much more simplistic way of explaining what John just said, which is people are buying $10 million Birkin bags and then they're voting for socialist policies because you have the tale of two consumers, right? I mean, kind of what we were discussing before. Is that overly simplistic, or do you see that gap widening in terms of the ability of consumers to keep spending on the lower income side as well as the higher income side?
Yeah, I think that gap will persist. I don't think it's necessarily going to get materially worse. Of course, at the very low end, they are certainly hurt by tariffs more so than other folks. But we'll see the low-end consumer continue to remain, fairly sluggish, but the rest of the economy should be okay. And it's going to largely depend on the labor market. To the extent that the labor market remains okay, we don't see layoffs picking up materially, then the consumer should spend, albeit at a fairly slowish pace, somewhere around 1.5%.
So just to extrapolate this a little further and get a little bit existential, because it's Friday. It's Existential Friday. There's been this sort of overlay of a theme where white-collar jobs have been disappearing, and there are fewer of them and they're higher paid. And blue-collar jobs are actually expanding. And people are able to get blue-collar jobs because there are immigrants who are leaving the country or who aren't coming in as quickly, and because there is a much bigger demand for that. Are we actually seeing that in any of the economic data that will actually boost the lower and middle income end and will actually give some sort of tailwind, frankly, to a lot of the consumer-facing companies?
Yeah, I think that's a really good point. And the latest jobs print might have been the first indication of that. We saw downward pressure on the unemployment rate. yes, the driver between native-born versus foreign-born is not entirely clear, but I think what we're starting to see is that there's some funky things under the surface that's really putting downward pressure on the unemployment rate as a result of this reduction in immigration. That's going to put upward pressure on wages for blue-collar workers, which could start to help that feed through the data. Granted, a lot of the major changes on immigration only happened at the end of May. So we're really just starting to see the effects of that, and it should take throughout the course of the summer, perhaps into Q3, to become more abundantly clear.
You've referred to 3 different sources of inflation through this conversation so far: goods, services, and labour. How is CPI next week going to capture that story?
Yeah, so I think we're going to start to see inflation creep up a bit. We're looking for 0.26 on core. June should be kind of modest compared to the next couple of prints that we're going to get. And it's important to flag that financial services should also be a big source of upward pressure. So that's one thing we didn't even talk about. But that's been pulling downward pressure on core PCE in the last couple of prints. It's very much going to reverse on the back of strength in equity markets. So what we're looking at is a string of core PCE of 0.3% or above for the next couple of prints, which makes September a really difficult backdrop for the Fed to be cutting.
So you think it's hard for the Fed to cut in September, at a time when the likes of Governor Waller's going around saying, hand up, let's go, might have to cut rates as soon as the next couple of weeks?
He's also saying, hand up, I'll take the job as Fed chair. So there's some
You think it's political? When he sits
think,
there and says it's not political, you think it is?
Yeah, I think he's vying for the chair job. He doesn't seem to be towards the top of the list, but I think he would be a good candidate for it. But I think he's trying to get the job. I think that's the main message there. The Fed does want to cut. They are looking for an opportunity to cut a couple more times. I just don't think that the data are going to be consistent with that by September.
One of the reasons why there is a legitimate economic argument that we've been hearing to be cutting rates sooner than later is because there are sources of disinflation, and we are seeing that, and housing prices is one of them that we keep pointing to. Why is that not fair, given that it's about a third of CPI?
Yeah, I mean, but it tends to move fairly slowly. It's going to continue to kind of ratchet down. And in this print in particular, we actually think, just given the volatility in owner's equivalent rent, we actually think it could bounce back a little bit, at least just temporarily. But the rest of the inflation metrics are going to be moving the other direction. So sure, housing could be decelerating, but when you get goods prices picking up, travel starting to rebound a little bit, that's just a tough backdrop for the next couple of prints.
Bank of America's Michael Hartnett came out earlier this morning and said, when we look back, the 2020s are going to be an inflationary decade that reverse a lot of what we had seen over the past 4 decades of disinflation. Do you think that the evidence has borne that out, or do you think the jury is still out to really understand how this is all going to shake out, what the ramifications from supply chain disruptions from the pandemic will be, and how much tariffs will really rejigger that?
No, I think this is just a fairly temporary second inflation shock, and we're going to be looking in a year and a half time. We're going to be moving back down towards 2% on inflation, and this will not really be a big issue. Granted, for the next couple of months, it's just difficult for the Fed to cut, just because there are temporary inflation upward pressure.
So you think Governor Waller does have a credible argument here for lower rates? The one he's articulating, you think he might be running, okay, that's your opinion, but ultimately underpinning that is a credible argument for lower interest rates.
There's a credible argument for lower interest rates. I think now is tough to sort of rush into it, just given inflation should be elevated for the next couple months. And there's not a rush. The economy's okay, and it's proved to be not that interest rate sensitive. So there's not that much harm in waiting a couple of months until we just see where inflation ultimately settles. I
still remember when Bill Dudley came out years and years ago and said Fed funds might have to go through 5%, and everyone said 5%, good luck, this economy will crater. Didn't happen.
And part of that is because a lot of people had already extended out a lot of their personal maturities. How much it really will be stimulative if they do cut. You could say on one hand, it's not a big problem. You can wait, but you could also afford to cut then, especially if it's politically expedient.
Just before you go, just quickly, when's the first cut? What month have you got penciled in on the calendar?
I think we're talking mid-2026.
You think the first cut is mid-26?
Yeah, because I think we're going to see inflation a little bit elevated here. Then growth is going to remain pretty strong. We're going to have positive stimulus from the fiscal bill, and it's going to be just a tough backdrop for them to cut. Eventually they will. They certainly want to, and it makes perfect sense for them to get there. It's just going to take some time.
And we'll have a new Fed chair in the middle of 2026.
You know who agrees with her? Bill Dudley, the person who thought that there'd be 5% interest rates.
Stephanie, it's good to see you.
Thanks
for dropping by. Stephanie Roth there of Wolfe Research. Coming up next, Jose Minaya of BNY, Angelo Zeno of CFRA, Steve Rasciuto of Mizuho, Walter Piecyk of Lightshed Partners, calling for a change at the top of Apple. That conversation in the next hour.
How are we going to get the debt down and the deficit down if we have these big tax cuts?
Well, David, let me just say, I think the deficit is probably the most important issue today in terms of the long-term impact on the economy. And just to put this in perspective, in the first term, we had debt to GDP ratio of about 100%. And with the tax cuts and economic growth before COVID, we were growing the economy faster than we were growing the debt. So that ratio would have come down. And I think we were trying to get it down to 90 to 95. The big focus on the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know, firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 125% today. That's a gigantic problem. Secretary Bessent has talked about getting the deficit down from 6% to 3% of GDP, and that's got to be a major focus.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
What started out as just a relief rally is starting to become something real.
The markets are adjusting. There's no panic so far.
If you're looking at what's been working in markets the last couple of years, it's quality stocks.
The market is pricing in a friendly sort of mix of growth, inflation, and policy.
Equities and risk are discounting the here and now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P pulling back from record highs. We're down by 0.5%. Similar move on the Nasdaq 100, down by 0.5. The Russell this morning down by 0.9. As we work our way into the weekend, look ahead to next week. Fireworks, CPI, Tuesday, alongside earnings from JP Morgan, Wells Fargo, and Citi.
Yeah, the earnings to me really are front and center. CPI, of course, we're going to be looking for any type of tariff ramifications coming through that tariff-related inflation or not. The earnings that will give maybe the better picture. Do we see a repeat of things are stable, a la Ed Bastian over at Delta, or do we see beginnings of a sign that there's some sort of hit to the economy? If we don't see that, which is what's widely expected, how much more can this market rally?
Erica Najarian of UBS said blue skies and sunshine for the financials next week after a rally of almost 40% off the April low. Let's go with Jamie Dimon. Let's think about Ed Bastian. Ed Bastian of Delta is making the argument that businesses now have more certainty than they did in the first quarter.
And part of that stems from the one big beautiful bill. I mean, this to me is the certainty that a lot of people are looking at to give a sense of the tax planning, of what kind of investment they could potentially do. Key question will be, does it give them the stability to make large investments that might hinge on supply chains? And that, I think, might be something that some of the bank executives could answer.
Yeah, compare that to Dimon, who's talked about businesses sitting on their hands. Are they still sitting on their hands? Or do we see that pickup in activity in the second half that many of the bank bulls think we will see?
And this is what we've seen with respect to recent acquisitions, even with Kellogg, for example, the Nutella and Fruit Loops. I keep thinking about that and thinking, why would anybody do that? But going forward, how much more can we see of certain companies that see a benefit of being larger and could see enough of some of the noise dissipating to really have that conviction and make those investments?
A fantastic lineup of guests so far this morning, including the conversation we had about 5-10 minutes ago. Stephanie Roth of Wolfe Research, making a case for the first interest rate cut to come in the middle of next year, 2026, and looking for firmer inflation reports going into a tricky September meeting. I don't think that's what this market and many people are looking for going into next year.
You know, this goes to the question, and you've been asking it all morning, and rightly so, how much does this equity market depend on rate cuts? And what we've heard from the bulls is it doesn't at all. And it actually can continue with the gains regardless of any kind of rate cuts. A number of people have said that's not true. You need the disinflation to continue in order to support the rest of the environment. But ultimately, that's the question. Is Stephanie's view prohibitive to further gains on the equity market, or is it supportive because the stability in the economy is what will actually keep driving the equity market higher?
Equity so far this morning, negative by 0.5%. Coming up this hour, Jose Minaya of BNY on investing in a volatile environment, Steve Rasciuto of Mizuho on a shock-proof economy, and Walter Piecyk of Lightshed Partners calling for disruptive change at Apple. That is must-watch later this hour. We begin this hour with stocks lower as President Donald Trump floats a higher global tariff rate. Jose Minaya of BNY Investments and Wealth writing this: volatility is here to stay invested, and look for the right diversification. Jose joins us now for more. Jose, good morning.
Hey, good morning.
Just want to pick up on that first line. Volatility is here to stay. Why is that?
Look, I think volatility, clearly, we're at an all-time high or peak in terms of the noise in the markets. If you just think about back to the beginning of the year, our team kind of added around 26, 27 different policy changes or news cycles that really kind of impacted or jolted the markets. Yet the markets have kind of powered through that, right? I think I was on one of your shows earlier in the year saying around, hey, you should not be risk off. And this was like right after Liberation Day, because of like what we're seeing in the fundamentals and trying to look past this noise. Seeing a White House and administration, there's a little bit around the carrot and the stick, right? We saw a lot of the stick at the beginning of the year. Now you're seeing more of the carrot. And again, the markets are responding to that. So it's less about today when we talk to our clients around, hey, what should you be invested in or not? But it's more about what are the solutions you're looking for. You're seeing more and more of that in the industry, whether it's technology with kind of SMA capabilities, what you're doing with model portfolios, which we do in BNY Advisors. Across the board, it is about staying invested through these times, but kind of understanding what outcomes you're looking to get.
Well, let's run with that. Stay invested, long-term time horizon. Got it. What are these strategic anchors you're offering people to get them comfortable with doing just that?
Well, I think, again, it depends on their needs and outcomes. In some cases, it might be, hey, they're looking for income, right? Like, we create a lot of like what we call like, you know, bond portfolio in a box or personal bond portfolios with our Insight investment platform, where it's like we're getting very customized in how we deal with our clients. It might depend on when are you looking to retire? Is there a wedding? Is there educational needs and these things? So you might need principal protection. I've got a new niece on the way. In that case, I'd be like, hey, you should just go long equities. So again, we could spend a lot of time thinking about the noise, the volatilities out there. If you look at, it hasn't paid off to just say, I'm going to stay off the markets. And there's still a lot of cash out there. But again, that idea of I'm going to stay invested, but am I really focused on my solutions and my outcomes versus call it a 60-40 type of portfolio?
Congratulations on your incoming niece and going all equities in response. I am curious,
for her. Yeah.
But for her, for the niece, not necessarily the parents. But I am curious about how much going forward the ballast for income comes from the same place? You said not necessarily a 60-40 portfolio. Let's say someone is conservative and looking for income. Does it still come from U.S. Treasuries? Does it still come from credit? Or do you have to look elsewhere for that type of ballast?
No, I think the markets are becoming a lot more efficient, and they are looking elsewhere across the board. Again, we've seen the advent of private credit. It kind of plays a big part of this. You saw with the Secure Income Act where now annuities and guaranteed income contracts are being allowed to be used in 401k portfolios. I think these are all important legislations that are all kind of recognizing the incredible crisis we have from a retirement perspective, not just globally, but definitely in this country. So you need to kind of look more broadly.
There's a little bit of skepticism in younger generations, it seems. There's this concern that maybe the same kind of gains that the older generation saw in their portfolios are not going to subsist in their generation. Do you think that it will? Do you think that the returns will be the same in the next 10 years that it has been for the past 30 years for a generation that has gotten wealthy off stock market returns?
I don't. And what I mean by that is, if you look back over the last 20 years, you would have been, for all this discussion around different investments, hedge funds, private equity, at the end of the day, you would have been just fine doing a very low fee, kind of like passive equity funding. You would have been just fine. I don't think that's the case in the next 10 to 20 years. It's just a lot more volatility. There's a lot more volatility out there. I think returns are going to be more measured, yet it's, again, finding your spots. Again, it's not about anymore, can I find the strategy that just I can sit back and it's just going to grow 15, 20%. It's being able to do the work around how you diversify your portfolio.
I applaud the risk appetite of the younger generation, looking at things like crypto, don't you?
Well, where else are you
Their
going to get
risk
the gains?
appetite is far higher than it was when we were growing up.
But maybe not necessarily for the same instruments. And this is exactly where I was going to go. It's for Bitcoin. It's for hedge funds. It's for NFTs. It's not necessarily for some of these other instruments. And are they correct?
Yeah, I would actually, slightly disagree, John, a little bit, that I think if you look at the younger generation, they tend to be a lot more risk averse in terms of buying a home. They're buying their first home.
Well, that's an affordability issue.
Affordability,
they just can't afford it.
Yeah, but I have conversations with some of these folks, including in my family, where they're heavy in cash. But if you look at their portfolio, what they're invested in, they are invested in crypto or these things. So there's a lean here to technology and some of these quote unquote cool things versus, look, just put your money in a 401k and max it out. Hey, by the way, do a balanced portfolio, set it and forget it. That stuff, I think there's a lot more risk aversion.
Can we get your ideas on what to do with bonds? This is what Michael Hartnett of Bank of America had to say this morning. Best performer decade to date, gold. Worst, treasuries. Calls it a decade of inflation. What should you do for the decade ahead, and what do you do with that bond portfolio? You talked about income. A lot of people are very worried about inflation hanging around for too long.
Yeah, look, I think we've got a more kind of constructive view on inflation. It's why we still see the markets kind of maybe topping out, or the wide end for us is around 6,400 S&P. But look, I think this is a time where there's likely to be more rate cuts coming, right? You can debate whether that matters or not. You were just having that conversation. I think it's a good time to lock in yields today. And again, for us, it's not necessarily just about what's going on with treasuries, right? It's again, how are you looking at your overall platform and portfolio? There's a lot of different kind of characteristics to take into account.
Jose, I appreciate your time.
Thank you.
Thanks for giving it to us. Thank you. Jose Minaya there of BNY. Similar argument on income from Emily Rowland a little bit earlier this morning.
There's value there. And actually, it will serve a similar, not necessarily the same kind of role that it has played in the past, but it will still provide income. And that's the reason why people have been going into credit. That's the reason why people have been going into treasuries. You're actually getting something for them. So why don't you get them now, even after some of the biggest consecutive losses that we've seen in a generation?
Even with credit spreads super tight. How many times do we hear the same argument?
And it's borne out this
Hey, good morning, Ladioff. How are you?
What it is. It's actually been the ongoing grinding tighter in that spread picture, despite some of the naysayers.
Credit spreads are near the tights of the year. Equities coming into
We're going to scrape a little off the top today.
Market this morning, yields higher by 4 basis points so far. The 30 year at 4.91.
Good.
At about 4.30.
What do you think? We going down today? Are we going to give some of it back?
Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump
We're sitting below the VWAP on both the ES and NQ. Now you think we go up? Yeah. Damn. I'm a perma bear. I always think we're going down.
The terms of the US-Mexico-Canada agreement. Trump also told NBC News that
It looks like the ES has got a short starting to form up.
most trading partners.
But the 50 could hold it up, kind of like yesterday. You know, it flirted around the 20 EMA, then we broke down.
People were killed in last week's flash floods. And
NQ's looking a little stronger.
President Trump is expected to get an
See, the
area
NQ
tour
looks,
of some of the
but you got this
hard-hit
resistance. You got a historic.
responders and relatives.
This red here is this red dotted is historic. Historic supporter resistance, 200 EMA, and then the VWAP. If it breaks through all of this, man, it's got to be strong to break through all that. Yeah, then we're going all the way up. We're going to challenge these zones up here. So you think we challenge this zone up here at open?
In about 30 minutes time. Up next, the Morning Calls Plus, Bloomberg's Ed Ludlow and Angelo Zeno of CFRA as NVIDIA.
Oh, you're in a long?
Takes a visit.
You're in a long? Shit, dude. Hold on.
You're watching Bloomberg TV.
22812. Is that American? Oh shit, you got in. Oh, you got in right on the signal. Look, you got in right on the signal. Shit, dude, look. Man, that was a good buy. I wasn't even watching it then, honestly. Right here. That's good. I'm gonna mark it. What's your target? $12. Oh shit, you got in way down at 812? When did you get in? How long have you been in that trade? Did you get in back here? No, you couldn't have got in back there. Is that 22812? Is that French or is that American?
Our global headquarters in
Oh,
New York. I'm
so you got in.
Bloomberg Brief. Let's set your agenda.
Bloomberg Brief
150.
delivers the market news, data, and analysis you
So are
need
you green or red right now?
only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single
812, 912. Okay, so you just got in. All right, you just got in. So you're in like right here.
Companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
812, 912.
On what's buzzing in markets with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays
Green.
only on Bloomberg.
All right. How many ticks are you up?
This is going to be the
Like I'm trying to figure out. I'm trying to figure out on my chart where you got in.
For the Fed to cut much more
Because here, this is 22,850, and that's the low of the day this morning.
Or will they have to remain on hold for the entire
We add 150 to that. That's 2,300.
Ed Al-Husseini of
Which
Columbia
is up
Threadneedle
here.
making the argument the second half of this year could be tricky for this Federal Reserve. Stephanie Roth of Wolfe Research making the argument
Or
that you might not
100,
see rate cuts
912.
until the middle of next year. From New York
Somewhere
City
in
this
here,
morning,
maybe?
Good morning. Equity futures so far negative by 0.5% on the S&P. On the Nasdaq, we're down by 0.4%. That's the price action.
What's your exit?
Morning calls. First up, Piper Sandler raising its price target on Amazon to $250, citing the Prime Day sales doubling in length to 4 days. Bouncing back on that stock by 0.75% to 1%. Your second
Probably
call
got
from
in
Wedbush
somewhere
upgrading
around here.
Cinemark to outperform, saying the company is poised to benefit from a consistent slate of movie releases. That stock is up by 2.5%.
eToro. Oh, eToro. Okay, it's 22.
Is positioned to
30. So you're 20 points. Okay. So if we go 20 points down, that's
NVIDIA CEO
285. So you got in right about
Sources telling us here at Bloomberg that Huang is set to travel to
right
China.
about here. Okay, yeah, you got in right about my signal.
Bloomberg's
Yep.
Ed Ludlow, and he joins us now for more.
So you're up
What was
about
the
30
purpose
points.
of that meeting?
Well, it's interesting because we don't know what
You got
they
in at the
discussed,
perfect.
although the
You got
president
in right
took
at
to
the
social
signal.
media right to talk about the growth in Nvidia shares.
That's where you
and
got
the
in
$4
at.
trillion milestone. What was interesting is earlier this week, Jensen Huang went on MSNBC.
When was it?
and in
I
the
wasn't
course of that
watching it then.
interview,
I had just
he
turned it
made
on
the
and then
argument
got
that
ready.
The American technology stack, in which Nvidia currently holds a monopoly in the market for AI chips, is akin to the US dollar.
Man, that was a good
right?
trade.
The US dollar is the world's reserve currency, and the
How long are
message
you
that
gonna
he was
hold
putting
for?
out was, we want our technology to be the world's technology reserve, and therefore China needs to have access to it. And he's kind of been consistent on that, John. It's not a matter of tariffs or penalties. It's an issue of export
There's your buy.
control. And he has basically consistently said 50% of the research and researchers focused on AI are from or in China. And it's better they have our tech than their own
I
tech
hold
if
up
we
to.
want to stay in control of this field.
So you're looking for
Any sign
100
whatsoever
points.
that argument is
Yep.
actually
So you're looking to
resonating
get out.
with this White House?
You're looking for 100
So
points.
there's reports that Nvidia has
Shit, dude,
decided
that
to
came
proceed
close
with
at
a
22.
specific
Now you're
design
looking
China
for
chip
23.
that may come in September.
Yeah, you're looking for about 115
Previously,
points.
the situation was that they required a license for their existing.
Oh no,
China
you're
chip.
looking for 200
They decided
points.
not to pursue that license. And what Jensen Huang had told me, if you
Way up
remember, is
here.
you can't engineer any more performance out of these things.
Shit, dude.
Unless you start from the ground up. Nvidia has not officially confirmed.
Where's your target?
That.
I'll put that at your target.
Jensen Huang regularly goes to China.
All right,
They
here's
have
your
many
target.
employees in China, but it is notable our reporting that he's going to meet with the Commerce Ministry, and one would imagine, and based on like a lot of the conversations I've had with big investors as well.
All right, let's do it.
That Jensen is very fixed on this idea that they're an American
Love it, man.
company that conforms with American laws. I'd suggest that in that conversation with the president, he would say that, but also knows he has to go to China and get something out of it. Reassure customers that basically have had their access to that technology cut off.
Just before you go, one final question, different company, similar theme, Apple. This came from Lightshed's Walter Piecyk. He's going to join us later this hour. AI will reshape industries across the global economy. Apple risks becoming one of its casualties, and he's raising questions about the future of Tim Cook. What would you like to know from Walt later on this morning?
Well, I'd ask him who on earth would replace Tim Cook. The short list of candidates for that role is very interesting. Mark Gurman reports all the time, right, about the change in unit leaders and lieutenants, but the CEO is a different thing. The reporting on this new lineup of devices next spring is really interesting. It's very analogous to Tesla. The future may be AI, but
all right, let's do it.
The bread and butter of
this is how the big
growth
money
is
plays.
in refresh of devices.
This ain't no
Quite
prop firm
clearly
trader.
being aggressive based on Mark's reporting to get more out there into the world at various price points and continue getting people to have Apple products in their hands so that when AI does come, they'll be able to use it somehow. But on the CEO question, ask him who. I'd love to build a short list.
Apple down this morning.
On the eToro, is it $5 a tick per contract?
From Walter Piecyk
Or
this week.
€5?
Highlights how much Apple's
Or what
been
is it?
behind by the dynamism that we've seen in the big tech in the United States and a
'Cause
real
you're up like
sense of
100
angst
points
there
already.
about what they can do to really
Or
turn
no,
it
you're
around.
Do
no
they have to
about
get a little bit more acquisitive?
30. What am I
Do
talking
they have
about?
to make a big buy, a big purchase?
Do they have to do what Meta's doing? And
What's
maybe
a
that
what's
big
a
purchase
contract
in the form of
worth in
signing
the
bonuses
eToro?
back for their employees that were poached by Meta just in the past few weeks?
Let's build on some of these conversations. Angelo Zeno of CFRA joins us now for more. Angelo, I want to start with NVIDIA. A theme of your research over the past few months is that NVIDIA has de-risked the China story. Could you just explain to all of us how they've gone about doing just that?
Yeah, no, thanks, John. So, for the most part, you kind of look at just their most recent results, and they've essentially come out and zeroed out the potential for China when they've actually also said that there was an $8 billion opportunity in the quarter that they're missing out on because of China. So we know there's a massive opportunity and a growing opportunity out in China, but in the same respect, we know they've de-risked it because they've essentially zeroed it out. And we'd expect China at this point to represent less than 5% of sales from the company, essentially all of it coming from gaming and what have you. So that's what we mean by it being de-risked. I'd also say this, when we saw the reversal of the EDA software restrictions kind of lifted last week, I think that is also kind of increasing the sentiment out there or belief that potentially NVIDIA does have that opportunity to get back into China. You just kind of heard Ed talk about that opportunity as well in terms of a new potential chip out there. So I think when you kind of look at the dynamics right now, the it's tilting more favorably.
It depends on your investment amount. For $1,000, I pay $6.33 opening.
Angelo, there's sort of this deeper psychological question.
Oh, is that what you pay?
What Ed was outlining from Jensen.
Okay,
Huang,
that's your commission, right? The commission you pay for the trade.
In this sphere, which is like being the reserve currency, that it needs to allow a greater degree of sales into China. Do we have
Is that
any
what you're
sense
saying?
of how
Yeah.
much
So
that
there
is
it okay.
resonating in the White
Yeah.
House?
So they're $500 a contract. 2 contracts is 1,000. Commission is 633. So how much does it? How much do you make or lose per tick?
They're having face-to-face meetings.
What's
I think
profit
that's
per
definitely a
tick,
good thing, and
or
more so than I think, some of these
what is it
other
worth
countries
per
are having.
tick?
So,
Do you know what I'm saying?
I think it's resonating to an extent. I think Trump, it definitely respects Jensen, and at the end of the day, I mean, just looking at some of the recent moves that we've seen again with that software ban, and
See, short term, this is a short.
NVIDIA
I almost
chip
want to
as a
go short
bargaining
here.
their business as a bargaining chip, like we saw with Saudi Arabia. I think just
Well,
it
still,
points to the fact
stochastics
that,
are
hey,
almost
listen,
bottomed out.
it is resonating that they're not necessarily looking to block NVIDIA out across the globe, but they do want to leverage NVIDIA with these trade deals out there. So I think it's more along the lines of investors at this point being patient. But I do think ultimately you do see NVIDIA again back into China as well as other regions of the globe.
I wonder how much it's important for analysts like yourself to see Jensen Huang with the ear of the president. And who doesn't have the ear of the president? And I'm thinking of Tim Cook of Apple, who seems to be falling off the bandwagon when it comes to his favorability in the president's eyes. How much do you agree with Walter Piecyk of Lightshed, as John was talking about, this idea that this is somebody who no longer really has the creative or even diplomatic helm of Apple in a way that benefits the company?
Yeah, I mean, listen, we are a little bit worried about Apple in the sense that, historically they've been very slow to move to changes, right? I mean, and it's worked in the past in the sense of, hey, listen, we want to make sure we get this right. And we're not going to be, quick to move, and we don't necessarily need to be the first ones out there. However, in an AI-driven environment, things move really, really fast. And in that type of environment, I do think Apple needs to change to an extent. That doesn't necessarily mean that they have to, get rid of Tim Cook. I'd probably say that's something you don't want to do at this point in time. And the reason for that is because we are seeing a number of departures at the company. At the very least, right now, I think you need to hold on. You want to hold on to Tim Cook and have that solidified at least at the CEO level. So
There's really no news today either.
Made. I do think the company needs to work faster. Again, does it need to be done via some M&A, just acquiring more talent the way Meta has? I think all those should be on the table at this point in time.
No
but the
news.
most important thing right now, I think, is
Shit,
really
I missed
getting
that
the
short. I
integration
called it too.
across the App Store,
Damn
right? And they need to get that done here within the next 9 to 12 months to at least restore some credibility within the company and with some of their developers.
Do you think that's achievable with the tools and the talent they have in-house right now, Angelo? I think that's the ultimate question.
To be honest with you, I don't know.
But it doesn't. See, we're almost bottomed out. So
no, and I think the reason I say that right
this could be we could be going down and heading back right back to the VWAP. You don't know. I'm on a shorter time frame than you are.
I think Apple realizes they are behind, but it's actually a good thing that at least they've realized that and they're trying to do something.
I like
better.
the
And as long as
ES.
they can fill that void, whether
I like the
temporary
ES
or
right
what
now.
have you. That's extremely important.
See, the
I think,
ES
for
is like in a
investors at this point in time.
like I could have got in up here
As
above
always,
the
thank you,
50 a
sir.
little bit.
Angelo Zina there of CFRA on both NVIDIA and on Apple. Walter Piecyk joining us in about 20 minutes.
Yeah, seeing Tim Cook as the departure that they would need. Do they need a departure or do they need an acquisition? Or do they need something of both? And if they do need to make an acquisition, who would lead it if it wasn't Tim Cook?
Kind of missed it.
And can they close it? Or does the regulator step in and have something to say about that?
Yeah, that's sort of the brilliance of the Meta plan, right?
But there's no news, man.
Backdoor, just sort of acquire the talent and
Unless something comes out of nowhere, I don't see what's going to move it today.
Conversation up next. Steve Rasciuto of Mizuho on a shock-proof economy. Plus,
This Canadian stuff ain't. That don't matter.
Potential deal this time in the food space. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
2,600. Man, that's good. Dude, you're crushing it. There's a lot of advantages of having that big cash account. You must have got in up in here somewhere probably. Or did you catch the bigger drop? Shit, I was right on the short. Gosh darn it. Up in here, did you catch this short? Like this stuff? Yeah, you must have got in up in here. Caught that on the way down. You're flirting with your entry. But stochastics are, you know, they're starting to flatten out. Yeah, that's good. Yeah, you're right around the VWAP probably. Oh man, I missed the money trade. That's like this setup on the ES is like my A+ setup, man. This is like my best setup right here. When this happens, the transition from green to red, the cross on the EMAs, off the 20 EMA, like right here is like the money trade for me. You even had a trend line. You had a trend line. Had everything there. I don't know why I didn't get in. Still waking up, I guess. That's like a thing of beauty right there.
Once again on display.
The Saudis are open for business.
Yeah, I know, dude.
Cessation of sanctions against Syria. Another big victory for the Crown Prince.
Yeah, it's rolling back up. Look.
Headline after headline.
It's rolling back up.
On-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis
See,
you need.
stochastics are rolling back up, so that might be the bottom.
No one covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news,
challenge these fair value gaps
2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
You're okay. You're in the positive now, right?
AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of people and companies pushing the tech sector to new frontiers.
And the politics that shape global
shit,
markets.
What's going on?
I'm Caroline Hyde.
Something dropped.
And I'm Ed Ludlow in San Francisco.
Watch.
Canadian unemployment just hit. It's 8:30, so we got news playing out. So Canadian unemployment.
60 minutes away from the opening bout. 2 days of
that usually doesn't affect the U.S. market.
0.6% so far this morning. We're down by 0.5% on the Nasdaq 100. With your morning movers, let's cross over to Yahara Arnott for more. Hey, Yahara.
Hi, John. We start with Performance Foods surging on takeover speculation. It is up 6.7%. We're reporting that U.S. Foods is exploring an acquisition that would create.
You're negative? Okay, I gotta move this up then.
Distribution giant. Both companies supply
you're up here a
food to
little bit
restaurants and stores across North America. And it feels like we're hearing more and more about these deals or potential deals, which brings us back to what Delta CEO Ed Bastian had to say.
How long are you gonna hold it for?
That there is clarity to invest and that the environment is incredibly stable. So these trends speaking to that. Next up, we have Freeport.
I think we're going to start to roll back up and challenge those fair value gaps. I think you might be okay.
Mentioned this stock a lot this week because it was one that was understood.
At least on another rotation.
From President Trump's copper tariffs, but UBS just hit it with a downgrade to neutral. Analysts there expect a softening in demand and fundamentals to weigh on copper prices over the next 6 months. And we end with Levi Strauss. It is surging up 7.75%. The jeans giant hiked its full-year revenue forecast, saying that despite all the added costs from tariffs, it sees sales rising 2% this year. That's
There you
due
go.
to strong demand and a strategy
No.
that's been working.
No,
which is to
I
provide
have a
head-to-toe
corporate
denim,
sales
so
job.
not just focusing on jeans,
I
but
work
also
from home,
denim,
so I
accessories,
trade while
and
I'm working my
clothing.
leads.
John, I'd love to see you in head-to-toe denim.
Yeah, I don't know about that. What do
I'm
you
trying to
think?
get to the point where I can.
Isn't that what they call that?
Well, I got to get serious because I think they're going to eliminate my department in the next 6 months to a year. So I may be trying to do it full time. So I got to kind of get a little more serious about it and not like overtrade and blow up prop firm accounts and shit. I got to just take my best setups and just wait. And I got to get in that habit because I really think they're going to eliminate my department. I'm trying to move to another place in the company, but it's hard. They're getting rid of remote people is what's happening. Like everything went remote during COVID, and that's when I got hired. And now they're just getting rid of remote people now. They're forcing them into the office, but the closest office is like 800-900 miles away, so I won't be doing that.
I know.
They adapt and they
adjust.
There we go.
And I've been repeating it, and I feel like a little Tom Keene clone.
So,
because I keep repeating that phrase.
What I really need to do is just qualify this account, get into the live account, get some payouts, and then think about opening a cash account and copying the prop firm live with a cash account. That's what I'm trying to get to. If I can get to that before they close my department, then I'll be able to do full-time trading and not look for nothing else. Run the stream all day and just hang out with whoever wants to.
This conference looked like the Bloomberg TV green room. Everybody that you have on the air on a regular basis was here. And the general feeling was, at this point, that you should keep buying in the equity markets. The equity markets will be the ones that react the most if and when we get this inflation that's expected. But
that's a strong bounce rate off your entry.
For Tuesday is that we get a slight increase in prices, but everybody's going to be looking at what's below it. And really, July is not on the table. Take a look at what's ahead of us now. We've got 3 jobs reports. We've got 3 CPI reports before the September meeting, just one of each before the July meeting. And according to most of the people here, they're not expecting to see a whole lot of evidence that the inflation rate is going up or that jobs are going down before the September meeting. Once you get the 3 months in there, then they feel there's a chance you need to start looking at different alternatives to investing. But for right now, stay in there.
Mike, noise or signal? I think we've had this debate over the last several months, and when you talk to people about the goods economy, they say things like, we've got all this pre-tariff inventory that we've been working through. Don't take it as signal, it's noise. And what you're going to see in the months later is a pickup in prices again. Do you lend much weight to that theory, Mike?
Well, the theory makes a lot of sense, and it may come true. The biggest issue, John, is that the president keeps putting off the tariffs, giving companies a chance to continue to hold on to those inventories or restock them a little bit. The reports we've had, of course, from ports of Los Angeles and people like that is that we're seeing far fewer imports. And if that's the case, it will start to show up. And when the tariffs go on, then it should start to show up in a much bigger way. In the May CPI report, we saw washing machine prices go up because the president raised tariffs on steel. Once tariffs go in for other products, then Americans are going to see some higher prices, whether companies can absorb a lot of it or not.
Mike, thank you. Just one final question. Why is it always the Grand Tetons? Why is it always Jackson?
You know, I have a theory about that now. We talked to somebody who's on the town council here, and they pointed out that Jackson is in Teton County. Teton County is the wealthiest county in the United States. There's an awful lot of billionaires who live here. And
see, I don't know if this, I don't know.
Manage their money.
I don't know if we bounce around here.
That's a decent explanation. It's not the fishing.
For a while, or I don't know what direction we're going.
That actually would make more sense.
I missed my short.
With that, with all due respect, Mike, is that this has been the case since the 1970s. They've been going to Jackson Hole for a long time. So the fact that this is now the hub of economic theory, it's bears elk and economists. And I do wonder if it's partly because there is a proclivity of academics to go hiking I actually think that that's what it is. And so you might as well go somewhere that's beautiful and rugged, and you can experience the great
Originally
outdoors.
it was Volker and fly fishing, wasn't it?
Well,
Isn't that what it was about?
it's fly
That's my
fishing,
fly
it's
fishing.
Camp
You like that?
Kotak,
That's
it's like
yours.
baseball or
Nice.
cricket.
Okay. Anyway, Steve Ricciuto of Mizuho writes in the following: the lack of systemic risk in the economy should ensure the economy will remain as impervious.
I
to
don't
shock.
doubt it.
Steve joins us now for more. Steve, good morning. It's good to see you.
I'd be getting out on that pop, though. I'd be pulling up in behind it just in case. Because I think this is going to roll over short term.
Well, as I
I'm thinking
there's
about
no
getting in
systemic risk,
short
there's no
right
asset
now.
liability mismatches, and there's no asset price bubbles. So typically systemic risk occurs when there's an asset price bubble.
I don't know. I'm going to
that
wait.
is
I don't like
funded
trading
by an
pre-market.
asset
I've been
liability
burned
mismatch,
so
either
many
you borrow
times
short
trading
or invested
pre-market.
long. And the rising asset price bubble, eventually a curve inversion changes the economics, the bubble bursts, capital's destroyed. And when capital's destroyed, liquidity just sucks out of the economy. In an environment where assets and liabilities are matched and there's no asset price bubble, a curve inversion had no impact. And the economy, because balance sheets, when you go down the chain through non-financial corporates, households, banks, shadow banks, because the balance sheets are strong, everyone's deleveraging, everyone has very, very exceptionally low debt servicing costs and relatively long duration. You're in an environment where nobody has rollover risk, nobody feels the impact of anything that happens from the interest rate environment, and therefore you don't have the same kind of credit-related issues that have typically popped up and caused a problem.
Is this a shock-proof economy or a shock-proof market?
Oh, no, it's a shock-proof economy because corporations are in this position as well. Non-financial corporations' debt service burdens go back to 1960 levels. And they've been deleveraging since the financial crisis. Even though we have record corporate issuance, the amount of corporate debt outstanding is actually continuing to go down because we refinance less than we're actually maturing off. Corporations in this country are cash rich. And we see that in terms of their cash positions, whether it's the Mag 7 or even when you go down the chain of to smaller and smaller companies, you see this buildup of cash that has taken place. It's one of the reasons why there's an excess supply of savings in the economy that's helping to dampen long-term interest rates.
Okay, so this is a reason why the economy hasn't tanked and why you haven't seen any kind of real deterioration in equity valuations. But can you see ongoing strength in the face of potential, I don't want to say shock, but changes?
Ooh, I think your long is starting to build. I think this is consolidation to go long.
Again,
You know what I'm saying?
The ability for companies in this very solid financial position to adjust
Yep, I think this
their
is the
businesses.
consolidation to go
Gets
long.
back to your Tom Keene quote. You wind up in an environment where basically you have the ability to adjust quicker than people think. And this is really what sets the U.S. economy largely apart because we are the largest, most leveraged nation in the world. So you have to understand credit to understand how the economy functions. And in an environment where credit quality is excellent, you see that in spreads, you're seeing an environment in which there's really no issue. People can get the funding they need to morph their businesses, or they just use it out of internal earnings.
One additional task now for economists is to navigate policy coming from this White House and really understand what the strategy is, if there is one. You've pushed back against the people that have suggested there isn't one. You believe there is.
Yeah.
So let's get into that. What is the strategy?
Well, I think you have to understand that the strategy is on three-dimensional. There's geopolitical, there's socioeconomic, and macroeconomic. And we in our business tend to just think in the macroeconomic plane. But you look at things like what Trump is doing, like what he just did with Brazil, what he's doing with China. Those are geopolitical issues. Then you look at Mexico, and it's largely a socioeconomic issue. So you've got to take apart some of these things that seem irrational from a macroeconomic standpoint and then look at the macroeconomic piece of it and saying, well, what he's doing so far is basically attempting to create a level playing field, which corporate America kind of likes, number one. Number two, he really keeps on, as we indicated with Mike McKee, keeps on pushing out the dates of these tariffs, and people are beginning to recognize it is a negotiating trick on his side. So you begin to back away from the paranoia that comes out of it, and you have to ask yourself a question. Does Donald Trump really want to destroy the economy going into the midterm elections? The answer is no. I think Donald Trump wants to try to expand his polarity in the midterm elections to do what he really wants to do, which is drain the swamp, which means he needs a bigger majority in Congress to change some of the laws.
All right,
that
I got to
are
do.
keeping us
Man,
with
I think
structural
this is
deficit of
about
$2
to go
trillion.
long.
Is that a recipe that comes with higher yields or lower yields, higher rates or lower rates?
I think the risk is it comes with higher inflation and with it higher yields. I think the presumption that the market has had continuously that the Fed needs to cut interest rates because the economy is somehow or another weakening. This economy is capable of running a trend, and when you throw fiscal
I
stimulus
like the
on
price
it,
action
you
on
will
the
get above
ES
trend.
though
And
right
even
now.
though you could say over
The
the
NQ
long
is
term,
acting
the
goofy.
Trump tax cut and the tariffs may net out, in the 2025-2026 period in particular, the tax cut is front-loaded.
Yep.
So you wind up with the net stimulus
All right,
helping
I'm
to
gonna
lift
take-
the economy
No,
in
I'm not gonna
2026.
do it.
Given that, if the Federal Reserve does cut
All right, I
rates
need to
this
walk
year,
away
will that
before I do
lead
something.
to
All
harder
right, hey,
unexpected
I
deflation
got some,
in the
I got some
medium
stuff I
term?
gotta
What
get ready
challenges
for real
I
work.
think it'll
I'll
lead
be
to a
back.
backup in yields almost every bit as
I'll be
much
back
as
before the
they
open.
cut short-term
I'll talk to you
interest rates,
after.
as we saw happen last year. I think when you cut interest rates when you don't need to cut interest rates, it's not a good policy prescription. And they clearly made a mistake last year, and I think they're sitting here this year with, as Mike indicated, you've all indicated, that you have situations in terms of the potential of tariffs coming down the pipeline to lift prices, and you have an economy that's proving to be very, very resilient. You've got a labor market that's proving to be very resilient. What would be the benefit of cutting interest rates?
Steve, you've called the economy really well so far. Credit to you. It's good to catch up. Thank you. Thank you very much. Steve Ricciuto there of Mizuho. That's the situation in the economy, the situation in the market so far. Going into the weekend, equities just a little bit softer. The opening bell about 50 minutes away. With an update on stories elsewhere with your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. Secretary of State Marco Rubio met his Chinese counterpart on the sidelines of the ASEAN talks in Malaysia. It's the first in-person meeting between the two since President Trump returned to the White House. After the meeting, Rubio told reporters odds are high for a meeting between Presidents Trump and China's Xi Jinping. Elsewhere, Tesla is planning to expand its robo-taxi service into California and Arizona after its recent rollout in Texas. CEO Elon Musk expects the driverless cars could launch in the San Francisco Bay Area in a month or two. Tesla's also applied to operate in Phoenix, and a decision is expected by the end of this month. And Goldman Sachs is piloting its first AI software engineer. Goldman's tech chief Marco Argenti told CNBC that the bank has partnered up with AI startup Cognition for the endeavour. The company plans to start augmenting its workforce with the AI engineer that is named Devin. And that's been my brief, John.
Lizzie, thank you, and thanks for everything this week here in New York. Lizzie Burden there. Thank you very much. Up next on the programme, we'll set you up for the day ahead. Plus, Walter Piecyk of Lightshed Partners calling for disruptive change at Apple. The future of Tim Cook. Up next.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I think we're going to see inflation a little bit elevated here. Then growth is going to remain pretty strong. We're going to have positive stimulus from the fiscal bill, and it's going to be just a tough backdrop for them to cut. Eventually they will. They certainly want to, and it makes perfect sense for them to get there. It's just going to take some time. I think we're talking mid-2026.
Stephanie Roth of Wolfe Research with, I think, the call of the morning so far. I hope the president's not listening. The middle of 2026 for the first interest rate cut from this Federal Reserve.
Yeah, at the same time, isn't this kind of what he wants, the economy to hold in there, to allow him to continue with the negotiating tools? So on one hand, yes, this isn't what he wants. On the other hand, well, you know, maybe it is when it comes to the economic implications.
Counting you down to the opening bow with equity futures negative here by 0.5%. As we get to the weekend, a sneak peek of next week, Tuesday. Bank earnings kicking off with JP Morgan, Citi, Wells Fargo, plus CPI inflation data the very same morning. On Wednesday, earnings from Bank of America, Goldman, Morgan Stanley, and some PPI data. Thursday, another round of claims plus retail sales. And on Friday, going into next weekend, UMich consumer sentiment. That's all for next week. On the here and now, let's talk about tech. A management shakeup at Apple as its COO plans to step down. Our next guest thinks it should also consider replacing longtime CEO Tim Cook. Walter Piecyk of Lightshed Partners writing, Apple now needs a product-focused CEO. Not one centered on logistics. It's time for more disruptive change and not less. Walt joins us now for more. Walt, it's been too long, my friend. It's good to catch up with you. Let's just start with the core issue here. What do you think the problem is at Apple right now?
Well, they're just missing product cycles. I mean, the big one now is AI. It's one thing to pull the string on things like Apple TV, which were predicted for years and never happened, or Project Titan, a much bigger one, which was an autonomous car. I was just down in Austin. The autonomous industry down in Austin is obviously thriving. Huge opportunity, I think, missed by stopping that program. But this newest version, and frankly, autonomy is a version of AI, but AI in general, not only is a missed revenue opportunity, but if you're not a major player there and you're one of these large companies like Apple, Google, whoever, you know, that in itself can disrupt you. And they are clearly far behind. They overpromised a year ago, and that's being kind to call that overpromising. They said that they were going to have all of these AI features. None of them developed. We all use Siri. It still is not a good service. This is a real risk to the company. This is to say nothing of Tim Cook being an incredible CEO for what they needed during this iPhone era with logistics. But now you clearly need someone that can move forward on a lot of the product development. This company spends, John, $35 billion a year in R&D. It has risen as a percent of their revenue to 8% of revenue. And it was only, what, 3, 4, 5% 10, 15 years ago. $35 billion a year on new products. And we've seen the stuff like the HomePod or the Vision Pro, which I blew $4,000 on and haven't seen any app development of note on there. We need someone in there to kind of not only develop those products, but have the confidence to push them forward to commercialization.
Well, is it something that can be solved just with an acquisition? Whether that's an acquisition of a company or doing what Mark Zuckerberg's doing over at Meta and just acquiring lots and lots of very expensive talent? Why does it require the ultimate story change, which is to get rid of the leader right now?
Apple does tons of acquisitions. They're buying small companies all the time and developing multiple teams within the organization to develop products. In terms of mega acquisitions, I mean, yeah, okay, go and try buy Netflix. Go try and buy ChatGPT. The one people are talking about, Perplexity, as everyone mentions, is a wrapper, and then there's a wrapper of LLMs. It's not its own LLM, and the assumption is that this LLM or this wrapper is somehow going to be able to integrate with all of the very valuable information that Apple holds dear from their users that's private within the phone. Where we're saying, oh, the AI experience is only going to work in the iPhone because that's what everyone uses. And the assumption then is that Perplexity, not an LLM, a wrapper, is going to have the expertise like a ChatGPT to somehow integrate that data and do deep integration. I don't know whether that's true or false, but like everyone's just assuming that Perplexity is going to fix it. It's certainly going to put them in a better place in terms of the user experience, but I'm not sure that necessarily provides this deep integration that everyone expects, or just effectively disintermediates the company altogether. Because if they're just passing you through to ChatGPT and Sam Altman comes up with a better interface in working with Johnny Ives in terms of how you want to get access to your data, again, these create existential risks for the company.
So, Walter, I'm going to lean on Ed Ludlow here. Who would take over Tim Cook's role? I mean, who do you see as being a better CEO for Apple?
I mean, that's not my job. That's the board's job. And frankly, that's Tim Cook's job. The suggestion that like only Tim Cook is the CEO to run this company is crazy, right? I mean, I've been doing this for 30 years. I've covered plenty of large companies. It is the CEO's job and the board's job to develop a bench that can handle changes that are in the company. And if they don't have a succession in place today, a CEO internal at the company that can take over this company today, that in itself is a failure of the CEO of the company as well as the board. But there's, look, we can all just ask ChatGPT to come up with answers. There's plenty of answers of CEOs out there that are product focused, maybe some former Apple employees that can take over an Apple. But the suggestion that like Tim Cook is the only one that can run this company, I've never heard that before.
Walter, I've got to say, before we started, we actually were asking both ChatGPT and Siri different questions, and Siri just gave us Google results, and ChatGPT gave us very thought out questions to ask Tim Cook, acquisition targets, why they would choose not to, and it was very well thought out. So to your point, that does seem like an alternative. I just wonder what happens to Apple if they are unable to make some sort of radical change and shake things up. Does it leave the Magnificent Seven? Does it become obsolete? Is there somebody else, another company that eats its lunch?
Look, Apple, great company. It's almost like in some ways I've heard people say it's an alternative to treasuries. It's a constant bid. But I also heard 2 years ago, plenty of people say like, oh, the market can't go up if Apple doesn't go up. How can you be negative on Apple? You're negative on the market. And here we are, the market's at an all-time high. Right? We have leadership changes, which always happens, right? Everyone always, gets very upset about, oh, well, it's only 7 or 8 stocks. Those 7 or 8 stocks obviously change over time. Apple's down, markets at a high. If they don't, execute on AI, they're just going to fall further back. And they're still getting a premium multiple in the marketplace. It's a company that doesn't grow. You have very bullish analysts that come on this program and everywhere else, and they miss. And guidance misses, and they're like, well, don't worry, because revenue is going to get back to 5 or 10% in the quarter after guidance. And then we move forward a quarter, and they just pull the string and say the same thing over and over, and the company never returns to the growth that they're expecting. So if you miss AI and you can't get back to growth, at some point, investors get fed up. The multiple contracts back to where the market is, or perhaps lower, because you can't grow the company. And that is, again, the risk that this company has. When it becomes clear that we're beyond the internet era into the AI era, we have new leaders, and you effectively lose that premium in the marketplace. People used to tell me that AT&T could never trade at a premium to Verizon. Verizon was the quality company out there, and look where we are today.
Well, just a final question, just to repeat some of what Lisa said. If they're the casualty, who's the winner? Who are you thinking about? Where would you place your bets right now?
That is what is awesome about this AI world that we're about to enter, John. That I don't know. I mean, there are so many companies that are looking at, in Google search, same issue, right? I don't even use Google search anymore. I only ChatGPT all of my, all of the stuff that I'm looking at. So that's what's exciting about what new entrant can come up. That's what's great about our economy. That's what's great about a non-regulated, competitive economy. You have new competitors that can come in and change things. John, I've been doing this long enough.
Yep.
People said Motorola would never, would be the one forever. BlackBerry, we never get rid of our BlackBerries. Nokia, I'm not saying that this is the next BlackBerry, but like we are at a time when technology provides an opportunity for disruption. And when there's disruption, you have new entrants come out of nowhere with a great solution. And that's what AI, that's what's so exciting about AI and why I'm so happy to be able to cover this space for the next 10 years.
I've known you a long time, and you don't make headlines just for the sake of it. Provocative piece. Loved catching up. Well, thank you, sir. Walter Piecyk there of Lightshed Partners.
Do you think it's going to be even a phone? Do you think it could be an earpiece? Do you think it could be glasses? Do you think it's just, an implant in our brains?
I'm going to say what Walt said. I've got no idea.
Me neither.
Coming up on the program on Monday, Peter Chia of Academy Securities, Tom Becker of BlackRock, Vito Spadutto of RBC Capital Markets, and Julie Beal of Kane Anderson Rudnick from New York. Have a wonderful weekend. This was Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I never doing that again.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. With all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be, ultimately, how high do they settle at? Right now, they're at a very high level, highest in 100 years. And how long a period, both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
All right, futures pulling back from all-time highs on this Friday morning. 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, another day, another tariff. President Trump announcing a 35% levy on Canada. And as such, stocks pulling back from record highs with earnings season set to kick off in a big way next week. and a rendezvous at the White House. NVIDIA CEO Jensen Huang meeting with President Trump ahead of his trip to China. We'll see what that means for the stock.
Take a look at what it's doing right now, because we hit $4 trillion, didn't we, Katie, this week in terms of market value. It is pulling back. It closed above that valuation mark just yesterday. Jensen Huang had met with President Trump ahead of that trip to China. There's going to be a lot of readout of what the tariff strategy means for the AI semiconductor sector. Other Mag 7 stocks also lower this morning, Katie.
Yeah, certainly not helping out the S&P 500 at the benchmark level. But what is doing well this morning is crypto-related stocks surging as Bitcoin extends its record rally past $118,000. Riot Platforms, Marathon Holdings, and Coinbase all higher pre-market. It's risk on if you just look at this screen. A different story, of course, in traditional equities. That's with President Trump doubling down on his tariff threats. The president says that he's eyeing blanket tariffs on most trading partners while singling out Canada. In a Truth Social post, he threatened that 35% rate on some Canadian goods. And then you had Prime Minister Mark Carney responding on X, saying that the Canadian government will defend its workers and its businesses. Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, give us some context here, because 35% certainly sounds steep, but then you consider the USMCA exemptions, and I think that covers most Canadian exports.
Right, exactly, Katie. And that's a really important point to make here, because when we do look at the bulk of those Canadian exports, they are USMCA compliant. Data shows us it hovers somewhere around 60%. And a U.S. official does confirm to us here at Bloomberg News that those USMCA compliant goods will remain exempt from these future tariffs. So in theory, this could lessen the blow for Canada moving forward.
Hey, Laudia. The news says futures are dropping because of the tariff news. You think we hit your target before we go down?
A relatively warmer relationship with President Trump compared to his predecessor as they try to race ahead to this August 1st deadline. The thing here, though, is that this White House has a range of concessions that they are looking for.
If it pops at the open, man, I think I'd follow it up. I think I'd follow it. Not let it come back on you, because like it'll reverse at 9:50, 10 o'clock Eastern New York time.
Negotiations basically went off the rails because of the White House's dismay that Canada was set to collect revenue from its digital services tax, and ultimately Canada had to abandon those plans just to get the talks back on track. Katie and Shanali, also important to remember here, of course, the sector-specific tariffs with the news this week of that 50% tariff coming on copper on August 1st. That's going to hit Canada particularly hard. They're one of the top exporters of copper to the United States, which only complicates these negotiations further.
When we talk to investors on the set every day, they say they're assuming a tariff rate in the mid-teens level. And then you had the president telling NBC that we're just going to say all of the remaining countries are going to pay, whether it's 20% or 15%. 20% is higher than what a lot of investors are expecting. What are the chances they stay that high?
Right. So that's sort of the big question here. This is the first that we really have heard President Trump threaten a higher global baseline tariff. Our understanding up to this point is really that it was going to be at 10%. And our analysts at Bloomberg Economics say that as of now, the average U.S. tariff rate is already up 10.9 percentage points from when President Trump took office. It hovers around 13.3%. Brazil, look at the European Union potentially as we wait for some sort of updated tariff rate there, as President Trump does reiterate that he's going to be sending the EU a letter in perhaps today, the coming days. He previously said earlier this week we really are looking at President Trump doubling down on his broader tariff plans.
Tyler, we thank you so much for joining us this morning. That is Bloomberg's Tyler Kendall, all over every move in Washington. Now, one company shrugging off the effect of President Trump's tariffs, surprisingly, for now, is Levi. Shares are rising on a positive earnings report. Levi CFO saying, quote, given our strong first half and continued momentum across the business, and despite higher tariffs, we are raising our full-year revenue and EPS expectations. For more, we are joined by Bloomberg retail reporter Lily Meyer. Why is Levi able to weather the storm with the tariffs, especially given that you would expect input costs to go up so much? Is the consumer holding up just that strong?
Hey, Luther, how you doing?
Strong revenue is really helping it.
Where'd you get the up and down volume indicator? Oh, this here?
Estimates, they release their guidance, and
Are you
sort of
talking about the one at the
their
bottom? Hey
strategy,
man,
their
I really
DTC
appreciate
strategy,
this
and
subscribe.
in-app product is really driving their
And
strong performance.
Yeah, it's really interesting because heading
The
into
subscribe
yesterday's
with Prime
close on a
deal.
total
It's I
return
appreciate
basis,
that, dude.
the stock was
Are you
already
talking
up
about the one at the very bottom?
16% year to date,
Yeah.
of course, having
So
another,
that's
good day in the
yeah, this is
pre-market right now.
Ninja
We'll see if that
Trader.
holds through the actual cash flow.
Everything
So give
else
us
is
some
part of my
context here. What is
strategy
setting
that I
Levi
programmed.
Strauss apart when you think about some of its peers and
It's
the similar
it's in my
issues that you're dealing
strategy,
with as well?
but
So Levi's was a really interesting stock to watch right now.
but
Because
there's an
they were one of the
indicator.
first retail
There's a volume
companies to report
indicator.
right after President Trump announced
Now
his
I
resolution
have
via tariffs, and in their first report,
yeah,
they
no
didn't
problem.
include the
I
effect of
have
tariffs. So this is the first time we're really
do you have the
seeing
lifetime
how they can navigate
the
tariffs.
lifetime
They have a
license from
relatively
Ninja
new
Trader?
CEO, Michelle Goss, who's led them in
Yeah,
this
it's
DTC
mine is
strategy. So they're
custom
prioritizing selling on their
because
own
I
platforms,
everything
which
you
they've seen a lot
see
of
is
success
part
with.
of
They're
a
also branching
program
out
strategy.
in
I'm
areas
working
like
the bugs
talk and
out so
dresses,
that
and
people
they've seen a
can
lot of success
subscribe.
there
I'm trying to
as
get
well.
it through licensing,
Lily Meyer
and I'm
with
having
Bloomberg
trouble with the
from Bloomberg
programmers
News on the
finishing it.
retail industry. And
There's
later
bugs
today,
in it
I
right
have
now.
an interview with Levi's
Eventually, I'm gonna
CEO
have. I'm trying to get it through
Peter
licensing so people can subscribe
Earnings
if they want to
season
use it.
officially kicks
But
off next week with big banks and Netflix leading the charge
I
of
think the
getting my spreadsheets
buy and sell.
ready
Which
today.
one?
Joining
There's
us
one
now with more,
that's
Bloomberg
close to
equities
it.
reporter Alex Semenova, starting with the banks.
Do you
We
have the
start
lifetime
Tuesday, of
license for
course, with
Ninja
JP
Trader,
Morgan
or are
and the
you
big,
just
more Main Street focused banks.
are you
then
like?
followed by
Did you
Goldman
get the
and
free
Morgan
one
Stanley.
and then
Freddie
doing
Mac
like a
is
prop
expected to do
firm
really
data?
well. But is that going to almost mask what we might see from the rest of
I'm looking
earnings
through
season? If the banks
because
do
you get
well,
more
the assumption would
indicators
be that
if
the rest of
I
corporate
believe
America is
so.
also
You're
doing
okay.
well.
So you might to have something that looks similar. You may have to the volume up and down. That's similar to the one I have. So if you look in your indicators, but you might need the lifetime license.
In equities, Goldman Sachs is set to
Yeah,
lead
try
with
here.
$1.7
So go to
billion
indicators and then look for volume up and down. And I think that's the one that's close to this. I think I had them program it based off that one, if you know what I'm saying. So this here is your indicator.
One of the tailwinds that
And then just scroll down and see if they have it on the free version.
Worth of capital. Investors will be listening to guidance from corporate
Volume up,
executives,
down.
of course, on how they plan to allocate that capital.
Let me know if you can find it.
Going into this earnings season, a lot of equity strategists have been saying go long financials. It's a segment that's been doing
Lottie
really
off
well.
is
The
calling
S&P
us to go
500
long
sector up 9%
at the
this year.
open.
And the regionals also
Opens
crushing
22
it.
minutes
I'm
away.
gonna
His
ask a really bigger
target,
question,
by
too,
the way,
about
on the
big tech,
NQ,
though.
his
Can
target
the
is
rest
at
of earnings season
2300.
go
I marked
well
it
in
up
terms
here.
of sentiment if we don't have big tech
So
really show up
he's
here?
thinking that we
Netflix
tapped
faces off
2300 on
They
the
have been such a bright
NQ at
spot
the
in
open.
this market. It feels like they're firing on all cylinders here.
They are, Katie. Of course, Netflix is up 40% year to date. It's up some.
You found it? Oh, okay,
50%
good.
its lows
It
back
should
in
be
April.
pretty
So
similar to the one you
valuation
see
is
on my
very much a
screen.
concern seen
Because I
for
think I had that
Netflix.
added
Downgraded
based
the
off
stock,
that
specifically
code.
citing valuation, saying that they
So,
have really high
so that
expectations
like
baked
the
into
idea
business.
with the
What
strategy
expectations
is
for
that
now
you have
is that
everything
they
in
rolled
one, and
over
I
on
have
Bloomberg
stuff in
Intelligence
here
LLC. The company is in
that you
for
can't
a
get
big
anywhere. So I've
investment
kind of
second
combined
year.
it all
They're
in one
expecting
place, so
solid
you only
revenue gains,
need
but
one
during a
thing.
time that has
You
been
enter.
seasonally weak for Netflix,
You see,
we've
you
seen
enter the
a 50%
values
increase in
for
guidance and a
the values
23%
here
increase
based off in what
operating margin. So
instrument
they're
you're on,
expected to do quite
and
well.
that's how it'll
We'll see
work
if they can
once I
deliver. The
finally
stock
get
is up
there. It's just
40% year to date, which is
I don't know if you've ever dealt with
You guys
programmers, but all of them say they can do anything, and then you get down to it, and it's not necessarily that
intelligence
way.
tells me that their content slate is really good.
We'll have to
so
tune in.
yeah, I would trust them with my life.
Rami Malek. A lot of new Rami Malek movies and shows, I've got to say.
Are you working the NQ today or ES, or what are you working today?
Let's talk about airlines because we got Delta yesterday, really knocked it out of the park. What stuck out to me was that you actually had United outperform Delta yesterday. Stakes,
Yeah.
it seems like have been
ES?
really raised
Okay,
just in
cool.
the past 24
Here, I
hours
got
when
the
it comes to
ES
next
here.
week's
If you
airline
want to check it
It's
out.
interesting though, Katie, even though United Airlines outperformed yesterday, they're actually expected to report second quarter earnings that could soften on
This
slower
is where we're
revenue
at on the
growth, and that
ES.
could be offset though by lower fuel prices blunting the impact of that. But overall, the theme of this earnings season is that the
Complaining to anyway? What do you mean?
Companies are likely to beat on that. Obviously, Delta is an example of that, with the CEO saying that consumers are shrugging off tariff headlines, that they're kind of desensitized to them, and also
What prop
President
firm
Donald
are
Trump's
you
tax
using?
bill is expected to boost spending for air
I was using Top Step, but Top Step stopped supporting NinjaTrader, and I couldn't. Oh shoot! Here we go. We got news that came out.
It was lower than what they were looking at in January, but they gave it, and that was enough. So
That was a crazy candle. Let me check our news.
As always, let's quickly check on these markets right now. We did it yesterday.
Take Profit. Okay, I've heard of them.
For the S&P 500.
I switched back to Lilu because they had a really good deal on their weekly.
Those trade fears re-entered.
So I'm working a Lilu account. So if I qualify this, all I have to do is go 10 days in a row at 200, and I can take a payment every Saturday. And I kind of like that. So that's right now. I've got $1,018. I need to get to 53. If I get to 53, this one will be qualified. Yeah, so I need $2,000 more.
What's going on with the company next?
Need $2,000 more. I don't see any news that made that candle. All right, I don't know what that candle was about. That was kind of crazy. Maybe it was a liquidation candle. We're in consolidation now, I think. We're in consolidation right here. And Ladioff's calling the long up through the VWAP. Hey, if you got any more questions on the chart, just ask them, and I'll explain the chart as we go. Because it's kind of all tuned in where all these things line up together for the A+ setup, and I'll explain it as it gets closer. Let me go back to the NQ. I'm kind of watching that right now with Ladioff. If you want to see where the ES is at, just shoot it in chat, and I'll put it back over there for a minute. But I want to see Ladioff get his target.
And important insights. What do you think the future is for inflation? Is this a new normal?
I don't trade during the open. Over here is the trade box. So the trade box reads the chart, and it'll be red or green. Depending on these, I'll explain them as it turns on, but it doesn't even turn on till 10:15. So I'm not really hunting for an entry until about 10:15.
First and foremost, I am a capitalist.
Because the high volatility areas, that's not a good place to be for prop firms, because you'll blow an account on the chop, on the volatility. So I wait for it to level out, and I just hunt my A+. I've got an A+ and like a B setup.
Yes. Anything that trains people to understand.
So like the open range break it. Well, it's more of this is more of a reversal or direction change strategy. So you see the control EMAs. So let me show you here. Like right here, this morning was my A+ setup, and I missed it. You see right here where I drew the circle? Hold on. Right there. You see how the yellow solid and the red crossed? That's the control EMAs. Those are tuned in to the NQ based off this time frame and to work in conjunction with a forecast cloud. So you see how the forecast cloud went from green to red? That means that at that point, the volume of buying was closing down, and right at this point, there was more selling volume, basically in the delta. There was more selling volume than buying volume, so that changed. And then the EMAs crossed right when the direction changed, and your entry should have been right around the 20 EMA, roughly, if you were front running. So we try and front run the cross a little bit. So if you got in right around the 20, that was your move. Does that make sense? So right there, you got the forecast cloud blocks would have been red, control EMA changed, you're below the VWAP, and right at the 20 EMA, that would have been your full-on short. And then you would have, your ATM strategy would have took profit on the way down and got you out. And so the next one would have been here, but it wasn't very strong. Like here was your next one. EMA cross, cloud change, and then you got along. But now we're in consolidation here. So this is kind of, we're waiting for the breakout. So that's what we're waiting for. And then if you look back here, like if I was like early this morning, look at this one, how fucking beautiful that was.
$4 trillion here. A lot of questions.
I wish I just wasn't watching it this morning.
What do we know about the meeting that Jensen?
The cross was right here. Look, the cloud went from selling to green, cross, 20 EMA, boom, big move. See, this is the money move right here. You're looking for one or two of these a day, these moves. And that's the A+ setup on the forecast.
Next week
so that's what we're looking for. And it works in conjunction with stochastics. You read the stochastics for like potential direction. You want the stochastics in the same pointing in the same direction as your trade. But I'll talk more about that once we're getting close to the setup. But I'm a spectator till about 10:30 right now.
Treated in the same way.
I just want to see Ladioff is calling along, but Ladioff has a huge cash account, so he can let it run. Where you can't do that with a prop firm. You know what I'm saying?
Designed and engineered from the ground up could come at the end of the third quarter, but Nvidia's not talked about it. What Jensen Huang has been consistent on, and this relates to his meeting with the president, is super consistent that NVIDIA is an American company and it obeys American laws. So you just don't imagine that NVIDIA is going to do anything unilaterally in China without keeping this administration posted on it.
Yeah, it seems like he is going on a charm offensive in both countries. Our reporting shows that he's scheduled to meet with.
So what I've done is, you know, through a lot of back testing and research and trial and error, I've gotten it to the point where I've got at least three things that need to line up at the same time, and that's like confirmation. So the A+ is the EMA cross, the forecast cloud change, and oversold with the stochastics pointing in the same direction as the trade is going to go.
Tim Cook has been here this week in Sun Valley, along with all of his sort of.
Yeah, well, it takes a lot of dude. I gotta be honest. It just like I've been working on this strategy for 4 years now to get it to this point. It takes time, and you just gotta like find something that makes sense. Find something, you know. You start playing around and you find something. You know what I mean? And then you find a way to dial it in so it all reads together. And then once I got it all to read together, I created the forecast box to read it for me. So, because I work I have a regular job. I have a corporate sales job. So I couldn't just study the chart all day long and work. So I created this so I could glance at it and see the condition of the chart and know if I'm close to a trade or not, without having to analyze everything. So by seeing this being grayed tells me there's no trade. We're in a timeout zone pre-market through 10:15 to where there's no trades. So if it's grayed out, it means you're not looking for a trade. If it's all if you've got everything red but the control EMAs, that means you're probably close to a direction change. And sometimes I'll try and front run the cross. You know, you get a better entry. And that's the idea. So that you can work from home and still not, you know, you can still keep an eye on it without having to like analyze every second of it. But that's the dream. The dream is for me to be able to sit here on the mic all day and let people, if they want to watch all day, cool. But if they want to subscribe and have what's on my screen and have it for themselves at home, have it available for a subscription, and then I can help them set it up and show them how to use it on the stream. That's like my goal in life.
Or a Gemini, or a Grok, or a Claude for Anthropic.
That's like that's living the American dream if I can make that happen. But for now, I got sales calls.
For the Aladdin Company Conference, and there you wrote about Scott Bessent's address to the crowd. Really interesting to hear about the Treasury Secretary comparing the two most unlikely people to be compared, George Soros and Donald Trump. The idea of patience is pretty interesting here because a lot of Wall Street has relied on Bessent to kind of preach patience. And it looks like from your reporting that that is a very similar relationship that he is building with the tech community too.
So what sources told me was this was a moderated Q&A late on Wednesday morning, and he was asked, compare your current boss, Donald Trump, to your former boss, George Soros. Bessent did 2 stints at Soros Management, right? He said they're very similar in their
So yeah, it's trial and error back testing,
but they are both impatient.
blowing up tons of prop firm accounts, because you got to kind of have a little skin in the game.
He also talked a little bit about his outlook for rates, which is quite interesting. He said we basically see 2.
But I've got it pretty dialed in right now. Now I'm working on my psychology.
Because of the strength of the economy.
Like not over trading, not saying fuck it, not holding trades too long, adding to losers, all that bullshit that has nothing to do with the chart and reading and understanding, you know, your strategy. That's like the level beyond that. That's like the final frontier to, you know, you got to be able to keep that under control. That's really the hardest part, believe it or not.
That Elon Musk could get votes on Mars in the future, a reference, of course, to Elon's ambitions for humankind on a different planet. But you're right. This was about him balancing his persona.
I'll bounce
with the
back to the
investor base. He's been a long-running attendee at Allen & Co. And his loyalty to the president. He was very praising of the president's ability to do a deal.
That's where we're at in the ES. Look, see, we crossed here. You see how it's bouncing here? That's consolidation. This is chop. You can't trade it when it's acting like this. You got to wait for the clean. You see how clean this is, the transition, how clean that is? That's the trade.
And you can see those
the trade's right here.
Unless something amazing happens, it doesn't look like
we're
going to get
the trade would be here, but then once you get into this nonsense, you can't trade that.
It brings us into
you know,
the red for the weekend.
the ES and NQ really follow each other too.
About 2 weeks of gains.
That's why I watch them both. I actually stumbled into coding a similar style signal indicator in their Pine editor. I don't like over analyzing every indicator. Oh yeah, right, the cross and the cloud direction. Yep. Yep.
Will be a win. That conversation coming up.
Yep. So I've kind of gotten to the point where I just read it. I don't analyze it anymore. But you see here, look at here. This, you had the downward. You had the downward move on the stochastics, and then the upward move. See, stochastics were moving up. So if you've got this and you got the stochastics pointing down, then that's like the A+. It's a lot of brain power to try and analyze it. What's the red line? This one?
On Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Which one? Okay, that's a stochastic. So this is the slower stochastic, and this is the fast. So basically what stochastics are is it's momentum. So it can give you an idea of the momentum. So like kind of think of it, you know, Wile E. Coyote, when he jumps off the cliff, when he's running and he runs off the cliff, but he keeps running forward, then he starts to go down while he's still moving forward. It's kind of like a momentum indicator, roughly. If you go on YouTube, there's tons of videos that explain it 10 different ways. Somebody will have a way of explaining it that has it make sense for you. But you see here, that means the momentum's moving up now. And you see how this is moving up? And then we're about to cross. The problem is the cloud is still red.
Each week we'll go on the road.
Yeah.
We'll look at what lies behind the
yep, you see?
Today.
See, we're moving up.
What will likely be the headlines tomorrow.
The slow is like the baseline. So when the baseline starts to move in one direction or the other, that'll probably be the trend.
Watch the all-new Wall Street Week. More than what you need.
Yeah, and yeah, then you watch the volume too, right? So now the volume, I have a volume lockout. So let me show you on the ES. The volume has to be between 9,000 per 3-bar average and 3,000. It has to be between here on a 3-bar average down here, or the box grays out and it's a no trade zone. Now the reason for that is if it's over 9,000, the volatility and chop is so bad that you'll blow your stop losses out just in the chop. You can't trade it. If it gets below 3,000, the market is so slow, any jackhole can come in with a huge order and push it in one direction or the other for no reason. You know, there's not enough volume.
Into the public markets, it's worth paying attention to. They're the ETFs, but of course, one by one, you have SPACs.
Yeah, decreasing volume. Well, it's how I do it is you have to be in a 3-bar average between this zone. You got to be in this zone in a 3-bar average, and that's the box will allow you to trade.
By about 0.8%, maybe that's the correlation underway because I don't think Bitcoin.
You got to be in that zone. If you're not inside that zone, then you can't trade because you're either going to have too much chop or you're going to have it just drifting along and big money will come in and blow it one way or the other for no reason that's unpredictable.
Up next. Don't go anywhere. This is open interest.
Yeah, absolutely. That's why I don't like pre-market trading because there's not enough volume. If I take a pre-market trade, it has to be like the perfect A1 plus setup like this with the volume that's close to my minimum. You know, because you can look down here and do the math real quick, but so I don't trade pre-market and I don't trade the open because it's outside of that range. Do you know what I mean? Right. That's because somebody gets in and pushes the market for no reason. So you could be thinking long and an institution comes in with 10 times the average volume and it'll push it down 30 points. Right. 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 Somebody can plant an iceberg in there and blow it one way or the other, one person. And then you're fucked if you're on the wrong side.
Well, David, let me just say, I think the
so it's just I've had that happen so many times that I've programmed it into the strategy not to do it. Yeah. Yep.
In the first term,
yep. I used to stay up nearly 24 hours a day, and then I finally like this is insane. I got to look for just 2 or 3 perfect spots and just stick to that, or it makes it hard. Now, if you trade overnight, you got to be able to swing trade. You got to have a big cash account, in my opinion. You got to be like Ladioff. Let me move back. Ladioff's got a huge cash account. He's been in this trade since this morning. This was his entry right here. I marked his entry. Like this big green line's his entry, but he's been holding it since back here. He went up, he went down. So you can't do that on a prop firm account. You'd blow your account 10 times. But if you got a big cash account, you know, he's holding it, hoping to break over the VWAP. Once we break over the VWAP, we should head right to 2,300.
That's a gigantic problem.
Yeah, well, that's it. You gotta be on the right side of it. You gotta have the absolute perfect setup and be in ahead of time, and then hold it all the way through. That's like if I was to load up another cash account, which I may over the summer, that's how I would trade overnight. Exactly the way Ladioff is taking his trade now. He took his trade this morning, way over here. He took his trade on the cross back here, basically. He basically took his trade right off this. But his, he didn't watch mine and do it, but he has his own stuff. He's in here, and he's saying, here he goes. You're crushing it, dude. Hey, get out, man. Oh, shit. Did you get out, Ladioff?
Moments away from the start of trading. Welcome back.
Oh, no. It's still running. Hold on.
To your Friday. I am Katie.
It's still running.
Take a look at futures. Here's
the open. You were right, dude.
When you take a look at the
Get in behind it, man.
About When you take a look at the NASDAQ, down about 0.4%. And
Dude, he
boy, I
crushed
really
it.
wanna Look at small caps right now. As Shanali noted, if these levels hold, if these losses hold,
Man, you crushed that motherfucker, man. See, that's what you can do with a big cash account. Are you out, dude? Ladioff, you there, man? I hope you're watching this.
Looking at losses on a week where we saw Nvidia reach $4 trillion in market cap for the first time, but one company can't hold up the entire market. But in any case, you do have people ringing and clapping at the opening bells at the NASDAQ, at the New York Stock Exchange on this Friday. If we take a look at the
Dude,
single stock
I hope
level,
you're not taking a dump or something. Where you at?
Actually, it's looking a little better now. We were low.
Yeah, it's his take profit.
We're actually starting.
Okay, all right.
Let's see if it holds. Remember, Nvidia closed.
His take profit is up here. This is his take profit at 2,300. Yeah, you're crushing it, man. We're watching it.
Today because, of course, as you say, one stock can't hold up the market.
Did you move your stop loss up?
Well, while Nvidia decides what to do, let's take a look at Levi's, signaling strength in the face of tariffs, saying sales growth is expected to have a bigger impact, coming out with a guide that was much better than expected, and you can see that in shares. Levi Strauss shares up.
You got to be up 15 grand right now.
As trading kicks off. This was a company that was already up about 15, 16% on a total return basis year to date, much higher than that right now. We'll continue to follow that story, but let's zoom out here because it seems like investors are.
I know. Ladioff's in France. He speaks French, so sometimes it takes him a minute, just so you know, Luther. Yeah, this is NQ. Yeah, he took his trade on the NQ. That's why I'm watching it for him, with him.
No one is worried about the.
All right, I'd be careful here.
Let's discuss with Ann Berry. She is founder of Threadneedle Ventures, joining us on set. Great to see you in person.
Happy Friday. I've got that Friday feeling, even if the market doesn't quite.
I know. Well, a lot can happen
Dude,
between now and 4
did you move your stop loss up?
But let's talk about
No,
that idea.
no, don't. Well, if you ask me, that's my opinion. I don't trade this because this is gambling on a prop firm. Okay, because you've only got so much you can move. It's a total gamble, and you have to have your whole ATM strategy to automatically take profit. Because if it doesn't take profit, it'll come back and snap your stop loss, and it'll just blow your account. So that's why I don't trade this. The only way I would trade this if I was in way before I already had profit and my stop loss was moved up to profit, and I had my stop loss in profit and I had take profit set, so that I know I was a winner going into the open, but I would be in way ahead of time. You know what I'm saying? That's the only way I would do it on a prop. That's the only way to do it, really. You can't get in during the open.
You know, it's interesting to your point. Delta
You got to take a position before the open.
Right. And so when you look at the broader earnings season, is it going to be?
Are you out, Ladioff, or are you still holding?
See some blowout effects from things like bank trading, but other companies really struggle.
Ladioff will hold all the way to Valhalla.
I think so, but I also do think that the market is looking at the tariff situation and saying we just don't believe, right, the outcomes are going to be as terrible as they were. So I think there will be some sort of barbell. I doubt we're going to see the massive, like 30% in one-day extremes we saw before. I don't think we're going to see the catastrophic drops either.
I just want to stay on Delta because I also thought that was a really interesting moment. I want to put some numbers to what you were talking about when it comes to their forecast. They see an adjusted profit of $5.25 to $6.25 per share a year. That relative
All right, so we're hoping that the VWAP turns into support.
It's just
Hold.
at all. Also interesting in Delta earnings was the fact that it was premium, it was international, that was really driving results.
I don't know, man. It's
the back of the plane.
when I first started trading, I had a big cash account, and it's easier to trade like that because you can hold through. You can hold through a cycle and get yourself out. But I got during the election, I got on the wrong side, and I actually held. You closed the trade good. How much you make? You crushed it, man.
David Kimball was on his way out as CEO.
Fucking good call, Ladioff, man.
And I held on to that stock, and I held
But,
on even when Berkshire Hathaway went in and then went out. Do you remember when that?
But I got caught in a trade, and I couldn't get out for about 3 or 4 weeks.
Products that what everyday
Well, I
consumers,
got
what
out.
affluent consumers want is a
Yeah,
destination they
I
can
got
go
out,
to where they can actually
but
feel and touch the
it was
product
so
and
bad I'd
and
get
sample
margin
and
calls
try
at the end of the
try
day,
that
and they'd want me to
sort of
trim it down a
environment. And I
little.
think
But I
also
ended up
is
getting out okay.
delivering on
And
turning
after,
around
like after I got out, I'm like,
heavily
okay,
into that. And by the way, it just
beautiful.
announced yesterday it's buying SpaceX.
So he
and
made
it's a
four
premium
and a half
retailer
percent
in the
of
United
his
Kingdom. I
of
looked
his
at actually
account.
investing in that in 2018.
He
That, to
tracks
me, is
his
complete
profits by
strategy and the
percent
sign
of
what I
his
think it is
whole
capable of
account.
doing.
Oh, man, you are making me want to talk about
So
M&A, but before
whatever,
we get
yeah,
there,
I
I
know.
wanna show
So
you
he,
another
whatever
breakout.
his,
I want to show you what's happening in the
whatever
magnificent
his
seven
amount
because
is,
you see
he made
companies going in
4.5% of
different
that, which is a
directions.
lot because he was into a trade for 50 grand, then it came back and he got out profit. So he's got a big account.
Do you see and why?
But you know, I had a big account, and after I got out of that trade, I'm like, I can't fucking do that anymore. I couldn't take it. So I started learning how. So I went to the prop firm route, and I started building my strategy around a prop firm. With the prop firm, it's kind of trained me to take profits when I have it and not keep the trade open too long.
Over and over and again. For
Yeah.
two reasons. Number one,
Well, dude, they would call me
do
at like at 6 o'clock, you know,
I am bullish
in
on
5
what
o'clock
they do
Chicago
with
time,
their
talking
ads
about,
and their
hey,
WhatsApp strategy. And
yeah,
I
I'd
do
get
say
margin
that
calls on
because
that
I
on that
invested
trade.
separately in a business called community.com, which is SMS to consumer.
That's a good way to wake up, man.
Sports, teams and brands to
He
get
was
customer
sleeping.
to consumer because we're so saturated with email. That our
So-
open rates and click rates and things like text, which are more intimate, are actually showing wins. And I do think that Meta will deliver on that through WhatsApp specifically. The other thing is enrollment.
So,
in Message Plus,
so I'm like,
lots
okay,
of
I'm
AI
gonna
tools
pull
is
back
going
from
up
that from a while and
significantly, they're just starting to
come up with
monetize deals. So
something
Meta, where I was like, oh,
where
it's
I
real,
don't have
it's
that much
expensive.
capital
I
at
now look
risk.
at it and say it's trading at
And,
roughly 16 times EBITDA. Right, I'm a proud
And then I
private
started
investor.
working
I
on
see take
the
profits happen
forecast
for
strategy
businesses without
and trying
their
to
moat,
like
without their AI
find a
capabilities,
way
without their cash flow profile
to get
those
funded
levels.
with
So
a
I look
prop
at Meta and
firm
you know what?
responsibly with very little capital. And I'm almost there.
Not for the faint of heart, not crazy.
You know,
30
I've been working on it
seconds,
for a
I have
while.
to get your opinion on what you make of the acqui-hire spree because, boy, that looks expensive.
Yeah, it does look expensive, but it's expensive everywhere. And by the way, CapEx is expensive too. So I think they have to do it. I sort of wonder whether it's going to end up going the way the banks have gone and try and hire these analysts with their private equity programs. At some point, everyone says we've got to stop.
Yeah, I know. Margin calls are real, man. When you got real money in the game, they want to know what the fuck you're doing.
And the big money is going to keep getting thrown around.
Yeah, and it's across
And they'll
industries
cut
as
your
well,
position
Sonali
down. I had a
knows
huge
well,
position,
it's
and it got
always
cut
great to
down
see you. That
2 or
is the
3
benefit
times.
of Threadneedle
But then it
Ventures.
swung back
Kick
and I
us
got
off
out.
to the open
Yeah,
bell
it swung
on
back
this
and I got
Friday
out.
morning. Let's take a look at how we're faring about
And I'm like,
7
fuck
minutes
this,
into the
man. I
session.
can't do that
And
again.
I'll be honest, it doesn't
It
look
scared
that
me
good
off.
if you take a
So
look
then
at
that's
the
when I
S&P
started
500.
working
We're
on,
down
you know,
about half
coming up with a
1% right now.
responsible way of
Only
trading and
39
analyzing
stocks
things.
are in the
It's
green
almost
right
like you
now.
got to almost
Fighting
overanalyze
bring us higher.
to
We have
prop firm
Nvidia,
trade.
That certainly helps. Amazon, Costco,
Yeah.
a little bit as well. These are your
Yeah.
biggest points contributor.
A lot of y'all,
Take a look
good
at
dude.
the
We're
downside,
coming
and
back
we
to your
have
entry,
more
man.
than
Holy
400
shit,
in
that
the
was
red,
a great
led by
call,
Apple,
dude.
Meta,
That was a
Microsoft,
great. You
Broadcom,
called the
Tesla.
pop at the
The list
open,
goes on. When you have that many big tech names falling,
and you
even
got out
just
with
by a
profit.
little bit
That's
on a
good.
percent basis, it's certainly going to hurt. And that's what we see at the sector level as well. A big, broad-based sell-off, not a single sector in the green right now. Energy is your relative best performer, still down 0.2%. You go down the list, healthcare, real estate, and materials off by more than 1% right now, Sonali. You add it all together, the index not having a great end to the week.
Yeah, we are ending very poorly today. and probably
So we say.
So coming up next, we're going to talk
Yeah.
about exactly what's happening on
Yeah,
the
no
financial
problem,
sector,
man.
particularly
All right,
in the
brother. That's pretty cool. All right, I'm glad I helped you because you were, it was flying, and a lot of the times those are liquidation candles where they're going up and liquidating everybody out for the move down. So I'm glad you got out. I'm glad you got out. All right, hey guys, I got some leads I got to work. I'm going to be off mic for a while, but all right, I'm going to take your trade down. So your trade was successful. All right. So, hey, I'm going to put the ES up for a while so Luther can watch it. If you want me to go back to the NQ, just throw something in the chat. And I'll move it back for a while. But I got some leads I got to work. I got to clean some stuff up at Real Work.
I'm Alex Rodriguez. And I'm Jason Kelly.
And I'll be back
with
the
more
box
episodes of our show.
The box will turn on. You'll see the box start to work about 10:15.
The theme of this season,
And
On the Road.
I'll try and be back on the mic around 10:30 or so. And we'll start hunting for an entry.
We're
All right,
bringing
I'll
you
talk
more
to you guys a little
behind-the-scenes
bit.
Conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Open Interest. A quick check on the wipeout underway in the stock market right now. Just about 12 minutes into the session, you can see the S&P 500 down by about 0.6%. Big tech not too far behind the NASDAQ 100, off by about 0.5%. It's the small caps that are the biggest losers right now. They were the biggest winners yesterday, relatively speaking, but currently the Russell 2000 off by about 3/4%. I don't know why I said it like that, but let's get to our top calls. It's some of the analyst action in focus this morning. And first up, Canada Goose getting upgraded over at Barclays. The analyst over there sees better margins and says that the coat maker is, quote, relatively insulated on tariff exposure, which is cute because they make coats. Next up, Freeport-McMoRan is getting downgraded over at UBS. The firm expects a softening in demand and fundamentals. And finally, Texas Instruments is getting raised to a buy over at TD Cowen. The firm says the chip maker is uniquely positioned as the industry cycle improves, but shares off slightly this morning. Shonali.
And speaking of chips, so interesting. You're seeing a turnaround in NVIDIA shares this morning. NVIDIA CEO Jensen Huang met with President Trump at the White House just yesterday. The meeting is just days before Huang leaves for China. He has been vocal about the need for U.S. companies to access the world's largest semiconductor market. Now, Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, joins us now. And it's interesting, we came in this morning with a little bit of weakness in NVIDIA shares. You are now looking at NVIDIA hitting another intraday high. This is a company that just hit $4 trillion in market value. It feels like the love won't stop. What's going on?
Well, I mean, now we await another earnings season, and I feel we are in some sort of an information vacuum when it comes to tariffs specifically, because we know tariffs are coming back. How it's going to trickle down to the likes of NVIDIA and pretty much the entire tech complex, I think we need to hear that commentary from the companies themselves. But look, when it comes to China, I mean, NVIDIA wrote down their China revenue last quarter. The guide completely takes out China revenue. But in the end, when you think about the top players when it comes to LLMs, 5 of them are here in the US, the other 3 or 4 are in China. And those are some of the heaviest spenders on CapEx.
Right.
I mean, just to put it in context, US hyperscalers are spending about $325 billion in aggregate CapEx this year. Chinese hyperscalers are spending less than $30 billion. Still, they have some of the biggest LLMs, so less than 10%. And that's where NVIDIA sees so much potential in selling to China because they will ramp up their CapEx and NVIDIA wants to participate there.
And that factors into what I understand Jensen Huang's argument to be when it comes to restricting their chip sales in China, basically saying to the administration that if you restrict us in China, that's just going to allow some of their homegrown chip makers to really rise up and sort of take some of that opportunity.
Yeah, and look, I mean, NVIDIA has been touting the sovereign opportunity. They signed a deal in Middle East. But to me, China is the biggest sovereign opportunity because they have the LLM companies. Everyone else is sort of thinking about creating their own LLM, whether it's, Middle East, India, or in Europe you have Mistral. But the biggest LLM companies outside of the US are in China. And they are the ones who are constantly training their models, who are deploying their models for all sorts of use cases like ChatGPT type of apps. And so you need the most compute over there. And that's where I think it makes a ton of sense that they want to sell even the deprecated chips to the Chinese market, so at least they can generate some revenue.
Mandeep, we thank you so very much for your time. Happy Friday to you. Of course, it's a busy week ahead. I hope you get some rest. That is Mandeep Singh from Bloomberg Intelligence. And coming up, looking forward to this conversation with you, Katie. BlackRock is launching a new ETF. That's the first of its kind. We're going to speak with Daniel Prince, BlackRock's U.S. head of iShares, next. This is Bloomberg Open Interest.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Open Interest. It's time now for ETF Friday, and this week, BlackRock launched the industry's first ETF that tracks the S&P 500 that excludes the index's top 100 stocks. The idea there being it's a way to give investors diversification for their large cap holdings. But you have Bloomberg Intelligence warning that the fund may struggle to gather assets given that it excludes what have been the world's best performing stocks. And joining us now, I'm pleased to say, is Daniel Prince. He is BlackRock's U.S. head of iShares. So that's the Bloomberg Intelligence view when it comes to this new ETF. What does BlackRock see as the use case for a product such as this?
Well, Katie, great to be with you today. And if we take a step back, over the last year, we've been really committed to building out a toolkit for investors to really navigate the sort of rise of U.S. mega cap and large cap dominance. And what we're trying to do here is really offer investors that precision to really fine tune what has become, the biggest part of an investor's portfolio, U.S. large caps. And as you mentioned, the shape of the U.S. market has really changed with the performance of the top really outperforming the rest of the S&P 500, really needing investors to take stock in how they approach building their allocations. And what our recent launch in the iShares S&P 500, where you exclude the top 100, is that toolkit to really allow you to do that.
How much is this an acknowledgement of the worry behind the concentration in the stock market? When people look around, they say, well, a lot of this is being fueled by the ETF industry, given that, BlackRock has multiple ETFs that track those very popular, biggest names. So what does it mean for market structure purposes to be able to provide that diversification if so much money is just flowing to the top 20?
That's right. I mean, you just spoke to how, mega caps are playing an outsized role in markets today. When you look at the top 20 stocks, they're about half of the S&P 500, and over the last 5 years have drove about 55% of that index returns. You also think about the reasons why that's the case, where mega cap stocks have these wide economic moats. They've seen stronger revenue growth over the last few years, really showcasing why that performance has been strong. But as you alluded to, when we think about the iShares toolkit, it's about all investors. And what we've noticed is many investors are looking for ways to diversify away from that. They're looking at their exposure in their portfolio and looking for ways to take a step away from that. Whether it's areas like divesting from tech or getting into other, more attractive fundamentals. This is part of the toolkit to help, diversify away from some of that mega cap exposure.
And Danny, I want to talk about this theme a little bit more, because I hear what you're saying about diversification, but it feels like BlackRock has really been leaning into just giving you pure play mega cap exposure. I think about some of your products, Top T, for example, that tracks the 20 largest stocks. I'm taking a look at the notes you sent over to our producers, and you actually say that the average advisor portfolio is meaningfully underweight mega caps today. And I have to say, I haven't heard that one before. So just talk about that a little bit, because if you invest in the S&P 500, for example, you're already very exposed to mega caps.
Yeah, that's right. When we took a look at the data, when we looked at asset manager models, when we dove into the analysis around large cap blend active funds, relative to the market, what we noticed is the average was underweight those mega cap names. And what we're trying to do is empower investors to take a view. And ultimately, the goal here is to be more precise within large cap. It's not one monolithic approach to investing anymore. And what we see is our recent launch of XOEF pairing neatly with our existing ETF, OEF, really allowing investors to start tackling US large cap in a more intentional way and in a more modular way, and really looking at their own portfolios. Ultimately, this comes down to tailoring precise portfolios for growth opportunities, but also balancing out the risks as well.
Really interesting. And given that you are the head of product over at iShares, I want to talk about what you would and what you wouldn't launch underneath that umbrella. We have a great big take on the Bloomberg terminal today, and it's all about the rise of leveraged single stock ETFs. They've been very, very popular with individual investors in particular. I know that BlackRock has some leveraged products, but would you go as far as launching a single stock version?
What I would say is, our mission is to really help investors invest more efficiently. We do believe in investor choice.
This is the morning chop. This is why I don't trade the mornings. I have no explanation. Everybody's piling in at one time. Everybody had their ideas and their money lined up, and it just chops around until we figure out which way we're going. But the dangerous, let me show you a dangerous part of what's happening right now. So on the ES, we're looking at the ES. This is the VWAP. You see the price is below the VWAP on the ES. If you look at the NQ, the price is above the VWAP. So I call this VWAP chop. I haven't been able to program this into my trade box yet, but this is a non-tradable condition because it'll oscillate. The VWAP pulls the price in, so pulls the price into it. So it's very volatile area. So if the ES and the NQ are on opposite sides, it'll create a chop that goes back and forth that you can't predict. Yes, it's a magnet. So if the ES is above and the NQ is below, it's like opposing magnets. It's like the oscillation of like alternating current. It'll just loop back and forth. So it's like you want a range trade, but there's no direction. Anything I do, yes, it's repelling each other. So they both have to get to one side of the VWAP and then they move together in that direction. It happens every time. You'll kill your account because your indicators won't be correct until they're both on the same side when they're on opposites. So just something to look out for. Right now, the NQ is above. The ES is barely above. Now, one other thing, and then I got to go because I got a call. You see the shaded area around the VWAP I drew? This is a no trade zone because of volatility the VWAP creates. People sit on the VWAP with orders and it'll create craziness until you confirm. A candle has to confirm outside of this shaded zone in order to pick a direction. So once we get past 10:15 and the price goes into this zone, the box will gray out as a no trade condition. Yes. You're reading 2 metronomes that go in and out of harmony. That is correct. That couldn't be more true. I love it. Okay. All right. Really, I got to go. I got some work to do, but I'll be back around 10:30 and we should be able to start considering looking for an entry. All right, guys.
A cidade estava sitiada.
Nisso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahma ta suara pangok ahma le pah manchang le ngai kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We begin with new numbers that show an alarming rise in the number of kids with a dangerous health condition. Reporter Sabrina Cupid has the details from Atlanta.
According to the Atlanta-based CDC, an estimated 1 in 3 teens and preteens ages 12 to 17 have prediabetes. That translates into an estimated 8.4 million young people. It's a condition characterized by higher than normal blood sugar levels that increases a person's risk of developing type 2 diabetes. The nation's top health agency calling this a critical warning sign for the health of America's youth.
President Trump and the First Lady head to Central Texas today, where more than 120 people were killed in catastrophic flooding a week ago. About 170 are still missing. CBS's Jason Allen is in Kerrville.
We're expecting that at some point this afternoon, he is going to talk with some of those first responders, some of those folks who were involved in those searches in the hours after the storm, as well as these days that have gone on looking for the victims, as well as talk to some of the local officials who have been behind this and been coordinating some of these search efforts.
Protesters and federal agents clashed during immigration sweeps at 2 pot farms in Camarillo, California.
Let me tell you, I'm scared, even though that I'm a citizen and everything, but still, I'm scared, really scared.
ICE agents used smoke canisters and what looked like tear gas on the demonstrators. The Customs and Border Protection Commissioner says they found 10 juveniles, 8 unaccompanied, at one of those farms. A 17-year Justice Department official is warning the agency is out for revenge. Patty Hartman, whose job included distributing news releases about January 6th criminal prosecutions, was fired Monday. She tells CBS News.
There used to be a line, used to be a very distinct separation between the White House and the Department of Justice, because one should not interfere with the work of the other. That line is very definitely gone.
CBS News has learned the State Department is about to fire more than 1,300 career diplomats and civil servants as part of the administration's plan to reorganize that department. The Southwest is baking under a record-setting heat wave. In Phoenix, there have been just 4 days in the last 5 weeks when temperatures didn't top 100 degrees. Phil Butler's been keeping a close eye on his plumbing and air conditioning crew.
We provide umbrellas and stuff for them to keep them in the shade. And of course, I'm out here, make sure everybody's okay. If I see anything that signs of dehydration, we sit them down, we break them.
It got up to 118 in Phoenix Wednesday. Predicted high for today, 108. Numbers from Wall Street. Dow down 258 in early trading. This is CBS News. Accents can get in the way when it comes to artificial intelligence.
Hi, I'm Darcy.
Derby Town Council was so proud of Darcy, its new AI assistant. Unfortunately, Darcy had never encountered the Derby accent, as local BBC radio host Becky Measures discovered.
Who do we report potholes to? Because we've got a big one outside here.
Your message was blocked by our content filter. This may be due to language.
Local politicians admit Darcy may need a tweak or two.
Darcy, you've been great. Thank you so much and have a great day.
Please wait while I process your request.
Vicky Barker, CBS News, London.
A man from East Detroit's been granted his dying wish days after 58-year-old car wash owner Daryl Thomas died of complications from Alzheimer's. His family made it rain. They dropped $5,000 along with some rose petals from a helicopter. It all floated onto mourners below who cheered as they scooped up the bills from the streets. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
And this is Bloomberg Intelligence. Welcome to Fill In Friday. I'm John Tucker with Isabel Lee as Paul plays beach blanket bingo this Friday. The S&P 500 did hit its fifth record high in 9 trading days yesterday. Right now, the major stock averages lower to end the week, and this comes after President Trump ramped up his rhetoric and made a few more threats. Earnings season starting in earnest next week. We'll preview that on today's program. We're also going to debrief Dan Flatley of Bloomberg News on the new tariff threat. Woo Jin Ho, Bloomberg Intelligence Senior Tech Analyst, he's going to be here to deliver his mid-year outlook. And even waiting for this one, how the world's going to spend $500 billion on pets. Yeah, you heard that right. But first, let's get a market reset with Bloomberg's Charlie Pill.
Right, thank you very much, John Tucker. Fill in Friday here. We've got the Dow, the S&P, NASDAQ all lower. S&P retreated from yesterday's rally. S&P right now down 26, drop there of 0.4%. This Bloomberg Business Flash brought to you by IBKR. Will the U.S. retail sales growth rate be higher than 1.5% in June of 2025? At IBKR forecast trader, the yes recently at 11%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is July 17th. Bottom line here, stocks retreating from records as President Trump intensifies his trade offensive, sending the dollar higher against most of the world's major currencies. Again, the S&P 500 index off session lows, still down 0.4%. The Dow down 245, down 0.5. NASDAQ lower right now by 0.2%. 10-year 4.40%. The 2-year 3.90%. Gold is surging $29 the ounce, up by 0.9%, while West Texas Intermediate crude 67.77 a barrel, up now by 1.8%. As for the overall market backdrop, Cameron Dawson is Chief Investment Officer at New Edge Wealth. She was a guest this morning on Bloomberg Surveillance.
There still is so much concern out there. If you look at investor sentiment, if you look at overall consolidated positioning, this is not in a market that is as ebullient as you might expect given where we are with all-time highs. So that just might mean that we have this ever pull higher in markets, even as we get this tariff headline, which seems to be catching people off guard.
Cam Dawson of New Edge on Surveillance. Tesla aiming to bring its driverless taxis to California and Arizona. According to the carmaker's plans for expansion, Tesla shares little changed right now, down less than 0.1%. Recapping, S&P down 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks very much. I'm John Tucker along with Isabel Lee. This is Bloomberg Intelligence, the Friday edition. Right now, let's take a look under the hood, some of the stocks on the move today. We're joined by Bloomberg's Christina Kino. Friday, so I got my jeans on. Dressing down today.
Yeah,
Can't see him.
That's good to hear because I'm going to talk about Levi Strauss, ticker LEVI. So those shares really ramping it up this morning. They have extended their opening gains to more than 8% now, and that's because we did get some really good results from them after the bell on Thursday. They boosted their net revenue forecast for the full year. Company now seeing revenue rising between 1% and 2% for the current fiscal year, which is above the average analyst estimate. And now additional insight from our Bloomberg Intelligence senior analyst Mary Ross Gilbert saying that the brand is really resonating with millennials and Gen Z and John Tucker, apparently. And growth is accelerating in women's and new categories. I'm sure Beyonce's endorsement also helps, right?
Because when you think Gen Z, you think about me, right?
Exactly.
Exactly. Yeah. What about Coinbase? Bitcoin is
close to 120,000, which is another record if they hit that. What's happening in Coinbase?
Yeah, Coinbase definitely benefiting from those Bitcoin gains, Isabel. So Coinbase ticker COIN. We're seeing those shares up just a little bit today, 0.6%. But I want to focus on a weekly move, right? Because
Isabel, Christine, let's first off head to the White House. President Trump on his way to visit the flood devastation in Texas. Before that, he did stop with reporters and had a few comments. Let's listen in.
Maybe at some point I'll talk to him. Right now, I'm not. They're treating President Bolsonaro very unfairly. He's a good man. You know, I know him well. I negotiated with him. He was a very tough negotiator, and I can tell you he was a very honest man, and he loved the people of Brazil. He was a very tough guy to negotiate with. I shouldn't like him because he was very tough in negotiation, but he was also very honest. And I know the honest ones, and I know the crooked ones. We're going to see. It was sent yesterday. They called. I think it was fairly well received. It's what we need. So we'll see what happens.
Russian drones hit a maternity hospital in Ukraine overnight. Your reaction?
I know. You'll be seeing things happening.
Now that you got to take that, are you planning on delivering any type of help for undocumented families that lost everything, including their children?
I think we've done very well on immigration. We were given a very bad hand by Biden. He allowed 25 million people to come in totally unchecked, unvetted. We're getting the criminals out, and we're getting them out fast. The courts have ultimately done the right thing. Amazingly, they've really done the right thing, and they understand it's really the survival of our country. It's a very important thing. We can't have like 11,888 murderers. And, you know, something that you should have that you haven't reported. As you know, 300,000 children are missing, right? 300,000 under Biden. We've already gotten back 10,000 of those children, and we have a lot more planned to come back. We're getting them back by the thousands, but 300,000, and we've, as of this morning, over 10,000 we've gotten back.
What is your advice to countries worldwide ahead of the upcoming tariff deadline?
Oh, I think just keep working hard. You know, we've been taken advantage of for many, many years by countries, both friend and foe. And frankly, the friends have been worse than the foes in many cases. So I would say just keep working. It's all going to work out. No. I think he's doing a terrible job. I think we should be, I think we should be 3 points lower interest rate. He's costing our country a lot of money. We should be number one, and we're not. And that's because of Jerome Powell. In terms of interest, we are number one in the world. Look, I'll tell you a little simple language. 1 year ago, our country was a dead country. We were going nowhere except down. We were the laughing stock all over the world. And now we're the hottest country anywhere in the world. We're number one everywhere, anywhere in the world. And that's all they're talking about is our country. 1 year ago it was a dead country. Now it's the hottest country anywhere in the world. Thank you.
All right, President Trump makes his comments to reporters at the White House just before he boarded the Marine One there. The President and the First Lady departing D.C. en route to Kerrville, Texas. They're going to visit, of course, the communities impacted by the flooding. He did earlier sign a disaster declaration for the area. I'm John Tucker. This is Bloomberg Intelligence, along with Isabel Lee.
Let's bring in Dan Flatley to maybe tell us more about that. He's Bloomberg U.S. Treasury reporter. We know President Donald Trump threatened a 35% tariff on Canadian goods and raised the prospect of increasing levies all over the world. So, Dan, the Canada letter is a big shock for the Canadian economy, according to some of our sources. And it does look like the negotiations between Trump and Canada really didn't pan out. So what is the lesson you're learning here?
Well, you know, it's interesting. We had a story last night. My colleague Ed Ludlow and I did some reporting on Treasury Secretary Scott Bessent was telling some folks at the Sun Valley conference over the last couple of days. And one of the acronyms that Bessent used was, he sort of pushed back on this idea of the taco trade. Trump always chickens out, and he called it the FAFO trade. For people who are spending a lot of time online, you might guess what the first word there means, but basically mess around and find out. And so I think what is happening here is Trump is trying to give himself some additional leverage as these talks kind of continue, and actually in some cases sort of drag on. The deadline has been extended now to August 1st, as we're learning, but there are some letters that have gone out increasing and setting tariff rates, and there are some others with Canada, China, Mexico, Japan, others, where deals are still being worked on. And so I think generally when you look at what's going on here, we're certainly going to end up at the end of the day with a higher average tariff rate across all countries that send their goods to the U.S. Where that ultimately ends up with some of these individual countries, I think, are subject to ongoing negotiations. So, there's a little bit of confusion at the moment, but certainly some the president seeking to give himself some more leverage with these talks.
And at the intersection of tariffs and the markets, Dan, the president seems to be emboldened by the fact that we had a record close for the S&P 500 yesterday.
Yeah, it's interesting. I was sort of looking at the markets before I came on and seeing a bit of a sell-off in all of the indices at the moment. But you're right. Yesterday, even as this tariff rhetoric was ramping up a bit, you did see a record close for the S&P, and obviously we've had some records or close to records or records surpassed over the last couple of weeks with some of the other indices. It's a very interesting mix, obviously. I think that there is still a presumption among folks that a combination of cuts from the Federal Reserve and some deals being cut before the end of the year give a bit of a lift to the market in a way that could go sideways if some of these negotiations don't go well. And I would mention China as being kind of one of the big negotiations that's still out there. We've climbed down from that really high tariff rate that was set in April, but we could go back there if those negotiations don't go well.
We initially thought China will feel the most pain here, but China and Canada are roughly on the same page when it comes to tariff rate. How do we make sense of this, and what does it look like for China moving forward based on what your sources are telling you?
Yeah, it's a great question. I think you can really one of the things that President Trump's advisors, including the Treasury Secretary, really try to underscore in a lot of their interviews and when they talk to folks is that they offer the president options, but ultimately it's up to the president to decide what he wants to do. And you've seen this with Brazil and President Trump's comments just there a moment ago, where he was talking about the targeting of or what he called the targeting of the former president there. So there is an economic rationale, there's a national security rationale, there's an economic security rationale to some of these tariffs. But there's also an element of personal bias, I guess, is basically the only way to describe it when it comes to what the president wants to do. So, ultimately with Canada or with Brazil or with some of these countries, the president may say, look, I understand what my advisors are telling me with regard to a certain tariff level, but from my perspective, I believe it should be 5, 10, 20 points higher because of X, Y, and Z, and it's different in each case. So, there is a theory of an operating theory for why these tariffs are being used, which we could talk about. But essentially, there is also the president's sort of desires on top of that. So you have to kind of take all that into account when you're looking at this.
Is there any indication he's going to taco or chicken out or whatever we're saying?
Yeah. I mean, that's a great point, because the more that you get away from a well thought out policy or rationale, and the more you get into the realm of
okay, guys, it looks like we're moving up for the day. Look at that, Laudia. We're almost back to your target from this morning.
Well, this could ultimately be reversed at the end of the day, and we've certainly seen some.
You went down and touched your entry and went back up to your target
yeah,
again.
I mean, I don't think it's possible to really rule out the idea of Trump backing off of some of these higher tariff policies at this point.
Crazy.
But it's also not quite correct to rule that out entirely or to rule that in. It's very.
That was your
fluid
target
situation.
from this morning.
We have around 40 seconds left, but how much opposition is there to smooth out these policies from the Democratic Party? Because if the economy doesn't roll over, and if
All right, so now we kind of
deficit,
I think we're
then
settled
we will
in and
lobby
we're kind of
against
looking for an entry.
Yeah, it's a great question. I mean, we were expecting
Let's look at the ES.
The economy to do certain things coming into this these trade negotiations.
So right now we're in a full-on long forecast block. Box is a full-on long. So when you have a full-on long and you've already made your direction, so you're looking for one of two trades. You're looking for a pullback and a continuation higher. That's our B setup. Or a rollover and direction change, which is our A plus setup. So the B setup, your entry is typically going to be close to the 20 EMA or the 50 EMA, and then push higher. And that's a shorter trade than if you had a direction change. So that's a B setup. And you can easily overtrade yourself on the B setup, so I've been trying not to trade those as much lately, but if you look here, stochastics are way overbought. The slow is kind of creeped above the 80, and then our fast is basically pinned to the ceiling. So we're looking for a rotation down and pull the price down all the way to the 20 or the 50 EMAs. On this chart, the yellow dot dash is the 50, the orange dot dash is, the yellow dot dash is the 20, and the orange dot dash is the 50. So we're waiting for the stochastics to pull down under the 20, pull that price down into this zone, and then roll back up, and then that would be a long for a continuation. Now, if we roll over, obviously we're looking for the EMA cross, we're looking for the cloud to close up and start to change color to a short condition in order to front run the short. So we're in a total hold pattern now. This is like if you got in a trade right now, you're kind of like in an ascending knife. You're just trying to catch the knife. You can't really go long from here. You're kind of in no man's land. So this is no man's land for me. So we're on hold. We're waiting for either a pullback or a direction change.
I'm John Tucker, sitting in for Paul.
And we'll analyze it as it happens. If you got any questions, throw them in chat. I'll just leave it on the ES for now. Ladioff, if you're out there listening or if you haven't gone to bed, we're hitting your target now, by the way, Ladioff. Look at that.
Banbury-owned Capital Management joining us from
the moves.
Chicago right
Are you in? Did you get out?
Expensive, and
we're hitting your target right now, dude. Look at that.
Is E going to justify P?
You never know. It depends on how.
Did you go long again?
Are, in the estimates, we continue to see fairly conservative earnings estimates from the street, and so what has been consistent since the pandemic is that there's always consistently higher than average earnings surprises. So I think the wild card here is the continued uncertainty related to the tariffs and how that affects some of the biggest drivers of S&P earnings, those Mag 7 names, because many of them are multinational. But
yeah, I'm waiting too. Yeah, I'm waiting for the next pullback or the next direction change.
But when we think about that, it really comes down to the conservative nature of street estimates.
But you hit your target.
Shauna, how political do you
if you'd have fell asleep for an hour, you'd be at your target right now. If you were still sleeping, you'd be looking good.
They haven't been political as much.
I guess there's no way of ever knowing.
One
but
might expect it, especially when it comes to pressure on the Fed. I don't expect to see the Fed cut like everybody else does because the economic data simply suggests that even with higher rates, the economy is doing quite well.
Yeah, this was your target from this morning. We're all over it. For me, on my chart.
But the politics, I think, have less an effect this time because as it pertains to Chairman Powell, it's a known fact that he's not going to come back for another term. So he's under a lot less political pressure because he's not worried about trying to save his job.
Okay, so what replaces Powell in terms of policy adjustment?
Well, that I don't know the answer to. It's not really something that I've been focused on.
You can guess.
I could guess, but then it would be on the record and people would be able to look at this interview when I'm wrong and be like, see, you were wrong.
Well, they do that with
Rather
me and
than just
Isabel all the
throw
time.
something at yeah, I mean, that's the downside of having, receipts for what people say. But yeah, I really haven't spent a lot of time worrying about that. We're really focusing on managing client portfolios for volatility and not really worrying about, what might come after Chairman Powell. So that's like a year from now.
The consensus seems to be a change from earlier this year in terms of recession calls, that maybe not recession now, but slow down. The idea of no recession, does that mean you definitely got to buy stocks at this point?
I don't necessarily think so. I think volatility is here to stay. And so I'm focusing on ensuring that client portfolios are allocating to things to manage and dampen volatility. And that isn't stocks. But what it does do is kind of take money that would normally be allocated to fixed income and put it into things like alternatives. And that allows us to get potential upside in case I'm wrong in equities, because you can take a little more risk and higher payout opportunities.
Yeah, I know the market's strong.
It's really about managing volatility because I
The
think
market's
the
so
one thing
strong,
we
it's
know for
tough to
sure
short
is
against
that
it.
With all the uncertainty and the tariffs, the way that this administration goes about its business, it just essentially sets us up for higher volatility being part of what this market is going to be for the foreseeable future.
How do you volatility proof your portfolios? Because you're focused on that, and we're really seeing a lot of that. It seems like there's no slowing down when it comes to headlines and market gyrations. What does that look like for you?
So for us, that's using alternative investment products. And the good news is for the average investor, there's plenty of opportunity. This year alone, the vast majority of new ETF launches have been in the alternative space, whether it be creative buffers, lots and lots of creative crypto ETFs, long short. Many of our largest ETF issuers like iShares and Fidelity are launching alternative product like the Bridgewater product and the private credit product that State Street has. Fidelity just launched a managed futures product. I think that tells us that our largest asset managers are out there understanding that the demand is there for products that have low correlations to traditional equity and fixed income. And so that's how I'm looking at it. So I'm looking at products that have low correlations, and that is going to dampen volatility and help manage risk in client portfolios in a period of time where there's a lot of uncertainty and an increase in average market volatility as a result.
Can you say specifically what it is you like for your clients? Give me some specific examples.
Absolutely. So we manage a core alternative ETF model. And so some of the things that we really like right now are long short equity. So something like CBLS, which is a cloud hedged equity strategy. It's an active long short product. BTAL, which is an equity market neutral fund, which in full disclosure can be quite volatile in and of itself. But it does well when volatility is high. When you take another look at things like managed futures, so like a CTA, or I even like some of the Bitcoin type of strategies like a BEGS, which is Bitcoin and gold and silver and other precious metals, where it's more tactical. So those are the kind of things that I'm looking at, things that are really not equity or fixed income per se, and that are managing downside risk. But also with like a CBLS, that gives me the potential to benefit from good stock picking. As equities are more of a stock picker's market, we've seen active management do better than passive management.
How much of the U.S. rally is really just about tech over concentration? We have, again, the biggest stocks comprising 40% of the market. That's a new high versus growth prospects, like actual growth in the second half of the year.
I think a lot of it is driven by that. In fact, if you looked at some of the stock picks I sent over to you guys, it's heavy in the tech sector. I'm on the record for years now as being a massive NVIDIA bull. And I think that long-term trends, particularly as it relates to AI, are driving that and overcoming a lot of other negative news as it pertains to the tech sector and tariffs and any sort of export controls. So that, I think, is driving the market. If you look underneath into the individual stocks that are driving the returns of the market in this rally, it is mostly tech names. And so it is not necessarily growth that is helping this market move forward. It is really longer term trends where people are trying to take advantage by looking at the winners of something that will pay off, say, 5-6 years from now. And the growth in the US has been quite muted, but it has been stable. So that's kind of the conundrum we find ourselves in. That's the conundrum that the Fed finds itself in, is that the growth is there. It's not particularly strong. It is being driven by, concentration in certain sectors, but that concentration is actually a tailwind as a result of this AI trend, less so than just, people having FOMO.
Shana, always a pleasure. Appreciate it. Thanks for showing up today. Shana Sissel, the president and CEO of Bandrion Capital. You know what time of the year it is? It's time for the mid-year assessments for the global communications and network equipment specifically. Who better to do that than Woo Jin Ho? He's the senior technology analyst from Bloomberg Intelligence and joining us on this Friday morning from our campus in Princeton, New Jersey. All right, mid-year update. So what's the update, Woo Jin?
Well, I will tell you, look, the fundamentals are actually fairly positive. You have AI drivers driving certain names like Arista Networks and Celestica, and also the enterprise campus switching and the data center switching have upgrade drivers as well. That's going to benefit someone like a Cisco and an HPE. Now the issue is, and your prior guest was talking about tariffs and export restrictions. Tariffs actually really spooked me out. And does that throw a monkey wrench in enterprise IT spending into the second half of the year and temper the growth and earnings expectations?
So how much could tariffs and economic uncertainty really trip up the global networking sector sales in the latter half of the year? Do we have a number in mind?
Yeah, don't have a number in mind. There's a couple of things. The networking sector has actually done a very, very good job in managing and navigating tariffs, right? From a sales perspective, we really haven't seen estimate cuts as a result of it. From a gross margin perspective, we're thinking about 100 and 200 basis points, and that's already reflected into consensus expectations. What I don't know, right, but there are a lot of enterprise IT spending surveys that are out there saying that they are going to start potentially siphoning off some of their spending plans. One of the things that I will say is that enterprise networking tends to be a more mature and commoditized market. So if there's going to be a couple of areas of spending that could be curtailed, PCs obviously, but also networking would be second in line.
Hey, Woo Jin, we've been making a big deal about, well, it is a big deal that NVIDIA crossed the, $4 trillion market cap.
Yep.
Can that be sustained given what you just said? Let's talk about the multiple expansions.
Sure. So I'm not the NVIDIA analyst. I can talk from a high level in terms of what's going on in NVIDIA, as well as some of the drivers to earnings growth. If we look at some of the AI initiatives that are going on, whether it's by the hyperscale cloud guys or some of the sovereigns and these neo clouds like CoreWeaves, they're building out these 100,000 GPU type of installments. This is lasting, based on my work and my colleagues' works, this is lasting over the next couple of years. The only gaming town for high-end GPUs to train AI models is NVIDIA. So is there sales momentum as well as earnings momentum to support it? Yes, there is for NVIDIA, as well as the rest of the supply chain.
In the note you mentioned, or it was mentioned, that we aren't seeing any trade overhang risks when it comes to demand in the latter half of the year, and they aren't really reflected in consensus and in valuations. Why do you think that's the case?
Yeah, I don't know, right? I think what happened was after following the first quarter results, the companies have not yet really fully reflected the tariff impacts into their expectations, and consensus have carried that through the rest of the year. There has been very little indication after following first quarter results with regards to a pullback in demand, or more importantly, a pull forward in demand that's going to affect the second half. So, my guess is that I'm waiting for what the second quarter results are going to tell us in terms of the second half.
Woj, thanks a lot. Appreciate it. Woo Jin Ho, the senior technology analyst from Bloomberg Intelligence, joining us there from our Princeton, New Jersey campus. And lo and behold, some of the earlier declines in the major averages are starting to peter out right now. We're pairing those losses. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all very much in the red. However, we are off session lows, looking at a 19-point drop right now on the S&P. 62.61, retreating from yesterday's record, down now by 0.3%. Right now on track for a losing week for the S&P. We've got the Dow down 236, down 0.5%. NASDAQ down 9, a drop there of 0.1%. Your 10-year 4.40%, with a 2-year currently yielding 3.89%. Gold up $33 the ounce, higher by 1%, $33.57 the ounce. West Texas Intermediate crude up 2.5%, $68.21 a barrel on WTI. And look at Bitcoin, $117,000, $117,856 on Bitcoin, surging right now by 3.8%. Up next, earnings will be the focus for markets. Shana Sissel is founder and CEO of Banrion Capital Management, and she was a guest moments ago right here on Bloomberg Intelligence.
I think the wild card here is the continued uncertainty related to the tariffs and how that affects some of the biggest drivers of S&P earnings, those Mag 7 names, because many of them are multinational. But, it's hard to really tell because, we thought it would impact everybody in the previous quarter, and it really didn't. But, when we think about that, it really comes down to the conservative nature of street estimates.
Shana Sissel of Banrion interviewed right here on Bloomberg Television. Well, next week, certainly the earnings train goes express when we hear from JP Morgan Chase, Citigroup, Wells Fargo on Tuesday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. We appreciate it. And you know what? Start a conversation at any cocktail party. Just talk about real estate. Everybody gets involved.
Yes, especially rent for a renter like me. Every year, I just feel like it's increasing.
And the opportunities to buy just like keep diminishing 2-0. Let's talk real estate and other stuff right now. Bess Friedman is the CEO of Brown Harris Stevens, the real estate company. I actually want to start in Florida. I've heard all these predictions like bubble, it's blowing up. Real estate in Florida. Is it still a thing?
It's still a thing. The market in Florida has been growing. I was just mentioning about Palm Beach. I mean, the inventory is so tight there, and anything that comes on the market, people are bidding on. It seems that a lot of even New Yorkers have decided to move to Florida, and businesses, as we know, have opened up in Florida. And so I think that's going to continue. And the market is really strong there in Miami and Palm Beach, where we have offices.
And Manhattan rents, we talked about it off air. It hit a record high for the 4th time in the past 5 months. We know that summer is really the time of the year that's the hottest to move. I mean, we all know that if you move in winter, it'll be a little lower. But then where is the relief here? Like, what should the city done or the broader market? I know it's probably $1 million question.
No, I mean, that question comes up all the time because people want to be able to afford to live here, to go to work and do those things. And I think we have to have responsible legislation. I was just talking about there was legislation passed by City Council, the FAIR Act, the Fairness and Expense Rental Act. And that act has shown that rents have gone up about 15% since that was passed June 11th. Because they put the onus on brokerage fees on the landlord. And I think we have to work in a way to make sure that landlords and tenants can work together and people can make choices. And rents have been going up because the buying possibility has become unaffordable, and also rentals are now becoming unaffordable. So, I think there has to be a way for people to be able to live in New York City, pay the rent, and the challenge has become overwhelming as of late. As you just mentioned, some of the anchors said they moved to New Jersey because of it. And so we need to create more things like the City of Yes.
You wrote in the note that the surprising win by Zoran Mamdani in the mayoral primary has introduced new stress and uncertainty for the sector. How would a citywide rent freeze or expanded affordable housing mandates affect new development pipelines? I mean, and I guess investor interest in the real estate in New York?
I think the challenge is going to be that a lot of developers, it's going to be pencils down. I don't think they're going to be willing to work and stay in the city if they don't think that they can build and
You
pay
going
bills
short,
and do things.
Claudia?
It has to make economic sense for them. And so I think the challenge is going to be that a lot of people they're talking
Looks like we're
about
starting to
not
get a
staying
pullback.
in New York City because of that. So we want to be pro-business, pro-working class, pro-everything so that people can work together. And I think the concern in the real estate community is some of these policies like rent freezes would create so many challenges that landlords wouldn't be able to make improvements, get new air conditioners for tenants and do the things they need to do. And we don't want that to happen, you know? And so I don't know what the solution is, but I think we have a challenge ahead.
The New York City's elite, are they afraid of Zohran Mamdani and what's going to happen to New York City?
I mean, I think...
Are they packing their bags just in case?
I mean, I'm not a voice for the elite, but I do think there is huge concern, not just amongst the elite, but in general. I think for even working class people, there's concern because if you have things like free buses, you have to remember that teachers take the bus, lawyers take the bus, everyday people take the bus, and if they're free, there's going to be loitering, people sleeping there, it's not going to be safe. So these policies confer status on Mamdani and make him look like this great guy, but the consequences really impact the working class. So I think it's concern about safety, it's concern about many different things, not just the elite. I think the city as a whole is concerned, but he ran a great campaign. He knocked on 16,000 doors. He was on social media. He did everything right. And that's why he won the primary. And so now the race is really up in the air to see what happens. But he has incredible, speed ahead of him.
And we know that rent freezes, they're always a divisive topic. If you got an apartment that will benefit from this, you're happy. But if you're the landlord, you're not, because how do you operate? I've seen a lot of videos viral on social media of apartments just sitting still because it costs so much to renovate them, but then it costs so much to renovate them, so the landlord just chooses not to. So it's just sitting there. And we're in New York City. That's why at 30, you still have a roommate. What do you make of that? I mean, right?
It's not ideal to be at 30 and have a roommate, but it's okay if you do. Look, I think there's also this sort of negative stigma, which I wish we could stop, that landlords are bad and tenants are good. There are a lot of landlords, I know plenty of landlords that are here that are immigrants that came from other places, bought a building, they live in the building and they rent out the other units, and that's how they pay their bills and put their kids through school. So I think we have to stop demonizing landlords as the bad guy and figure out ways to sort of collaborate and have discussions. Like I mentioned the FAIR Act. Had they listened to us and had healthy discussions with us, we would have prevented, I think, something that was really irresponsible. And you're seeing the negative impacts on rentals right now. So
that's the affordability issue. Can you speak to us about what you see as the economic backdrop in all the areas in which you operate?
For us, affordability is still somewhat of a challenge. In New York City, we know it's a discretionary market, so it's a little bit different. Inventory is steady. Prices have been fairly flat. So movement has been, actually the second quarter in New York City was really solid. But this is not the rest of the country. The rest of the country has other challenges regarding affordability. Palm Beach is not the rest of the country. I can talk about markets that are more discretionary, where people have more income and can afford to do a refinance or buy a second home, whatever it is. But most people in America are not in that position. So this market, the discretionary market, has performed fairly well and has been doing well because sometimes it's an all-cash buyer and rates are not necessarily impacting them in the same way it would for other people.
If rates and prices are starting to soften slightly, but buyers are still on the sidelines, what signals do you think they're waiting for? What are you hearing from the ground?
I think that the issues continue to be rates, inventory, and prices. Prices being number one, because in the last 2 years, prices have slowly been going up. And so I think buyers feel like they've been priced out of the market. They can't afford to buy a first-time home. The prices have crept up. Rates are higher, so they can't afford to make their nut each month by buying it. And so I think that remains a big challenge and something we have to think about in this country, how to build more affordable housing and how to make it accessible to people so they can have the American dream and have something for an investment for their future. Because that's what buying your home is, an investment in your future.
Do you use Zillow to check out houses?
Yeah, I mean, I was just saying this.
That's my hobby.
Zillow is where everybody goes to look because it's an aggregator site.
Oh, it's just everybody's doing it.
Everybody's doing it.
Even Bess Friedman.
Even Bess Friedman, because if you want to find something, that's where everything is housed. And there are some brokerages that are trying to avoid that, but I don't think you can.
Bess Friedman, Chief Executive Officer at Brown Harris Stevens, the real estate firm. Looking at the markets right now, the major averages slightly lower. This is Bloomberg Intelligence.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
And of course, it's Fill-In Friday, so I'm John Tucker. Paul Sweeney's not here. Isabel Lee, she's here. Do you have a pet?
I used to growing up, but now I live alone I used to growing up, but now it's hard in New York City. You have to take them out in the morning, at noon, after work, and for some, even before bed. Do you have a pet?
Used to, but
used to. Same
I was so upset when we lost her that I can't bring myself to replace her. Well, that's a bummer. Diana Rosario Pena is our consumer staples analyst, and she's here to tell us about just how much we spend on pets. It's like a staggering figure, isn't it?
Yes, and it's going to keep growing up over the next 5 years. We expect globally that the market might reach about $500 billion by 2030.
Oh, only $500 billion.
That's it.
What in God's name are people? I mean, yeah, it's obvious dog food and stuff like that, but is there anything else I need to know about, like dressing their pets up in little crazy costumes and stuff like that?
And little boots.
Little booties.
Yes. So there's been a couple of things. Food remains the biggest expense for pet ownership. It's about 30-40% of the expenditure, but there are other things that come with owning a pet. Now people are more willing to get into discretionary, vests and shoes for their dogs, and crates and the things like that. Also, healthcare is a big thing. People are more willing to spend more on the healthcare of their pet than they used to.
Why is that? Is it because more dogs are getting sick, or is it more because of the insurance company? Like, why this trend?
Well, it's a couple of things. First of all, the humanization of pets. Now people consider them as family, so they're willing to spend a little bit more to, you know, keep their family member around. So there's a greater acceptance of that kind of attitude.
And who benefits the most from all this? What particular companies? I think, what did we used to feed our dog?
Human food, actually, when I was younger.
No, you don't feed them human food.
Yeah, maybe that's why my dog wasn't the healthiest.
Well, human grade food, I will guess. So it really depends. If you're looking at food, the big food companies, Nestle, Colgate, Mars, General Mills, they have food offerings in different price points. But on the more premium side, you have things like Freshpet, that they have the fresh frozen, which is really like human grade food that you just take it out of the fridge and you give it to your dog.
We know that
like Isabel.
Yeah, sadly, I shouldn't have said that. So we know that Americans love their pets, and everyone knows that. To your point, people are delaying having children because they have pets, or in part because they have pets and because the economy is tough. Where does the U.S. stack globally?
Yes, so we're still about 40% of the market. We're probably going to grow about 35% compared to like the 38% that we expect over the next 5 years. So we're still going to be the biggest, the most mature part of the industry. There's others that might grow faster than that. There's other regions outside of Europe and the United States. However, that size of the pie is smaller, obviously.
It's not just dogs. There was a fascinating Bloomberg profile of a guy, I think he must have been Florida, who sells designer geckos. And some of them fetch a fortune, like $5,000 for a little gecko. What's the most popular pet? Is it the dog?
It's still dogs and cats, and that is like mainly, where we focused on. Of course, there's like others like hamsters and cobras and things like that, but that doesn't.
By the way, just parenthetically, don't put the hamster near the.
We're looking at the ES.
Fish is also, I don't want to imagine.
We came back and touched the 50 EMA.
Fun. I think it's good training.
And then we continued higher. Now this candle, in order to take along, it needs, the 20 needs to support it. To go back to the highs. We have a forecast cloud that's red, which means there's more selling than buying. So this can be a little dicey here. This could roll over. So
the hindrance here, what headwinds are you
I don't know. I'm feeling pretty good about the long here, to be
see certain pockets of the market being a little bit more conflicted, particularly in the past year.
If I get picked up at the 20, I'll go long.
We did make fun of the vests, and even popular fashion brands are expanding their names into pets, but that part of the spending has been a little bit subdued, I want to say. And part of it is because the pet population has been, not growing as much as they used to, like back at the beginning of the pandemic. But another thing is obviously economic, the economic situation. People are curbing their spending. So that is like one of the first few things. In terms of premium, we still think it's going to premium food. We still continue to think that it's probably going to get to 57-60% of the food in the US, like the overall food, but the cadence is probably going to be more like 27 on rather than shorter term. We think people are going to probably get with kibbles rather than the fresh frozen part.
Diana, thank you. Diana Rosario Pena, the consumer staples analyst. How the world is going to spend $500 billion on their pets. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM and Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121.
All right, I'm long
It's presented
3ES.
by Oracle. And stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
Got one.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been in U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, I added to it,
And good
I
morning, I'm
probably
John Tucker
should
in for
not
Paul
have.
Sweeney. This is Bloomberg Intelligence. I'm here along with Isabel Lee this Friday morning. Major stock averages right now seem to be pairing some of the earlier
problem with the B
losses
setup.
as we end the trading
I'll
week.
push.
This comes after
I'm gonna
President
get in
Trump
behind
ramped
it.
up his rhetoric and made some more tariff threats. Earnings season starting in earnest next week. Investors also hoping to get a clearer picture on the impact of tariff. Coming up on today's show, we'll take a look at deal news. Performance Food said to draw some takeover interest from U.S. Foods. And also we'll head to Washington, check in with Nathan Dean, the Bloomberg Intelligence Senior Policy Analyst, on the latest on tariffs and all the political news out of the nation's capital. But first, let's get a market reset. And to do that for us, here's Charlie Pellet.
All right, thank you very much, John Tucker. Happy Friday. You mentioned performance in U.S. Foods. Right now, performance is up by 5.1%. U.S. Food trading higher by 0.2%. This on a day when the Dow, the S&P, NASDAQ are all retreating. Right now, we got the S&P down 21, a drop there of 0.3%. The S&P was at a
Damn, give me
record
a few more
yesterday at
ticks.
62.59 right now. The Dow down 258. Down 0.6%. NASDAQ lower by 27, a decline for NASDAQ of 0.1%. Bottom line here, losses on this Friday. We are on track for a losing week on the S&P. Interestingly, though, the Mag 7 index, the Bloomberg Mag 7 index, up now by 0.2%. 10-year 4.40% with a 2-year that's currently yielding 3.89%. Gold surging $38 the ounce, up 1.1%. $33.62 for spot gold. West Texas Intermediate crude surging 2.5%. $68.23 a barrel on WTI. And what a story with Bitcoin. A record today, right now at 117,860 on Bitcoin, pushing higher by 3.7%. As we have been reporting here on Bloomberg Radio, we got bank earnings big time next week. JPM, Citigroup,
Target
Wells
Bill.
Fargo among the names reporting on Tuesday. Erica,
All right, I just got one on
is an
now.
analyst at UBS.
What you're seeing in the regulatory data right now for loan growth and what you're seeing in industry data for investment banking is that June was a super solid month. In fact, we haven't quite had this start in first half loan growth in some time. And so you're going to have a pretty decent result. And you're going to talk about strong pipelines in the second half of the year.
And, of course, Bloomberg Radio is going to be all over those bank earnings, especially when we get J.P. Morgan Chase breaking on Tuesday morning. J.P. Morgan Chase down 0.6%. Citigroup right now down 0.9%. Wells Fargo, we're going to call that unchanged.
63.05.
Here, stocks lower.
Yeah, I'm at
S&P down 21,
63.06.
down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks, Charlie. Let's take a look at some of the stocks on the move today. Closer look. I'm John Tucker, along with Isabel Lee, and we're joined by Bloomberg's
But this is the B setup where you get the pullback and then off the 20 and continue higher.
Well, NVIDIA,
So
for
this is the
starters,
B
John.
setup. This
So
isn't as
all
good
the
as the A,
investors that are
but
invested in the stock definitely
you
have
gotta
a
play
good
it
day today.
tighter.
So ticker NVDA. Those shares are up.
I'm
just
up
1.7%
150 if I
at
took the
moment.
trade
So
out
pretty some
now.
of those opening gains,
Well, I'm
but
gonna let
did
it go
hit
another candle
a
or two
record
and see
intraday high on
if the
Friday.
20 supports
That
it, then
comes
we're
really a
good.
day after CEO Jensen Huang met with President
See, the
Donald
20
Trump.
EMA
According
is
to people
supporting it
familiar
right now.
with the situation, no details have emerged on the talks, but it does come auspiciously before Huang's planned trip to China. And we know that the NVIDIA CEO has called for easing U.S. technology.
No, the A plus is the reversal. So if the yellow would have crossed below the red, that's the reversal, or vice versa.
We'll see how that plays out.
You know what I mean?
Gonna be in China
So when the control EMA turns red, or when it comes back around and it turns green, that's the A plus. This is a pullback continuation in the same direction, which is the B.
Charlie Pellet mentioned earlier,
and you got to play this one tighter.
A record high 118,000. But
if I can get back green, I'm probably going to get out. I'm not going to add to it.
On the day, shares are down just over 1.5%. But on a weekly basis, it is still set for a gain of just over 7%. That is the fourth straight week in a row. Longest.
Yeah, that's an order block. This is a sell order block that just fired. So maybe we can come up and retest it and then go down.
Right, just yesterday, and analysts are saying
this is a fair value gap up here in order block. So if we can get pulled into that and reverse, that would be great. I'm going to pull this back just
and perhaps that's a little bit of what we're seeing today.
You know what they do at my local McDonald's when you pull up to the drive-up window? You order, you pay, then you go to pick it up, and the person at the pickup window says, "Oh, you got to go park over there. We'll bring it out to you."
Really?
And like 15 minutes later, they show up with your Big Mac.
It's a drive-in
I can't
park.
stand that. What's
I'm
happening
gonna let
at
it
the
get
world's
to the
biggest
50.
restaurant chain?
Yeah, the world's biggest restaurant. I prefer my McDonald's brought to me, by the way. I don't drive to get it. But anyway,
So
that's
I'm going to
just
see
me.
if the 50 and this fair value gap will hold it up.
McDonald's
And then if
ticker
we roll
MCD
over and
doing
go
well
up, I might
today.
add.
Shares up just 0.6%.
I'm still in the
Some of
positive
those
on the
opening
trade.
gains as well. But we
'Cause
are
I took
seeing
profit already.
it benefiting from an upgrade at Goldman Sachs. Analyst
Yep,
Christine
it's
Cho upgraded
rejecting
the company
the
to
fair
buy
value
from
gap.
neutral. We did see, year-to-date sales performance for just fast food operators in general. That has been under pressure because low-income consumers and middle-income consumers struggling a little bit right now. But Goldman analyst Christine Cho is saying that McDonald's ultimately has to scale. It has the marketing. It has the digital advantage to successfully navigate through this environment.
All right. Thank you very much. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Christine, thank you very much. If you drive in early enough to work, you get to see their trucks on the roadway making deliveries to restaurants. A Performance Food Group and U.S. Foods.
Oh, you see? No,
I see them all the time.
I don't come as early as you.
See, the problem now is
Anyway,
the A plus setup is going to be when the yellow crosses below the red. So that's, you got to be careful on the B, because you can, if it doesn't continue, then you might get trapped in the reversal on the wrong end.
Do we know, or is this just rumor at this point?
So we're reporting that
If I get out now, I'm positive, but I'm going to give it one more candle to see if we reject the fair value gap in the 50 and continue higher.
Pretty similar in size in terms of enterprise value. They have a lot of debt. Both.
Then
of
if we
them,
do,
so at
I'll
this
add.
point, it's early. We don't know who's hitting over who just yet. But what we know is if this deal.
So
does
we're
go
looking
through
for the
or if this deal does
stochastics
go
to
ahead,
roll
it will
back up
face a
here
lot of regulatory,
and come back and get over, sold again before the real move down.
eventually The goal is to combine the company into a company that has like $100 billion worth of revenue.
Do we think it's more about scale, margins, distribution overlap, or just really fending off Cisco?
So Cisco is actually currently the number one. The top 3-4 players.
We should point out that's Cisco with an S.
Cisco with an S. That's right. And that actually, I see those trucks more than I see the others, at least in the city. So Cisco, US Foods, Performance Food, they all have their moment. Like in the past decade or so, actually, they have each like taken top spot, and it's moved around. So there were moments where, they have had activist attack at various different points. So it's interesting that this is the moment where you see that US Food is performing better than Performance Food, despite the name. So it's going to be a very challenging deal. In 2015, when Cisco and US tried for a tie-up, that deal got struck by antitrust. So it definitely is a market where scale matters. Margin matters. You can combine regions, you can combine your fleets. So all of those things make it a very good synergetic combination.
The margins right now are like you said, the razor thin, right?
So it depends on the market that you service. Like depending on whether you're going after restaurants, is it cafes, or is it like
I should back up.
Schools?
What do these companies do? They prepare food, or they bring. Explain that.
So there are various different things that they do. It comes from they do produce, they do prepared food,
There
and
we go.
they
Roll
supply
back
to
up.
places like restaurants, hospitals, schools.
You want to be careful that
So
the
depending
20
on your
EMA
end
is not going to be
customers and
resistance.
what your products are, the margin's slightly different. Also, it means your production would be different, and it impacts costs. So I'm sure there is in these CEOs' head the dream combination of what the composition of each product or each geographic should be, and well, in this case, US Food clearly thinks that a tie-up with Performance would get them closer to that ideal business portfolio.
And regarding the why now, do you think it has something to do with softer regulatory regulations with the Trump administration as compared to the Biden?
Yeah, that's definitely one big concern. It is a very consolidated industry. So my gut feeling is either way, under whatever administration, it will be looked at by the antitrust. That said, the M&A dealmaker had been expecting 2025 since the inauguration day that this would be a much friendlier M&A market under President Trump, and Liberation Day hit, and that put a lot of things on pause. In the past month or so, we have seen people warming up to the idea of exploring deals or pulling triggers. So there is an element of a friendlier regulatory environment.
All right, Crystal. Appreciate it, Crystal C., the U.S. Deals reporter from Bloomberg News, talking about Performance Group attracting a takeover interest from U.S. Food. Again, this is a potential deal could create a distribution company with combined sales of something on the order of like $100 billion. Let's move on to our next guest. The topic from Washington, D.C., tariffs, and more tariffs. Nathan Dean is a senior policy analyst from Bloomberg Intelligence, joining us on Zoom from Washington, D.C. The threat, how big of a threat is this? Or, we've heard about Mr. Trump always chickening out. What can you ascertain at this point?
So I think what we're saying is that there's a certain uncertainty, and that uncertainty is that, again, we're facing a deadline of August 1st where we really don't know if President Trump is going to move forward with these tariff threats. First it was Liberation Day, then it was July 9th, now it's August 1st. But what we can say is, and this is what we're telling our clients, is that even though this process is going to continue to play out, a lot of it determines on the negotiations. So we're telling our clients, be very close to the news cycle, because if negotiations go well, you see further exemptions. If negotiations with other countries, for example, the European Union, we're hearing from Bloomberg News that there could potentially be some news around that. If negotiations don't go well, that's usually what brings forth these announcements for President Trump that these tariffs are going up exponentially 20, 30%. I would also just say that there's a little bit of difference, though, when it comes to Brazil and this idea of this 50% tariff on Brazil. It's not so much a policy question, it's more of a political question, because President Trump often, brings up former President Bolsonaro's, cases in Brazil for a reason for that tariff. So I would just say is the Brazil-U.S. relationship is a little bit different because of that question. But again, for most of our clients, they were preparing for July 9th. Now they have to prepare for August 1st and potentially even further beyond that.
Yeah, so now you can impose tariffs on another country or on their goods coming into this country, not just because of a deficit, but for political reasons.
Yeah, and that actually
we've crossed the Rubicon at some point.
Well, and that brings up an interesting point here, because let's talk about how President Trump is implementing this tariff. There are various different ways that presidents can implement tariffs. If you ever hear people in the news say Section 301 or Section 232, what they're talking about is an investigation by the U.S. Trade Representative or the Department of Commerce, and investigations take time. But what President Trump is using in this case is called IEPA, the International Emergency Economic Powers Act. Now, there has been court cases going against President Trump for usage of IEPA, and just amongst the analysts and chatter that we had this morning, our litigation analyst Holly Fromm isn't exactly sure that IEPA is one of those ways that President Trump could implement tariffs when you're using President Bolsonaro's, cases as a reasoning here. So, again, these court cases are going to continue to play out through the next few weeks and months. Nothing says that President Trump can't just change it from an IEEPA tariff to a Section 301 tariff, but that brings time, that brings a process, and that gives some additional time for negotiation between those two countries.
Markets are generally just presuming that Trump's new rounds of letters is status quo, and there's the August 1 big deadline. What is stopping Trump from following through?
Well, nothing. I mean, obviously, President Trump, there's lots of talk about, taco. Trump always takes chickens out. Treasury Secretary Scott Bessent was just telling individuals this week, I wouldn't exactly say that. I'm not sure I would actually buy that. Giving a warning to market participants that there potentially could be a time in which these tariffs move forward. But we will also say is that, we do not think the president wants to implement tariffs in a way that harms the U.S. consumers. For example, we saw this negotiation with Canada, the letter with Canada. USMCA goods are not impacted by that additional 10% tariff on goods from Canada. So as a result, the impact on U.S. consumers isn't going to be all that much. We've always taken the approach that, President Trump is going to try and continue these negotiations in a way that doesn't harm individual consumer spending, that you would see it like the Targets and the Home Depots and the Walmarts and so forth. For example, obviously there's a new tariff on tomatoes coming in from Mexico. That potentially could raise prices. So we do think that if you see prices change at the grocery stores and at the Walmarts and the Home Depots, that's when President Trump would ultimately say, maybe we should pull back. Maybe we shouldn't move forward with this.
Put on your lawyer hat. Give me the update. I mean, we heard from the Court of International Trade in Lower Manhattan. Where did the court proceedings, where do they stand right now, the challenges?
Well, they're continuing. And the worst thing for market participants is that courts just don't take, they don't move very quickly. Obviously, President Trump can go out on Truth Social and he can change the narrative in the tariff debate. But then you have courts that actually were going to take time. Now, the Supreme Court eventually could get this case. Our analysts think that could happen as soon as this year. But, we're talking about something later this year. We're not talking about something where, the market participants want that certainty almost instantly. So even though you have this, these court cases going in the back of your mind, we actually have to deal with what President Trump will do in the interim and what he'll do in the short term. And that's why we consistently go back to this idea that there will be uncertainty up until August 1st. You will potentially see, if negotiations aren't going well, another heightened headline risk opportunity. But then ultimately we will see, I think, more of a status quo where the markets are going to be like, okay, we understand where President Trump's going with, but again, it's not really going to shock the system.
And certainty is a key theme markets are really looking for, or just really yearning for. And a certain 25% tariff on something is better than not knowing anything at all. How do you subscribe to that school of thought that even if tariffs are on an absolute basis high, markets aren't reacting that much? In fact, you see equities really surging to record highs.
Well, I was talking to one of our technology analysts this morning, and I said, how are you thinking about these tariffs for earnings later this year? And he said, look, I don't know what to do. He just essentially said, I don't know which tariff I need to play with, so it's really hard for me to forecast. So he has to do scenario analysis. And he has to say, okay, under a 25% tariff, this company is going to be hit by this. Under a 50% tariff, this company is going to be hit in a different way. So from the analyst perspective, they really don't know what we're going to see coming from President Trump. That's where the certainty question comes in. So even if you get a question where you're faced a 50% copper tariff, for example, those copper analysts at least know what they're playing with, and so they can trade accordingly.
Nathan, always a pleasure. Nathan Dean, our senior policy analyst with Bloomberg Intelligence, joining us from the nation's capital. Quick check of the markets, still lower after yesterday's record close. S&P 500 right now down just about 30 points. This is Bloomberg Intelligence.
Target filled. Order filled. Target filled. Order filled.
All right, it's starting to work out. The long's coming back to me. There we go. Come on, let's pick it up. Let's go. So the trade idea was right. I was just a little too early. Took a little heat. Let's see if we can get out of this okay. Come on.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers, minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. A down Friday. We are on track for a losing week. The Dow, the S&P, NASDAQ, all in the red right now. Tariff concerns front and center once again, with the S&P retreating by 22 points now, 62.58. Drop there of 0.4%. The Dow down 277, down 0.6%. NASDAQ down 35, a decline of 0.2%. The Mag 7 index on a down day for the rest of the market. It is advancing by 0.1%. 10-year 4.40%. The 2-year 3.89%. Gold is now surging $42 the ounce. That's an advance of 1.3%. 33.66 the ounce. West Texas Intermediate crude up 2.8%. 68.45 a barrel. And Bitcoin now up 3.8%.
Should have taken it off
at 117,000. We are looking at a record 858 on Bitcoin. A group of Microsoft investors is pressuring the company to assess how effectively it identifies customers who misuse its artificial intelligence tools, a push that follows reports detailing the Israeli military's use of Microsoft software during its war in Gaza. Microsoft shares are up now by 0.1%. Recapping, stocks lower, down 0.4%. Your 10-year 4.40%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. I'm John Tucker. You're listening to Bloomberg Intelligence, in for Paul Sweeney today, along with Isabel Lee, who wears so many hats here at Bloomberg: radio host, a print reporter. Can I ask you what it is that you're working on?
So I cover macro markets with a focus, I guess, on ETFs, which is exciting because everything now can be ETF-fied. Literally everything. Okay, so let me tell you. Last year, I think I wrote about a story on BlackRock launching an ETF that focuses on the top 20 stocks in the US market and the top 30 stocks of the NASDAQ 100. So basically the NASDAQ 1 to 30. And then just the other day, they launched a BlackRock new X Top 100 X ETF. So it doesn't include
What
the
are the
100.
fees
I'm getting
associated with
cooked.
that, or is this like an all-out fee war when it comes to ETFs or not?
At least for BlackRock,
I didn't
think
get
it's
out.
around 20
This is
basis
fuck.
points. So the ETF is a great
That's the
lens
sin.
into the
I
market
just
because
committed
you
the
see that
sin.
You don't really launch a product unless you hear a client demanding for it. So now the trend is people are trying to find ways to slice and dice the market. First, you want all the top ones, so ultra concentrated, and now you want to get rid of the big ones. So you want just the 101 to the
I committed
500
the sin.
one. 500
Not
plus,
getting
because
out
there are
with
more
profit.
than 500 stocks in the S&P.
I told you she does it all. Isabel Lee. Focus on Munis, being brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. And that brings us to our favorite segment on this Friday. Eric Kazatsky, Senior Municipal Strategist with Bloomberg Intelligence, joining us now from our campus in Princeton, New Jersey, with the focus on munis. So, Mr. Trump's big, beautiful bill has passed. What does it mean
darn it.
for munis?
Hey, John, how are you? So you didn't get the memo. I left. I'm very sad that I'm not there anymore, but I'm on the buy side now. But no, still excited to be
Fucked
here and
up.
joining you guys to talk about munis. So
That's what happens. I
talking
could have
about
got out
the
at profit and
bill,
I
mean,
didn't. I
look,
got
I
greedy.
think from our view and from the view of many strategists for the first part of this year, it
Let's
was
see
that
if
it was
we
really
pull
going
it
to be a
back up.
non-issue for the municipal market, and we pretty much remained unscathed. Now, that being said, there are a few areas that were touched and are going to be touched by the tax bill going forward, and those are areas like healthcare with potential Medicaid cuts and higher ed, right? Higher endowment taxes for a lot of the Ivy Leagues, Harvard and Princeton among them.
Okay, correction here, because he got an upgrade apparently, hopefully in pay. Eric's now the Managing Director and Client Portfolio Manager at McKay Municipal Managers.
People move. The world is small, but at least we're still talking to Eric. So, Eric.
He's still talking
That
to
is
us.
100% true.
Yes, you're still talking to us. What areas are the highest risk? Is it mainly hospitals, with the Medicaid cuts, or higher education with increased endowment taxes? Like, what should we be looking at?
Yeah. I mean, look, the endowment tax threat was almost going to be close to 21%, right? So coming in at 8%, I think it's a much better story for a lot of these universities, and they could sort of breathe a sigh of relief. That being said, definitely more risk on the healthcare side. These cuts to Medicaid definitely can impact single-site hospitals, rural hospitals, and things like that, things that have sort of had thinner margins since the pandemic. So those are the credits that we want to be on the lookout for or avoid altogether.
You look at spreads in municipals between related securities. What, if any, where are you looking, and what, if anything, does that tell you at this point?
Yeah, I mean, look, spreads in every fixed income area are still pretty tight, right, on a relative basis. Our job is really to sort of find those pockets of, relative value that we think things have gotten abnormally wide. And, we just talked about higher education, right? So Harvard and Princeton, they typically are AAA credits that are traded very, very tight to AAA munis. And those spreads have gotten wide with a lot of headline risk, right? We still believe in the enterprise value of these, hundreds of year-old institutions, and it's a buying opportunity right now where spreads that are 2 standard
All right,
deviations
let's get
or
back
even
to
more
even.
wider than they normally are.
Broadly speaking, we're heading into what you said is the most technically positive portion of the year. And when you look at a heat map,
Yes.
July is the only month over the prior decade which has yet to record a single monthly loss. Are you expecting the same for this month?
Yeah, I mean, look, obviously we can't predict, future performance based on past technicals, but everything is sort of lining up right there.
You sound like a commercial, Eric.
It's a fair
I have to do
disclaimer.
a little bit of a disclaimer, right? If I had a crystal ball, I would say July is definitely heading in the positive direction, and we're liking where it's going. We have clarity on taxes, absent of the daily headline risk that comes with more tariff announcements. Things should be cooperative from a muni standpoint. There's a lot of cash coming back to investors, principal and income over the next 2 months, and it's being met with a steady stream of supply. So all things we want to see happening in our market right now.
All right. Eric, thanks so much. Good to see you. Eric Kazatsky, defector and managing director and client portfolio manager at McKay Municipal Managers with the latest on the muni market. Did you know they use remnants from the manufacture of denim in the U.S. currency?
No,
Yes.
really?
Well, if you hold up a bill, you'll see like little shreds. It looks like,
Okay,
from your jeans.
is that only in the U.S. or does that happen all over the world?
I don't know.
I think
know
I'm gonna
it's
be
definitely
okay.
The case
That's
with
super cool.
I think I'm gonna be
U.S.
okay.
Currency. And that brings us to a discussion about Levi Strauss with their earnings.
Fantastic.
Mary Ross Gilbert is senior equity analyst covering retail for Bloomberg. Did you know that?
I did not. I mean, I know what you're talking about, those little threads in the bills.
No, that's
Yeah,
from
but
the byproduct of manufacturing denim. They use it at the Treasury. Mary Ross Gilbert yesterday was.
Come on now.
She was
Push.
wearing. Where were
Come on,
you
go get
wearing
to Target.
yesterday?
Go to your home.
Ralph Lauren.
Ralph
Ralph
Lauren.
Go to
And
your home.
today is that
Your
Brooks
home
Brothers?
is up at
No, Gap.
6304.
Very nice.
But it's a Malbon Gap collab. So
Go to your
sold
home.
out.
It looked like the
Come
little
on.
Brooks Brothers thing, but anyway.
Be the candle.
So, Levi, what did we learn from Levi Strauss in their earnings?
So I think what we learned in the earnings report.
Control
first
the
of all,
emails
you know,
about to
very
cross. This is
optimistic
about to
view,
be the
but
long,
if
I
you really
think.
dissect it, for example, the guidance that they raised on the revenue line, they now expect full year revenue to be up 1 to 2 versus down 1 to 2. Most of it looked like a shift in their view on the currency headwind. And then the other piece was because they had a strong second quarter. So the way we look at it is there's probably upside above their guidance and consensus view, which is in that range. So, we think that the way the business has been reset, look, Dockers is out of the picture now. They got rid of some underperforming lines. They really honed in their SKU count, their stock keeping unit count, and really honed on profitable merchandise. And they've really taken their tops business. They've infused more fashion and style, and it's a growing category for them, as is non-denim bottoms. And of course, their core denim business, jeans business, which they are at the leading edge of the latest trends. And, even slim and straight are still a thing. But the biggest growth is really
Let's
coming
go.
from loose and baggy. And that actually translated with shorts too for summer. And that kind of explains why they also had a strong second quarter. And they saw it globally. So, very, very good. And across wholesale too. So that was nice to see that. But DTC, direct to consumer, really led. And that
This
was
is
up
the A
double
plus
digits.
setup,
Have you
actually.
heard John
If
skinny
the
jeans
forecast
are
cloud
out
goes
and
green and
baggy
they
is in?
cross,
If you
this
look
is
at all
the
the
A
young
plus
folks like
setup.
Gen Z, they do wear baggy.
My
probably get a
I've
little
got these
more
stretch
mileage out of
fabric.
Okay, good.
That's the point at which I find myself.
Okay, that's good. Levi's welcomes all styles. Okay, so more than half of Levi's merchandise needs for the rest of the year, according to the company, they've already been imported. But what will happen when that runs out? Have they released any plans when that happens? And with tariffs set in place by then, assuming?
Yeah, Isabel, so you brought up a key point, and that is, what is the impact of tariffs? So just to give you a little perspective, Levi's is very well diversified. They only source about 1% from China, so very little exposure there. Vietnam is probably 5 to 9%. Of course, we have news that tariff rate Trump has set, but it's not carved in stone, and there's no effective date yet. And as we got news today that Vietnam is saying, hey, we don't want a 20% tariff. We want it to be 10 to 15. Nonetheless, with Vietnam being 5 to 9%, and then Mexico's 5%, and probably that is under their Canada agreement. So chances are they're not affected. And then everywhere else, they're assuming 10%. So the unmitigated impact is only about 50 basis points for the year. But with mitigation
All right, so we're
measures already
in the
taken
full
effect,
we're in the A
that's
plus
gonna
setup as soon
reduce
as
it
that
down to
cloud
just 20
changes.
basis points. So they're one of the companies, if I look at my
It
universe
should work out
of
okay.
apparel branded retailers that are sort of the least impacted by tariffs. Unless
There we go.
things change. But we still think that the
get the
impact
trail up here.
will still not be as significant as it might be for others.
I mean, is a company like this willing to take a hit to margins before raising prices for consumers? It's like 30 seconds.
Yeah, John, they're actually strategically raising prices on some of their new innovation. And that's where they're able to sort of build it in with that new product. And I think that's working effectively.
All right, Mary, always a pleasure. I can't wait to see what you're wearing next week. Mary Ross Gilbert, a senior equity analyst covering that sounded kind of creepy, sorry. Covering retail for us here at Bloomberg Intelligence. Let me get a quote for you. Levi Strauss, after the report.
Come on, just run, damn it. Let's go.
Right now, 11.5% higher, 21.98 a share. You're listening to Bloomberg Intelligence. I'm John Tucker, along with Isabel Lee. And as we look at markets right now, on this Friday, after the record close that we saw for the S&P 500 yesterday, right now 22 points lower. That's down about 0.4%, 62.58 on the index. The Dow down 292 points. And right now the tech-heavy NASDAQ 100 is 48 points lower. You are listening to Bloomberg Radio.
All right, let's run. Come on. Let's get it. Looking good. Come on, big run. Let's get it all. I'm not going to fuck around this time. Let's get it all. Damn it, run. Run, you bitch. Fuck right off. Come on. Damn it. All right, I'm going to get in. I'm going to pull in behind it because I don't trust it. I don't trust the big smackdown. Fuck it. There we go. Now we're rolling.
Stop,
All right,
Phil.
I'm out. All right, got 700 on that. Got 700 on that. I'm out. All right, I'm out. Oh, now it's going. I was afraid though. I couldn't let it come. I couldn't be up 700 and let it come back on me. I just couldn't do it. I had to take it off the table. I took some heat on that one, but the trade was right. You know what I mean? The trade was right. It resisted the VWAP. We were on the right side of the VWAP. We took some heat, and then the trade ended up being right.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do markets all day long here at Bloomberg. We've got stocks slipping from records as President Trump intensifies his trade offensive, sending the dollar higher. Concerns about the potential inflationary impacts of tariff hikes weighing on treasuries. Right now, we have got the S&P 500 index moving lower, down 17, drop there of 0.3%. Dow Industrials down 282 now, a decline of 0.6%, while NASDAQ lower by 3 points. Little changed on the day, down less than 0.1%. The Bloomberg Mag 7 index on a down day for the rest of the market, now holding on to a gain of 0.4%. 10-year 4.40%, with the 2-year currently yielding 3.89%. Gold surging $38 the ounce, up 1.1%. West Texas Intermediate crude oil up 2.7%, 68.37 a barrel. And Bitcoin now up by 3.5% at a record 117,533 on Bitcoin. So certainly tariffs, the major story this morning. Margie Patel is Senior Portfolio Manager at Allspring Global Investments.
We had some unfair treatment, and we need some tariff adjustment is right on the mark. There's been so much volatility in when the tariffs will take effect, what they are for different countries, how that will affect U.S. industries, that I don't pay too much attention to it. What I look at is just the fundamentals of U.S. companies, which look very good in spite of the tariff volatility.
Margie Patel of Allspring Global interviewed this morning on surveillance. Tesla aiming to bring its driverless taxis to California and Arizona. This according to the carmaker's plans for expansion. Tesla shares today, they're down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. I'm Isabel Lee with the inimitable John Tucker. It's Fill-In Friday, as he says, and it's a Friday morning. You're welcome. You're listening to Bloomberg Markets, and we have a special guest today. She's the star reporter in the Cross Asset team. Her name is Vildana Heinrich, and today she wrote the big take alongside Emily Grafeo. It's called Wall Street's ETF Upstarts Are Selling Liberty, Leverage, and Risk. And it's one of the most read stories on Bloomberg Terminal right now. If you go to READ, the story is amazing. It has great pictures, and we have Vildana now with us. So Vildana, what are these ETF startups? What are leverage ETFs, and what is next for that space?
So there's a really booming space in the universe of ETFs, which we know has more than 4,000 ETFs, but there's this particular pocket of funds that's really been growing just tremendously over the past 2 or 3 years, where we're seeing single security or single stock ETFs. So they're focused on one specific security or one specific stock, but they offer leverage or inverse exposure to some of them. And they've just been such a big hit with retail investors, with some institutional investors as well. But they're seeing billions flow in. And what we're seeing is a couple of upstart firms that are just seeing tremendous success here, where, you know, they said to us, it's really difficult for us to compete with BlackRock or Vanguard in certain areas of the ETF market. But here, they've seen a lot of success where they're just putting out.
Now that trade, that could have went bad too, you know.
Is this really the product for mom and
But
pop?
the strategy had the edge, and it worked out. You know what I mean? You know, I took some heat.
Issuers
We didn't get funky and try and reverse the trade and start over trading and lose our minds, and you know, we just stayed with the trade idea, and it worked out. So if you're looking for positives and negatives, I could have got out that early with about 400 profit and not taken the heat.
potential.
So I could have took myself out at 400, which is fine, and not taken the heat all the way down, and then coming back for the extra 300.
2x ETFs we're seeing.
So if we were to
minus
analyze
30, minus
that,
40,
you know,
minus 50%, because the underlying stock was also selling off, and so that is one of the issues that is being debated in the space. But what the issuers tell us is, the prospectuses are out there. There's so much educational content out there. All of them are doing podcasts. They're putting stuff up on their websites. They have daily, weekly, monthly newsletters. There's a lot of content out there for investors to be learning from, is the thought from the issuers, who really are making an effort in trying to put as much information out as possible.
And the last time Mom and Pop read a prospectus, I'm not going to even try to venture a guess, but anyway.
You interviewed 3 of them. Matthew Tuttle of Tuttle Capital, Sylvia Jablonski of Defiance, and Will Rand of Granite Shares. How are they thinking of these? Because a common thread that they have is they manage billions of dollars, but most of them work from home. You said in the story that Defiance is a team of 5 who work from home mostly. Matthew Tuttle works with his dog in his lap, with a lot of Discord and a lot of screens. How are they approaching their so-called newfound fame and also growing criticism towards their products?
I think maybe Tuttle Capital Management is a good example, because what he's doing is he's looking for so-called white spaces in the ETF universe. So areas where you don't have funds for specific things. And what he's doing is he's filing for them, and he's putting those ETFs out there and seeing whether or not they catch on with investors. So for example, earlier this year, he filed and launched a levered ETF on Trump media, for example. So that's maybe something that he saw online. Is obviously it's seen huge spikes and huge drawdowns, but being able to offer a 2x fund on a stock like that, there definitely are people out there who want exposure to something like that. So he's looking for those areas where there might be interest from, in particular, retail investors, and seeing if those funds catch on. And some of them have been able to get billions of dollars very, very quickly.
How many ETF? This is like counting the number of podcasts out there.
Yes.
What are we up to? Like 10 billion ETFs?
Well, last year more than 70 launched, and that was more than the 2 prior years combined. But so far this year, we've already surpassed that. And obviously, we're only halfway through the year.
The process by which, like a fund, like you would just, the leverage funds, ETFs that you're talking about, what's the process, the regulatory? They have to get the stamp of approval from SEC or whoever, right?
Yeah, for ETFs, the process, it goes through the SEC. So they file, registration paperwork with the Securities and Exchange Commission, and it's you file for it, and then a certain amount of time later, you typically are allowed to launch it. The underlying are stocks that are already trading. So for example, GameStop or Roblox, or name your popular underlying company.
Where do they say they get inspiration? Is it really social media, chatter, or friends?
Yeah, a lot of times it is social media. So to go back to the Tuttle Capital Management example, he is seeing a lot of really interesting stuff online. And so, he's getting ideas from there to file for and launch some of these products. So certainly there have been funds that he has put out that have started trading where the initial idea was sparked online, which is really interesting because, like I said, there's more than 4,000 ETFs. So issuers are sort of hard pressed to find areas where they can launch something that will make an impact, that will catch people's eye, that will have investors actually putting money towards the products.
Do we know who the best performer is so far of those that you mentioned?
Oh, there's so many of them. There's
no, but I mean, who's like,
Oh, of the issuers, you mean?
Yeah. Oh, which
or
ETF is the best
Probably
performer?
those tied to NVIDIA.
Some of the ones tied to there's 2x MicroStrategy ETFs. There's 2x NVIDIA ETFs, 2x Tesla ETFs. There's 2x. I mean, just any number of companies at this point. There's 2x a bunch of quantum company ETFs. There's the way that they're structured, actually, they reset on a daily basis. So they're not exactly always offering double the returns of the underlying company just due to the way that they're structured. So a lot of times what you'll see is MicroStrategy itself actually being up much more than the 2x MicroStrategy ETF.
Which defeats the point.
Yeah.
It's just a quirk of the way that they're designed. But then other times they really are up much more. So just depends on the time frame that you're looking at. But there is that inherent sort of the way that they're built. They are resetting on a daily basis.
Bill Danya, hi Rick. The world of ETFs, our Bloomberg News cross-asset reporter on today's Big Take. Wall Street's ETF upstarts selling liberty, leverage, and risk. You're listening to Bloomberg Intelligence.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
And of course, it's Fill In Friday here on Bloomberg Intelligence. I'm John Tucker, along with Isabel Lee. Paul, I guess he's at the beach on Friday. Where else would he be? Interesting story we got from Brooke Sutherland today, one of our Bloomberg columnists, the Boston bureau chief and author of the Industrial Strength newsletter. Of course, we're going to get earnings. They start in earnest next week with the banks. We're also going to hear from manufacturing companies in the upcoming earnings season.
Okay,
As the,
so
industrial economy in the U.S.
once again,
continues to show
you know, we're kind of
signs
looking at
pressure,
a
but
B
Brooke,
setup,
that,
but I kind
there's
of
gonna
got
be
caught in
some
the last
surprising
one on the
stability,
transition,
the same
and then the
that we
VWAP
saw
held it
last
up.
period. Why is
So,
that?
you know, that's another reason why I don't like to trade into the VWAP.
One, I think that, you know, the bigger companies that we tend to write about from an earnings perspective.
So I'm just going to
are in
hang
better
out here for a little
position
bit.
to weather the current moment of volatility, whether that was
I got a
bringing
good
in
day. I don't want to mess it
ahead
up.
of tariffs, or, you know, being
Being
able to
greedy.
pass on the increased cost of tariffs.
I was
to
already
customers.
greedy
Bigger
once and
companies
nearly
have
got
a lot more
snapped.
flexibility when it comes toward
by not
navigating
letting
the
myself
situation,
get out of the
whereas
trade
smaller
at profit
companies,
and trying to go
which
for
are
the
also
whole
taken
thing.
into
So,
consideration for a lot
you
of
know,
the underlying
when you're on a
data
prop
points,
firm, that's why
that
it's
we look at
important
for
to
the
take
industrial
profit when
economy.
you
They
have
have
it,
a harder
because
time.
it
They're
doesn't
feeling
take a
more of
lot for the
pinch from
trade
the
to
strain.
turn
But I
for a
also
few
think,
candles,
there's
you know, to
concern
snap you out of that
among,
account
some
if you got
analysts,
heavy
and people
contracts.
who watch the industrial sector that
So,
maybe
you know, right here would
investors are
be,
getting
you know,
a
that
little
would be the,
complacent about
this
the
would be the
risks that are
B.
out there, because
You know, you
it's
kind of
not
want
totally realistic
a
to
full
think that
rotation and
all
then
of the
follow that
ramifications of
up.
tariffs would manifest right away. More likely, the concern is that it's sort of a building effect as people hold off on making purchases, particularly as it relates to capital expenditures, and that then has a trickle-down effect as we get further on through the year.
Industrial distributors are planning on flat sales growth in 2025. That's according to Wolf Research, and you wrote that in your note. And we have next week Fastenal, GE, Snap-on, 3M. Is there any company you're looking at in particular, whether for the upside or the downside?
I think that all of them are going to be really interesting for different reasons. The interesting thing about the industrial economy is that all of these companies are interconnected. And so Fastenal is coming up on Monday. I think that's always a really great company to watch, just because the big industrial companies, the big manufacturers, are Fastenal customers. And so it can be a really good early read in terms of what we could expect later on in the earnings season.
Just to be clear, the big manufacturing companies that you're talking about, they are or are not manufacturing here in the United States, or is it a mix?
It's really a mix. Most of the bigger U.S. manufacturing companies will tell you that they're local for local, and what they mean by that is that they primarily make what they sell in North America. Now, of course, that does include Mexico. And then they make what they sell in Europe, primarily in Europe, make what they sell in Asia, primarily in Asia, and so on and so on. Again, I think that is concentrated at the bigger levels for industrial manufacturers, and you do not see that kind of localization for the medium or smaller manufacturers, which would tend to be more reliant on Chinese supply chains.
You mentioned that, and we see that the S&P Industrials Index hit a record high on Thursday. What is driving that optimism, and do we expect it to grind higher in the second half of the year?
It would be surprising to see it crank a lot higher. There's already, a decent amount of high expectations baked into these stocks being at a record. Certainly, you see investors really banking on that idea of a second half recovery in manufacturing. And remember that the manufacturing sector has been in a slump for a while now. This is not new. There was a lot of optimism that manufacturers might sort of bounce back this year before we had all of the tariff headwinds and the uncertainty introduced by that. So this has been a long time coming for industrials, that we might see activity start to perk back up again. The question is, how robust is that recovery going to be? And I think it's going to be difficult to see a really meaningful recovery in industrials without a bounce back in the consumer side of things, where we are still seeing pretty consistent reports of strain, particularly when it comes to lower income consumers. These things tend to move somewhat in tandem, and it's very unusual to have a strong industrial economy when the consumer side of things is weak.
One of the intended effects, I suppose, of the tariffs is to lead to something of a CapEx renaissance in the United States. Any signs of that, or what these companies that you mentioned are saying about that?
Not yet. I think on the flip side, I think all of the back and forth and the constant shifting of policy around tariffs makes it very difficult for companies to decide what they want to do as far as CapEx, and if they do need a new factory, where that factory in fact should be, and what that cost differential calculus will end up looking like by the time that factory is ready. Remember, these don't just go up overnight. They take, can take years just to plan. They take years to build. And so these companies are trying to make long-term decisions and trying to figure out what exactly the world will look like when that factory is ready to open. And so I think it's very difficult. And when you talk to industrial CEOs, what they'll tell you is that they can figure things out, that they're used to adapting to challenges. They've gone through the pandemic, that some of them were still around during the financial crisis. They can figure it out, but they have to know what the rules of the game are. They have to know what the lay of the land is in order.
Brooke Southern, I think we just lost you there. Anyway, Brooke Southern, Boston Bureau Chief, the author of the Industrial Strength newsletter, joining us via Zoom from Boston. Thanks, Brooke. Appreciate that. And as we wrap up today's Bloomberg Intelligence Show, I'm John Tucker along with Isabel Lee. Quick update on the markets. The S&P 500, 22 points lower. That is down 0.4%. The Dow Jones Industrial Average is down 340 points. That's a decline about 0.75%. The NASDAQ 100 is down 39 points. For our listeners in the U.S., a reminder.
So this really is the B setup again.
Satellite radio on Sirius
right here,
XM,
entry would be
channel
right
121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories. The global business headlines coming up right now. You're listening to Bloomberg Radio. For Isabel Lee, I'm John Tucker. Well, thanks for listening.
Nope, missed me. Was flirting with it. Yep, I got missed. I flirted. It didn't pick me up. Damn it.
On the hour, sponsored by ZipRecruiter. I'm Steve Kathan. President Trump will get a look at the epic flood damage in central Texas soon.
That much water that fast, without a dam break, you'd think a dam would have to break to have it.
CBS's Jason Allen along the Guadalupe River.
He is going to talk with some of those first responders, some of those folks who were involved in those searches in the hours after the storm.
Hey, Lottie, how you doing?
These days that have gone on looking for the victims, as well as talk to some of the local officials.
Some parting words from the president were on one of his new tariff moves.
Speaking to reporters before heading to Texas, the president said former Brazilian President Bolsonaro should not be on trial for trying to overturn his election loss.
They're treating President Bolsonaro very unfairly.
The president considers Bolsonaro a personal friend.
He was a very honest man.
Imposing 50% tariffs against Brazil seems contrary to the president's stated policy of correcting trade imbalances, since the U.S. has a trade surplus with Brazil of more than $7 billion. Linda Kenyon, CBS News, the White House.
A federal appeals court has thrown out an agreement that would have allowed accused 9/11 mastermind Khalid Sheikh Mohammed to plead guilty in a deal that would have spared him the risk of the death penalty. Correspondent Scott McFarland has more on a CBS News investigation into Thomas Crooks, the man who shot at President Trump a year ago in Pennsylvania.
In the months before the incident, he was seemingly leading two lives.
I'm going to wait for the next A+ setup, Lottie. I took some heat on this trade.
I thought he was a star student.
I got in a little early. I had profit, and I didn't get out, and I took some big heat, and then it came back
while at the same time,
as I hoped, and I got out, and I don't want to risk it again. I'm going to wait for the best setup. The B setup is good, but, man, you can get in some trouble if you don't get out of it quick enough. It can reverse on you, and then the A setup can happen quick, and then you're really fucked if the A setup takes off and you're still in the B. So it's kind of, you can't really double dip the B setup.
According to the Atlanta-based CDC,
if that makes any sense.
3 teens and preteens ages 12 to 17 have
Take a look at the NQ.
That translates into an estimated 8.4 million young people. It's a condition characterized by higher than normal blood sugar levels that increases a person's risk of developing type 2 diabetes. The nation's top health agency calling this a critical warning sign for the health of America's youth.
Defending champ Carlos Alcaraz beat American Taylor Fritz to advance to the men's final at Wimbledon. And checking Wall Street, right now the Dow Jones Industrial Average down 333 points. The S&P is down 21. This is CBS News. A Paris landmark is up and running again.
Oh, yes, we can. The famous dancers of the Moulin Rouge, the Red Mill, performing outside the iconic venue as its sails turned for the first time since a bad storm 14 months ago. Spoiler alert, not all the dancers are French. Jasmine's from Australia.
Everyone just couldn't wait to come out and see the windmills spin again.
Management said the repairs were a high priority because Paris, without the turning sails of the Moulin Rouge, just wouldn't be Paris. Vicky Barker, CBS News, London.
Health Secretary Kennedy has canceled a meeting this week of a federal task force that helps determine which preventive health measures will be covered fully by insurance companies. The 16-member panel of doctors and other health experts plays a key role in determining whether millions are eligible for cancer screenings, stroke medication, and other drugs and preventive services. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump heads to Texas with more questions about last weekend's deadly flooding. Welcome to the Friday edition of Balance of Power here on Bloomberg Radio. With the president and first lady set to arrive this hour in Kerrville to meet with first responders in the throes of a massive recovery effort. We're going to get the latest ahead from Bloomberg's Tyler Kendall at the White House and from Bloomberg's Texas Bureau Chief Julie Fine, who's tracking this for us in Dallas. Republicans pushing rescissions on Capitol Hill, budget clawbacks, even as budget writers start work on the next fiscal year. We're going to tell you what to watch ahead with Nathan Dean, our policy analyst at Bloomberg Intelligence, with analysis from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, on Wall Street. Charlie Pellet at World Headquarters in New York now with his look at the markets. What's going wrong here, Charlie?
Right now, we have got the Dow, the S&P, NASDAQ all declining. In a word, tariffs. Concern about tariffs. Stocks slipping from records. President Trump intensifying his trade offensive, sending the dollar higher. Concerns about the potential inflationary impacts of tariff hikes, certainly weighing on the Treasury
Okay, so
market.
we're about to go into VWAP drop
with the
mode.
S&P
So
down
the
26
ES
right
just
now.
dropped below
62.54.
the
Drop
VWAP.
there of 0.4%. We've got
You
the
see,
Dow
we
down
just dropped below it.
365, a decline of 0.8%.
Oh, NQ. NQ is above it. I'm sorry. Let's go back to the ES. ES is now dropping below it.
4.41%.
So this is chop mode. We're in the VWAP zone where there's no trades to be taken, so we don't enter anything here. We gotta wait. We gotta wait for it to pick a side. Are we gonna finally break out lower, or are we gonna consolidate here and move back to the highs? So that's what we're waiting for before we decide to make a trade.
Bottom line here, stocks lower, tariffs front and center today, rattling investors. John Stoltzfus is Chief Investment Officer at Oppenheimer. He was a guest this morning on Bloomberg Surveillance.
Right now, we're waiting to see what happens with the tariffs. Today, the nervousness in the market that's being expressed. It's the tariffs are the main focus here. Now that we've gotten over the budget, we've seen what the Fed is saying that it's going to do effectively. When you look, probably about 2 cuts this year.
John Stoltzfus of Oppenheimer, and you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. A group of Microsoft investors is pressuring the company to assess how effectively it identifies customers who misuse its artificial intelligence tools. A push that follows reports detailing the Israeli military's use of Microsoft software during its war in Gaza. Microsoft today up 0.5%. Recapping, stocks slipping from records. S&P down 0.4%. Balance of Power continues now. Back we go to Washington. Once again, your host with the Friday edition. Here he is, Joe Matthew.
All right, couldn't do it without Charlie Pellet in New York. Charlie, thank you so much. We'll get back to World Headquarters for the latest on the markets a short time from now. Keep tabs on the Friday trade. As you can see, there's a bit of a tantrum going on here once again about tariffs. But tariffs will not be leading the conversation today as we cover the President of the United States on his visit to Texas. It's going to bring us right back to the painful stories that we started this week with following the deadly flooding in Kerrville. Remembering we have at least 120 deaths here and so many more missing. A week later almost, more than 170 people are missing. And so the president is making good on his plans to travel there. He'll be touching down, if things are on schedule, a little bit more than 10 minutes from now. And of course, we'll keep tabs on his arrival and any comments that the president makes. He's going to be in Kerrville for about 3 hours today. First, he'll have the arrival. He'll do a bit of a tour and then a roundtable with first responders. There's been a lot of talk about enhancements that could be made and could be part of the special session, the legislative session that's coming up here, if that, in fact, takes place in Texas. Governor Greg Abbott asking for warning systems, flood alarms, and so forth that the president has now indicated that he would support. So let's start our coverage. Before we bring you to Texas, we want to go to the White House. Bloomberg's Tyler Kendall has been tracking the president from the planning of this trip at the beginning of the week to his imminent arrival. Now, Tyler, what can you tell us?
Yeah, hey, Joe. So we are expecting President Trump and First Lady Melania Trump to touch down shortly. Later this hour, they will participate in a roundtable with first responders and local officials as they survey the damage from these absolutely devastating floods. The latest numbers show us that at least 120 people have died and 170 people are still believed to be missing. This trip is really going to be focused on the White House showing solidarity with the Texas state and local officials and government as they respond to this and really emphasize that collaboration between the White House and local officials. We are expecting, for example, the Homeland Security Secretary to be there alongside the governor, as well as the two senators from Texas, Republican Senators Ted Cruz and John Cornyn, to be there as well to really try to emphasize that they are working closely together amid what had been questions about the future of the Federal Emergency Management Agency, as the administration had previously suggested that they could be downsizing it in a bid to streamline bureaucracy, cut back and save some funding, but also to really give control back over to the states. That has often been an argument that we've heard from the administration, that disaster relief and immediate response should be at the local level. Of course, we had heard earlier this week from the White House Press Secretary Caroline Leavitt. She was asked if the administration would continue any efforts to downsize FEMA. She didn't answer the question directly, but she did say that the White House ensures that Americans who need assistance will get it, whether it be federal or state assistance. We should say that FEMA has been really a chronically underfunded agency due to a lot of different reasons, including playing catch up when it comes to responding to disaster aid requests. They respond, but then they also need to get that funding, and it's sort of often dictated by a congressional funding cycle, which could complicate things further. Joe, as you well know, this is an issue that has plagued both Republican and Democratic administrations.
Well, it's a really interesting point that you're making here, and it's part of the conversation that's being driven by what took place in Texas. Tyler, the president is clearly changing his view on FEMA, though there is reporting that the administration, instead of winding down the agency, might attempt a rebranding that would emphasize state leaders' roles in disaster response. The Washington Post reporting that. Are we hearing any language, a changing language out of the White House that will coincide with this trip today beyond what we heard from the press secretary?
So right now we are still awaiting more official confirmation and details on this specific angle here. But of course, it would align with what we have previously heard from this administration on really a range of federal agencies, and this idea of downsizing and trying to give back the power to state and local governments is something that we'll be watching closely. And as President Trump touches down, perhaps we'll get some more details there.
Tyler, it's always great to have you. Starting us off here on the Friday edition, live from the North Lawn of the White House, Bloomberg Washington correspondent Tyler Kendall. As we turn our attention now to Texas, just moments away from Air Force One touching down. Julie Fine, of course, our Texas bureau chief, is with us right now from her perch in Dallas. Julie, it's great to have you as we try to cover both ends of this story. What is waiting for the president and the first lady when they arrive?
Well, there's, of course, local officials and state officials that will be there greeting them. But once they go, they will have a briefing. After that, they are going to tour this destruction. I think you can see the video, but seeing it firsthand is a completely different matter there. So they're going to walk into an area that there's still a lot of debris on the ground. There are still devastated people in the area, and now they're trying to figure out what's next for a part of Texas that is so important to the culture of the state.
Well, the numbers that Tyler was just relaying to us are horrifying, and to think that 170 are still missing, Julie. I'd love to hear from you on what Governor Greg Abbott has been talking about as he's asking lawmakers to consider some new proposals in an upcoming special session. Early warning systems, other preparedness infrastructure like flood alarms that could go into flood-prone areas like this? Is that the next phase of this story?
That is the next phase, Joe. A week from Monday, the Texas legislature will gather for a special session. There are already groups studying that issue. The question here really is going to be who is going to pay for it. Lieutenant Governor Dan Patrick already said the money will be there. When you talk about the local government in Kerr County, they said they discussed it at one point, but the taxpayers did not want to foot the bill for it. So now they're really going to have to take a look at, states can mandate some things, but oftentimes it's up to the local governments to pay for it. So they will have to look at spending. It's going to be a lot of money. If you're going to put those emergency systems on rivers in Texas, it's going to cost a lot of money. I expect there will be a lot of pressure on lawmakers because Texas does have a surplus. They may say it may be time to dip into that. Question will be where the money comes from, not whether or not they will be built at this point.
Yeah, got you. Julie, while you work on that microphone there, I just want to relay what the president told NBC's Meet the Press about this. Apparently, Kristen Welker, the moderator of Meet the Press, got him on the phone again. You just call the cell phone when you want to make news. Quote, after having seen this horrible event, he said, I would imagine you'd put alarms up in some form, where alarms would go up if they see any large amounts of water or whatever it is. But the local officials were hit by this, he said, just like everybody else. There is a concerted effort to try not to project any sort of narrative that local officials did anything wrong. The idea here is to give them more tools to prevent something like this in the future, and whether flood alarms become part of that, I guess we'll see it. Julie Fine back with us now from Texas. Julie, the president's going to be there for about 3 hours. Is there any concern that this will get in the way of recovery efforts?
There hasn't been any outward concern. I mean, he waited several days to get here. There hasn't been really discussion of it. And Joe, you touched on an interesting point about blame with the local officials. I think the state government, all the governments have been very careful to not do that. I mean, obviously, there's an enormous amount of pressure on the local governments here and a lot of questions that do have to be answered. But you touched on a very important point there. There hasn't been any outward discussion of the president. He's not going to be there for a long time. Obviously, he can't fly directly into that area. He will have a briefing, then he will briefly tour the area. There have been a lot of state officials that have toured the area. There was a media tour of the area as well. No complaints that it took away from this effort, which, Joe, as you know, is going to go on for a very long time.
Julie Fine in Texas. We thank you, Julie, as the president makes his way back to Kerrville today. As I mentioned, we'll let you know when the president arrives, and we'll be bringing you his remarks along with the First Lady if they do choose to speak. Sometimes these are a bit spontaneous as the president is toured around the area, as Julie mentioned. There is a roundtable, though, as we heard from Tyler, with first responders. That'll be after 2 p.m. Eastern time, and you'll likely hear the president's remarks during Bloomberg Business Week daily. We're going to keep things here in Washington straight ahead. You know who we haven't heard from in a long time? He's back with us, Nathan Dean, the chief U.S. policy analyst at Bloomberg Intelligence, watching rescissions, the implementation of the big, beautiful bill, and a lot more. Companies are calling as they get ready for the next tax filing season. And of course, Nathan is always on the other end of the line. He's going to be with us straight ahead. Later, our political panel, Rick Davis and Jeannie Shanzano, with us on the Friday edition of Balance of Power right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow,
Okay,
the
so this
S&P,
looks like an
NASDAQ,
A+ setup, but the
all red
forecast
for
cloud
the
is too
final
big.
trading session
It
of
hasn't
the
turned
week.
yet.
We are on track for a losing week.
It's
Right
wide
now,
open,
numbers
which
here
means
will
there's
be
way
stand
more
by
selling
April
happening than
with
buying, and it
tariffs
can get
front
smacked
and
back
center
down to
on
the VWAP.
investors' minds.
Hey, SM, how you doing, bud?
Drop there of 0.3%. The Dow down 336, down 7.
How'd your interview go?
And Nasdaq is down 14, a decline of 0.1%. Stocks fell from records as President Trump intensified his trade offensive. The 10-year 4.41%, with the 2-year currently yielding 3.89%. Gold up.
Well, then that's good.
$1 the ounce. Spot gold up 9.
That's good.
1%.
Neutral
West
feeling
Texas
is fine.
Intermediate crude oil up 2.6%, 68.25 a barrel on WTI, and Bitcoin now up by 3.1%, trading at a record 117,067 on Bitcoin.
They mostly need somebody that'll show up on time and just listen and do what they ask.
Arizona, according to the car maker's plans for
Believe it or not, it's hard to find somebody like that.
predicting on his social media service X that Tesla robotaxis could launch in the Bay Area.
Are you in along now?
Area, probably in a month or two, pending regulatory approvals. Tesla shares, they're down little change right now, down less than 1%.
Okay. What's your exit?
So recapping here, equities are trading lower, all about the
I'm waiting for a little bit more. I took some heat on the trade earlier, and I'm gonna hold on a little bit more.
Subscribe to Bloomberg News now, wherever you get your.
I want to see the forecast cloud going my way.
Of your newscast, a big rotten tomato.
You ES?
Starting Monday.
You on the ES?
By the way, thank you, Charlie.
Yeah, you're ES for life now, right?
Starting Monday, all tomatoes imported from Mexico will be subject to a 17% tariff.
Yeah.
17%. Nature Sweet.
All right. Hey, I gotta zoom. I gotta zoom in like 6 minutes. I gotta get ready for. But
says if that happens, and it's
what's your target?
Going to happen on Monday. They'll have to hike consumer
Entry
prices by as much as
6,300.
10%
I'll
after
draw
this
your
kicks in,
target here.
suggesting that they're swallowing some of that tariff, and maybe more will have to be handed on in the end. More
10
than
points.
90% of U.S. tomato
Right
imports
there, roughly.
come from Mexico. So start stockpiling the salsa. You might not want to do
Run,
the tomato
baby, run.
salad.
Well, we're in the long. You got everything going your way. You just need this forecast cloud to close up and more buying to come in, and it should push you right into it, I think.
This is the kind of thing I
All right, I don't want to get in a trade because I'm going to be in a Zoom for an hour. I got a team meeting,
Great to see you. Welcome back.
so I don't want
We
to.
have to
I don't want to
unpack a
have
lot
to
of
deal with
stuff,
it while I'm in that.
But I
meeting.
want to start here with tariffs because
All
that's
right,
been
I'll talk to you later, dude.
the big story this week with the letters going out. Now 50% copper. What is it? 35% on Canada just happened to drop out of the sky overnight. And yeah, that's the truth. This is the no caprese summer, apparently. What do you think about this? We're going to let this go into effect. When a company says we're going to hike prices, how can the administration say they're not inflationary?
Well, obviously, the administration can use the bully pulpit to try and get some of these companies to not increase their prices. We've seen that with some of the other things, other tariffs that have gone on. But really, there's two stories that we're telling our clients here when it comes to the tariffs. First is it's a summer of status quo. First, it was Liberation Day. Then it was July 9th. Now it's August 1st. And more likely than not, there'll be an extension beyond August 1st. And so, yes, you're getting these incremental tariffs. But there are a lot of headline risks with these tariffs because, even the Canadian tariff, the 35% tariff, USMCA is not part of that. And that represents a bulk of the trade between the United States and Canada. And so we'll say is that as we get to August 1st or we get closer, look for the negotiations, stay close to Bloomberg News, because if these negotiations go well, you're not going to hear much about it. If they don't go well, President Trump is going to come out there with another, inflammatory statement that will get the markets all worked up.
Yeah.
And when it comes to tomatoes, the other thing that we're telling our clients is that our general thesis on a lot of this is that the tariff thoughts that are coming out of the White House are designed to not really impact people when it comes to grocery stores or electronic goods or anything like that. And so tomatoes especially, well, it's summer. There's a lot of local tomatoes out there. But as we get into the autumn, into the fall, any parent knows that if you're going to buy these strawberries, they're much more expensive in the winter.
All right, so this is important. So go to the farmer's stand for now. I thought you were going to say you were telling clients to start canning tomatoes, but I guess the idea is this will be resolved before it becomes a problem. That's been the pattern.
I wouldn't say resolved, but at least walked back.
Okay.
I mean, maybe walked back is a little bit stronger of a
You
word.
can't have a taco without tomatoes.
Exactly.
Nathan,
But you would have a 17% tariff right now. Negotiations could take place, and President Trump could get something out of it. You know, this is the biggest question. It's very difficult for analysts to try and figure out where we're going with this. But the playbook since Liberation Day has always been an inflammatory statement, gets the market all riled up, and then all of a sudden there's a negotiation, there's a talking, there's maybe exemptions or anything like that.
Yep.
And the true end game, the true fears of the market have never taken place, hence the taco. Now, Treasury Secretary Scott Bessent was telling investors just this week, I wouldn't call it taco. He had something else that I wouldn't say on the air. But, you know, again, the idea here is that as we're going to get closer to August 1st, headlines will start to increase risks. The markets will get concerned, but we ultimately think there's another kick of the can.
Well, we're at all-time highs basically right now in the stock market. I know we're a notch lower today, but this does not seem to be a Wall Street that is taking any of this seriously.
No, and I would also say is that when it comes to the letters that came out this week, there were a lot of exemptions. I mean, just the Canada one is for a perfect example because USMCA wasn't part of that.
Right.
You know, there are also going to be other exemptions out there, whether it's Japan or South Korea, and it's just this idea that President Trump is not going to go far enough that truly shoots, you know, that harms American consumers in the way that you're going to see pricing changes behaviors at the in the marketplace.
Let's hear from Russ Vought. Can we do that, CC? He was on the other network this morning talking about rescissions. And this is interesting here. There's this effort underway. You saw it coming. Not a lot of money. It's about $9 billion in the grand scheme. It's a drop in the bucket. But this is money that was already approved by Congress, and Republicans also voted to approve. So Democrats are saying, hey, wait a minute. How do you think this works? We're not going to trust you in the future if you guys pass this. By the way, it's USAID funding. It's NPR PBS by way of the Corporation for Public Broadcasting. That's where the money's coming from, $9.4 billion. Here's what Russ Vought said today at the White House.
We have our first rescissions package up on Congress. We had a great vote in the House. We have a second vote next week. I am confident that they will pass the bill. We think it's a very important step for Congress to show that they are willing to pass the DOGE cuts. You know, people say, why is it a $9 billion package? It's a $9 billion package because we want to see is Congress serious about that. Senator Kennedy has had some incredible floor speeches on this very issue. Is Congress serious about passing and making the DOGE cuts permanent, or are we going to have to continue to use our executive tools on that?
Good question. A lot of people don't think Republicans will pass this rescissions plan. What do you think?
So
you got odds on this?
We don't, because there's really not much of an investable angle when it comes to this package in particular. But what I'd say is it wouldn't surprise me if it does pass, because I go back to the idea that all politics is local, and this rescissions package doesn't really have the provisions in there or the items in there that somebody can say, go back to their constituencies and say Kentucky or Maine or wherever, and say that this package, I'm going to, you know, this package ultimately is going to harm my constituents. I don't see that with this one. But future, you know, rescissions packages, that's what I would always ask myself is, what is the White House trying to actually rescind here? You know, there was talk about rescinding a safety commission that had to do with Appalachia. You know, several of the Republicans that came from West Virginia came out and said, no way. I've actually been fighting for this. And they were tweeting even just this morning saying, look, I'm going to protect this because this is something that impacts my constituents.
Sure.
So I would just say is that if you're looking at these rescission packages, look for the investable angle. And there certainly would be some there in the future if you're talking about energy sector and so forth like that. I think that's going to be in the next one. But also it's just say all politics is local. And what are they going to do? Because it's much easier to say, I'm going to vote something on a national level that's not going to impact my constituencies than it would be to impact the district when I go back home.
Interesting. That's why we hear from Mike Rounds, for instance, about local radio stations, these local NPR stations that could be defunded here. They actually provide a lifeline to communities that don't have a commercial options, you know, in rural areas where there's no market for that. And for a guy like me who comes from small market radio, that's the local dream factory. That's where you get the news. That's where you get the entertainment. And this might survive as a result, it sounds like, despite the aversion to NPR that Republicans have.
Yeah, I mean, I would just say is that when it comes to this package in particular, I think in the Senate, obviously, there's probably, I'd say, about 15 Republican senators that really do not like the idea of going back and rescinding funding that they've already approved. But they also like the idea of retaining control of that process. Because the last thing they want to have happen is for the DOJ committee or the White House to come in and just say, look, we're going to impound the money, we're not going to spend it. And then next thing you know, you go to the courts, and regardless of what happens, it's taken out of the congressional hands and it's put into the executive branch and the judicial branch. So I could see some of the Republican senators saying, look, let's not fight this battle now. Let's fight this battle in the future when there's something that's even more important to our districts. But again, we'll see you next week.
So we started talking here with tomatoes on our mind. We stay here in the greenhouse with the latest on cannabis. This is hysterical. We've talked about this a lot. The massive moves that we see in these stocks based on almost nothing. There was an effort to reschedule cannabis under the Biden administration. It's been bogged down. You see a headline like this. This was, 3 days ago, if I remember correctly. The president's pick to run the DEA said that he intends to examine a proposal to federally reschedule marijuana, and we have the biggest rally in pot stocks that we've seen in months. Is this even real?
Well, I would say these marijuana equities have been really, and we've said in the show before, they have hot sauce.
That's right.
There's lots of volatility. Anything happens in Washington.
Curaleaf went up 25%.
Exactly. And so the marijuana stocks, though, have had really difficult times of late. And so a lot of these retail investors who are hoping for reschedulization, they're obviously buying into it, and they're really hopeful here. Yeah. Where I'm coming in as negative Nancy is said, look, I've been burnt too many times saying that this is going to happen. And I haven't really seen much in the way that reschedulization is going to happen. Just on July 8th, the DEA reported into a court case and said, look, there's really not much that's happening on this administrative process. Right. There's been nothing happening in 6 months. And when Terrence Cole hasn't even been confirmed yet, even though he says he plans to examine it,
he's not a fan of it.
His history suggests that he's not a fan of it.
Right.
And so the idea here is, I think a lot of these retail investors who are really looking into this are hoping that President Trump or the MAGA crowd comes in and says, look, we're okay rescheduling. And I don't want to say it's not going to happen, but I would just say, let's pause, let's wait a minute, because marijuana is not the most important issue. And especially as we're getting into August recess, this most likely is going to get pushed to the end of this year.
It sounds like this is also not an administration that seems to be in favor of legalization on any real level. I know the president danced around that in the campaign, but you've got states like Virginia still with a Republican governor moving forward with full-on retail, adult use, whatever you call it, marijuana sales. Despite that, will those states run into trouble here in our remaining moment?
I don't think so. I mean, obviously, this is where the marijuana investors come back at me and they say, look, it's going to happen never. And I don't disagree. I do think marijuana legalization is going to happen. I just think it's going to be a couple years from now because the states are going to continue to push it, not so much at the federal level.
In the meantime, you're trading volatility is the story.
Exactly.
Right? This is the only way you're making money there. We missed you. Everybody missed you around here. Welcome back. Nathan Dean, Bloomberg Intelligence, the senior U.S. policy analyst, taking calls from clients like you, but only here on Balance of Power. Great conversation. Great to have Nathan back on the Friday edition. We're going to assemble our panel next with plenty to talk about here as we careen into the weekend. Rick Davis and Jeannie Sheehan Zaino on their way in. We'll be tracking President Trump and the First Lady on their visit to Texas as well. We'll have much more straight ahead. Smoke 'em if you got 'em. I'm Joe Matthew in Washington. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all in the red right now, retreating from records as President Trump intensifies his trade offensive. Keep it locked into Bloomberg Radio for the latest on any and all trade developments, specifically right here on Balance of Power. Here's where we stand in terms of the equity market. The S&P down 1862.61 right now. That represents a drop of 0.3%. Dow Industrials down 330, lower by 0.7%. NASDAQ lower by 5, a decline of less than 0.1%. On a down day for the rest of the market, the Bloomberg Mag 7 index pushing higher, up 0.5%. Tesla shares now up by 0.1%, but NVIDIA keeps on going, up another 1.5%. Your 10-year, 4.41%, with the 2-year, 3.89%. Gold up $30 the ounce, up 0.9%. West Texas Intermediate crude up 2.8%. WTI 68.43 a barrel. Bitcoin, a major story today, surging to another record at 117,429 on Bitcoin, up right now by 3.4%. As for the overall market backdrop, Emily Rowland is co-chief investment strategist at Manulife John Hancock, and she told us right now it is on to earnings.
There's a lot to take in, from the big, beautiful bill to tariff announcements. You can almost get stuck in analysis paralysis doing that. And luckily, we can focus on the fundamentals. It reminds us of that famous Bill Belichick press conference where he refused to answer questions about the loss to the Kansas City Chiefs and kept saying, we're on to Cincinnati, we're on to Cincinnati, and we're on to earnings season next week.
Indeed, the earnings train will go express, with reports coming up from J.P. Morgan Chase, Citigroup, and Wells Fargo. All of that on Tuesday. After earnings, Levi shares surging now by 10.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, I guess we're sliding into the weekend here on Wall Street, but that does mean it's Friday, and I do welcome you to the Friday edition. Thanks for meeting us here at the threshold of the weekend. On Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121. On Bloomberg Originals, we're on YouTube right now, too. Search Bloomberg Business News Live. You're going to want to come in for this one. I have a couple things I want to show you. If you're with us on the radio, we'll take care of you as well. Are you going to see the new Superman movie this weekend? Everybody is all excited about Superman, right? The dog, Krypto, the latest take on this iconic brand. Yeah, DC Comics, but a different wrinkle now. James Gunn, the Marvel guy, is making it. It's supposed to be a more up-to-date, inspiring, optimistic take on the old tale. Guys like me who grew up with Christopher Reeves are supposed to love this stuff. As you can see on YouTube, the White House, well, I guess has its own version of Superman. Donald Trump in the full outfit, as you can see, taking off into the heavens. I'm going to sort of walk you back here a little bit, because James Gunn's been doing a lot of press, as I read in what is the best story on the terminal today by the great Jason Bailey. The headline, Superman immigrant backlash is comically misguided. James Gunn said a couple of things in some of the media interviews he's been doing. Superman, he said, is the story of America. He told the London Times, quote, an immigrant that came from other places and populated the country. Populated the country. This has created this big woke backlash against the Superman movie because, well, nothing is simple anymore. Big expose on Fox News. It's set social media on fire from the far right rage machine, in Jason's words. Hence the post on social media today from the White House. We see that again. President Trump as Superman. Look at him taking off. He doesn't like dogs, though, so I guess there's no Krypto. Of course, Donald Trump has a history of this. He's been dressing up as a lot of different things in social media. Remember when he showed up as Rocky just a couple of years ago? Well, that was 2019. Looks pretty good with the belt, I have to admit. But as Jason Bailey writes, the idea that Superman is a previously apolitical character who has been co-opted by the political left for cultural indoctrination is comically ignorant. You know, the guys who started this, Jerry Siegel, Joe Shuster, both children of Jewish immigrants. And before we even entered World War II, they had a 2-page story of Look magazine called How Superman Would End the War, in which he literally takes Adolf Hitler by the throat. There was later a radio show, Adventures of Superman, a 16-episode arc called Clan of the Fiery Cross, in which Superman took on the KKK. So Jason makes the point that there's not a lot new here, and I'm really glad that he's with us. Bloomberg Opinion guest columnist. He's a film critic and historian and author of the book Gandolfini, Jim Toney and the Life of a Legend. Jason, I can tell I like you already, and I appreciate your coming to talk to me here on Bloomberg. Are you surprised to see the woke backlash? This is speaking for not really Superman, but the political climate we're in here, right?
Right. I mean, you kind of put your finger on it earlier. Nothing is simple anymore. Nothing is what it appears, what its intentions may or may not be. Everything is up for sort of a deep read that's usually comprised of a kind of bad faith. And I knew earlier this year, I actually wrote a different Bloomberg editorial about this, that when Snow White, the Snow White remake tanked, and suddenly people were eagerly ascribing it to making it an Israel and Palestine issue, I was like, oh, we've really sort of crossed the Rubicon here. So I'm unsurprised. I'm especially not surprised. These debates run rampant throughout popular culture, but especially in the sort of superhero movie world, which speaks first, to their cultural ubiquity. Like, these really are typically the biggest blockbusters, the movies that everyone sees and thus has an opinion on. But they are also typically loaded for these kinds of readings for a lot of the reasons that we're seeing with the Superman controversy.
So you're a film critic. You understand the business of Hollywood, and you don't seem in your column to feel that this is going to hurt box office receipts for this movie. So are people just talking out of their hats and then going to see the movie? How does that come together?
I mean, I think it's very easy to sort of overestimate the effect that a small number of extremely loud voices can have. And the way that I put it in the column was that, these takes, the likes of which we're seeing on, Fox News and Daily Wire and places like that, they generate clicks. They generate the enthusiasm of that audience that goes to those outlets. But those probably aren't the audience for these things anyway. The best sort of example that I've found was recalling the hullabaloo from a lot of the same people over Barbie a couple of years back. And the sort of what were in that case much more explicitly stated themes of feminism and diversity and that sort of thing. And people like Ben Shapiro are saying nobody's going to go see this movie, and then it literally breaks box office records. And then someone posted today, someone found a clip of him the weekend after Barbie came out, saying, well, you're going to see a second weekend drop off on this like no one's ever seen. And there was no second weekend drop off. It's just, it's somewhat performative. I'm sure that in their heart of hearts, these people are genuinely angry that every single work of popular art doesn't speak specifically to them. But a lot of it is generating traffic, generating rage clicks, generating advertiser dollars.
Ugh, it's exhausting. Rage clicks.
It's exhausting.
Got a life. These are the same people who are going to go see the movie. That's the best part. Jason, really appreciate. Jason Bailey is a film critic whose work has appeared as well in the New York Times, Vulture, Playlist, Slate, and the Rolling Stone. How did we find you at Bloomberg? This is great, Jason. Come back and see us again. Look for him on the terminal and online as we assemble our political panel. Little did Jeannie Shanzano and Rick Davis know they'd be diving into this right now. Bloomberg Politics contributors. Jeannie, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is Republican strategist partner at Stone Court Capital. And we'll get to the tariffs and the other policy coming up in our second hour, guys. But how about Superman and crypto here? Jeannie, what do you make of the woke outrage over this movie?
To read you one tweet or X that I saw, Joe, because it encapsulates it. Somebody said that Superman wasn't an illegal immigrant. He was an unaccompanied refugee minor because he was immediately adopted, even though he was born in Kryptonian. So people are really going to town on this, the level of detail. We're seeing a lot of MAGA backlash, and it's not just against this movie. From a policy perspective, we're seeing it against the poor Agriculture Secretary, Brooke Rollins, and the president for considering even amnesty for migrant workers. And so it's, they take the promises the president made very seriously, and they are pushing back at any attempt either by him or apparently filmmakers to tell a different story or pursue a different policy. And I would say, though, that the Superman filmmakers are very much in keeping with public opinion polls, which show that people in the United States, at least, are largely supportive of immigration. And this pushback that we're seeing is very much in the minority.
Rick Davis, I'm guessing you were a Christopher Reeves Superman guy. Is this ridiculous, or does this actually tell us something that we can't put a Superman movie on the screen in this country without having a debate over immigration?
Yeah, first of all, I'm a big fan of superheroes. I think they teach moral lessons. I love the fact that Hollywood invests in these things, and let the chips fall on all these social media accounts for people who don't have enough time to do anything but comment, or what is the term? Rage clicks. Love it. I'm going to use that all day today. Look, I get over it. I do think what's really interesting to me is how Trump does such an enormously good job of appropriating these things. I mean, how many Bitcoins are going to get, or meme coins are going to get now minted with his image as Superman on them that, get put out there in the public market? I mean, like, it's amazing how flexible this administration has been, either as a campaign or in government, to jump on these things in a moment's notice and put the president's image to work on them to appropriate whatever positive and frankly, push back on whatever negative that they can get. I mean, it is an administration light on their feet.
Jeannie, did you see Donald Trump in the Superman outfit taking off? Is that working for you? What's the message from the White House? I just want to be serious for 1 minute. That's the official White House account. Put that photograph up. What are we supposed to take from that?
It is the same White House that also put up a picture of him as the Pope. So I don't think anything surprises us anymore. They are staying relevant. They are staying on message. They want to consistently talk about Donald Trump as Superman or as the ruler of the world. And they want to use these moments to change the narrative. And so they are trying to do that. It's, not my cup of tea. I wish we didn't have that, but we are in what, I don't know what you call it, political tainment or something era. And so this is what leaders and presidents around the world are doing. And Donald Trump is the leader of this movement, which I wish we could pull back from a little bit, but I'm in the minority, I guess.
Rick, you see all the crazy AI stuff. Donald Trump looks like a bodybuilder. He's shooting guns. He's doing all kinds of crazy things. And sometimes he is dressed like a superhero. What does it tell you, though, when it's coming from the official White House account? This isn't fan art we're talking about here. It came from the actual administration.
Yeah, no, I think it's the blurring of, sort of government and the web. I mean, he has so many creators out there creating these kinds of content, whether they're in government or outside of government, whether they're Trump supporters or just people out there having a good time. And yet he doesn't blink when it comes to taking an image that he thinks is flattering to him and adopting it as his own. And he's done it throughout his career, right? I mean, he's the one guy we know who actually dummied up a Time magazine cover and put it up in his office. I mean, like, he believes that an image is worth 1,000, maybe 10,000 words, and he has always done an exceptional job of appropriation in that regard.
Well, I never thought we'd be having this abstract conversation with Rick Davis and Jeannie Sheehan Zaino, but that is how good they are. They're going to be back in our second hour here, of course, our signature panel on Balance of Power, as we consider the words of Jor-El to his young son, Superman. Live as one of them, he said, Kal-El, to discover where your strength and your power are needed. but always hold in your heart the pride of your special heritage. You can just imagine the antennas going up. They can be a great people, he said, Kal-El, if they wish to be. Hour 2 of Balance of Power has a lot more on the way as we welcome our global television audience to the conversation. And as I mentioned, Rick and Jeannie will be back with us as well. Kaylee Lyons is coming in. It's the Friday edition. Dial up YouTube right now and we'll meet you back here live from Washington, only on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump heads back into a disaster zone. Welcome to the Friday edition of Balance of Power here on Bloomberg TV and radio, as the President and First Lady are set to touch down shortly in Kerrville, Texas, to meet with first responders who are in some cases still searching for the missing. I'm Joe Matthew alongside Kaylee Lyons here in Washington. Kaylee, this will not be the first time the president has had this particular duty. He waited days so as to not interrupt with what's happening on the ground there. It's still a lot of questions about the recovery effort that's underway.
Yeah, keeping in mind that there are roughly 170 people still missing that are being searched for. And of course, the president's visit is we expect him to meet with state and local officials, do a roundtable with them later on this afternoon, comes at a time where those very same local officials are under some scrutiny as to whether or not enough notice was given to those in these areas before the severe flooding came in. A lot of questions, of course, accompany this visit, including whether or not the president is going to change his stance when it comes to the future of FEMA, which is currently on the ground in Texas, helping the state with the aftermath here.
It's a great point you make, and it does seem to be an administration that's changing its tune slightly on that. I suspect we'll hear from the president on FEMA if he's asked today. And as far as enhancements when it comes to safety and warning, there is a special legislative session coming up in Texas. And there's a call by the governor now to install flood alarms along with other systems in that part of the state. Kaylee, the president, telling NBC News that he would support such a move. We could hear more about that when they are on the ground. They're due to arrive any time now in Texas.
Yeah, and speaking of what the president said to NBC News, he also suggested in that interview that he could be lifting global tariffs on our trading partners to the ballpark of 15 to 20%, up from the current 10% baseline, as he's floating now a 35% tariff on Canadian imports effective August 1st. So we'll get the latest on trade as well this hour. But we begin, as always, with a check on the market. So for those, let's turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Right now, we do have the S&P, the Dow. They're both trading negative, but NASDAQ just turning higher right now, briefly back in the green. Little changed, up by just about half a point. The S&P 500 index down 17, now down 0.3%. Stocks slipping from records as President Trump intensifies his trade offensive. The Dow down 305, now down 0.7%. But again, keeping it all in context, S&P down by 0.8%. NASDAQ back in the red right now, little change, down a point. 10-year yield at 4.41% with a 2-year that's currently yielding 3.89%. Gold is up $28 the ounce. Spot gold $33.52, up 0.9%. West Texas Intermediate crude up 2.5%. $68.27 a barrel on WTI. Bitcoin, big story there. Another record surging 3.4% with a $117,000 handle right now on Bitcoin. Earnings coming up next week. Banks will be front and center. All kicks off on Tuesday. Yes, complete coverage on Bloomberg Television and Radio. JP Morgan Chase among the first out of the gate, down 0.5% right now. Citigroup also reporting Tuesday, down 0.6%. Wells Fargo right now down by 0.1%. So again, recapping tariffs front and center on this Friday. S&P down 16, down 0.3%. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, many thanks as ever. We'll get back to Charlie a bit later on this hour to check on the Friday trade. Sliding our way into the weekend here on Wall Street. Some of that, as Charlie mentions, has to do with tariffs. We're going to get to that in a moment as President Trump and First Lady Melania Trump make their way to Texas. This is going to occupy a good part of the afternoon here as we follow the president on his travels. He'll be meeting with first responders and others impacted by the terrible and deadly flooding of last weekend. It has been still less than a week since this occurred. And Bloomberg's Tyler Kendall brings us up to date on the president's travels today. She's live on the North Lawn at the White House. Tyler?
Yeah, hey, Joe. We are expecting President Trump and First Lady Melania Trump to touch down any moment now, really, in Texas as they're going to tour this damage and then also, as you mentioned, hold this roundtable with first responders and local officials, as the latest estimates confirm that at least 120 people have died because of the tragic floodings and 170 people are believed to still be missing. The White House is really billing this as showing solidarity between the federal and the state government when it comes to the response and the assistance that we are seeing on the ground. For example, we are expecting the Department of Homeland Security Secretary to be there alongside Texas Governor Greg Abbott and the two Republican senators that represent the state in Congress, Senator Ted Cruz and Senator John Cornyn. Of course, as you were discussing at the top of the program, it does come against a backdrop about questions around the future of the Federal Emergency Management Agency, considering that the administration has previously suggested overhauling it or abolishing it completely through some sort of executive order or action, often aligning that view with this idea that this would be a way to streamline government and give power back to the states when it does come to the immediate response to these disasters. Now, there was a report from the Washington Post earlier today that is reporting the administration is moving away from plans to abolish the agency through any sort of executive action. Instead, their reporting indicates that this is going to be billed more as a rebranding, in their words, to give more of a highlight to the state response and how officials are going to respond to natural disasters on the ground there. The White House Press Secretary Caroline Leavitt was asked about the future of FEMA earlier in the week, and she didn't give any firm answer, but she did say that the administration will work to ensure that Americans receive assistance, whether that be state or federal assistance, wherever it is needed. We should say, of course, as you both know, FEMA has really been a chronically underfunded agency, something that really has plagued both Republican and Democratic administrations due to a range of issues, including the congressional funding cycle. Joe and Kaylee.
All right, Bloomberg's Tyler Kendall live at the North Lawn of the White House. Thank you so much. And I would note that the president on Air Force One has just touched down. We do have wheels down now. He and the First Lady arriving in Texas. Of course, if we get any remarks from him on route to the damaged area in and around Kerrville, we'll, of course, bring you them live here on Bloomberg TV and radio. But when the president was departing, Joe, not only was he talking about the tragedy in Texas, he also, on his way out of D.C., was fielding questions from reporters around his most recent tariff threat issued last night, a letter addressed to Canada, and specifically Prime Minister Mark Carney. 35% tariff rate on all Canadian goods is what Canada is now facing, down higher, of course, than the current 25% rate would be effective August 1st. And the reason why, according to the president, is still because of fentanyl. So we want to get into this now with Adam Ferrer. He's Bloomberg Economics Senior Economics Analyst. Specifically looking at the Asia Pacific, which of course we have trading partners in that region as well who have received letters such as these. But those letters, Adam, were different when we think about what Japan or South Korea, or frankly, most of the other 20-something countries who have received letters got. And he's talked about trade deficits and unfair trade, tariff and non-tariff barriers. With Brazil, it's the treatment of former President Bolsonaro. And with Canada, it's fentanyl. There's a difference with these two most recent letters.
There absolutely is, right? The first simply being that neither Canada nor Brazil was receiving reciprocal tariffs as a threat, right? Mm-hmm. And Canada being one of America's largest trading partners, a USMCA partner, has sat alongside Mexico as kind of a separate discussion since the start of the tariff negotiations and kind of the tariff threats at the beginning of the Trump administration. I think what we've seen so far with this recent letter, which I'll admit caught us slightly by surprise for the aforementioned reasons, is just another potential use of tariff threats as leverage, likely in ongoing negotiations. We've already seen slight escalations over the past couple weeks with Canada moving out its digital services agreement and prompting the president to threaten even higher tariffs if that wasn't rescinded. And so Canada backed down on that. And so while this letter emerges as an interesting data point, it doesn't really change the conversation. And I think we saw from Prime Minister Mark Carney not a desire to kind of take the bait, right? He had a cautious response, basically arguing that he would defend Canada, but continue negotiations, again, with all eyes on August 1st or whenever really the president decides to follow through with the tariff itself.
Carney had his own self-imposed deadline of July 21 to have a new economic partnership announced with the United States. I guess that's out the window here. This new tariff would kick in August 1st, right? It's actually not in effect yet. So what happens in the meantime? If this is a negotiating tool that would explain the anvil dropping out of the sky with no warning yesterday, Carney gets something less than 35%, and it looks like he got a good deal.
So I'm not sure the Canadians would see it that way. Yeah. But again, taking a step back, the reality is that Canada sits in its own class. Mm-hmm. The first thing being clear is that the administration, after releasing this letter yesterday, did clarify that goods that receive an exception under USMCA are still exempt, right? And current numbers put the amount of trade that is exempt currently at around 60%. And there's a chance it's going to go even higher with companies looking to find ways in their supply chains to modify a little bit, change some of their inputs, and also just simply do the paperwork to prove that these goods qualify. So Canada has a lot more room there than I think people give them credit for. And the question continues to be, what is the president willing to give, and what is Canada willing to accept? The odds of a deal before August 1st will depend entirely on that question, and we simply just don't know. And I don't think the dates themselves matter. It's a question of what the president wants to do.
Well, and of course, the president doesn't just want things from Canada. There's, again, numbers of countries who have received letters such as these. And the president suggesting yesterday that he could be looking at tariffing most of our trading partners at between 15 and 20% when the current baseline is 10. Adam, what difference would that incremental 5 to 10% make if it becomes reality?
So the first thing is, I think when we go back and listen to part of that conversation he had with NBC, it is unclear whether he is laying out a new policy proposal or actually just kind of riffing on the question of what else they're going to do on tariffs.
Yeah.
The president has on several occasions, particularly when he's talked about what he's going to do about that long list of remaining countries, thrown out lots of proposals, including the letters that we've started to see. So keeping that in mind and the idea that it's unclear that this is a real change, the reality is, though, that even if he were to roll out 15 or let's just call it 20% tariffs on the remaining countries that haven't received letters so far, the impact, at least on average U.S. the average tariff from the United States is quite marginal because the amount of imports from those countries is relatively small. Now, I would say that Nigeria or other countries that would be impacted, I'm sure would feel otherwise, but at least from the U.S. perspective and broader trade, it would be not as consequential.
Adam, thank you. Great analysis from Adam Farrer, Bloomberg Economics Senior Geoeconomics Analyst. You heard about the tomato tariffs, Kaylee?
Yeah, they're coming.
17% Mexican tomatoes starting Monday. So start stockpiling the salsa, I guess. Congresswoman Gwen Moore is watching all of this from her perch in Wisconsin's 4th District. The Democratic Congresswoman is with us right now live on Bloomberg TV and radio. It's great to see you, Representative Moore. Welcome back. Are you stockpiling tomatoes ahead of next week? How do we deal with these tariffs?
Well, I tell you, I do have a tomato plant outside my back door, just in case.
You're doing it right, apparently. How concerned are you about the impact this could have on Wisconsin, of course, a major agriculture state, a major dairy state, as we enter a whole new level of trade war, it seems, with Canada?
Well, of course, I'm very concerned. Years ago, I asked my youngest granddaughter where food came from, and she said, pick and save. So I got worried then. The whole food supply chain is going to be disrupted. Everything from farmers planting their foods to actually people who will need and rely on SNAP. And so this will affect grocers, people who have jobs bagging groceries, the inflation, the cost of groceries, and our farmers. And the only way that this president seems to be able to address these things is to try to provide a subsidy for agriculture workers, or to declare that he is not going to deport Mexican migrants who might be working as agricultural workers. This is a real big stretch in terms of saving our economy and lowering costs.
Well, Congresswoman, I would mention, and our audience on Bloomberg TV as well as on YouTube can see this now, President Trump has just landed in Texas alongside First Lady Melania Trump. They, of course, are now heading into the helicopter, and they'll begin viewing some of the damaged areas in and around Kerrville, Texas, from last weekend's devastating floods. When we consider, Congresswoman, the future of FEMA, knowing President Trump has up until recently called for essentially its dismantling and sending that responsibility back to the states, do you believe that that policy pursuit is one that he will still actively pursue, or could this disaster actually spell a second chance for FEMA as it currently stands?
Well, I guess I wish I could predict what President Trump was going to do, because I would not have predicted that FEMA would have been destroyed when we have seen time and again, whether you believe in climate change or not, the environment be shifty, cause tornadoes, all kinds of 500-year weather conditions. And surprise, surprise, this storm was yet another aggression on the part of Mother Nature and a warning not to dismantle emergency services. I heard President Trump say, I wouldn't have even blamed Joe Biden for this. But I'm telling you that there's nothing like preparedness, and nothing like being able to reach people on several different platforms to warn them to escape. And so I think that it's fine for him to be there with his wife. That's where any president should be. And maybe it's better late than never. But I think that the agony and misery of this community is going to continue long after the cameras are gone and long after Air Force One leaves.
Well, it is pretty heartbreaking to consider 170 people still missing, Congresswoman. Texas is one of many states that has seen an influx in ICE raids. Of course, Texas is a border state and is no stranger to immigration security here. But I want to ask you about some of the raids that we have been seeing, in many cases by unmarked and masked individuals who are purportedly with ICE, or sometimes it's hard to tell, Border Patrol, Department of Homeland Security. You just signed a letter urging ICE to not deport undocumented victims of crime. Did you hear a response from the federal government, from the administration on this? Is there anything your office can do to help them?
No, the response is hopefully forthcoming. There's nothing more frightening to me than think of someone throwing a bag over my head and dragging me away. This is so un-American to not announce which law enforcement agent you are, demonstrating your badge number and that you have the authority to take people into custody. This is very chilling. And I think it's being done deliberately to replicate the tactics of authoritarian regimes. This is totally unacceptable, and it defies people's, I'm not an attorney, but I would think that if you need a warrant, you would at least need to disclose who you are as a law enforcement person. This is totally unacceptable.
Well, Congresswoman, when we consider ICE will be getting more funding along with Customs and Border Patrol due to the One Big Beautiful Bill that just passed and all the various components in it, with the passage of that bill, with the potential passage of now a rescissions package that could very well happen in the Senate, do Democrats have any incentive to deal with Republicans for a government funding deal?
Well, we always have an incentive to do our job if we're allowed to do our job. You know, the thing about the package now is that it's the largest border bill that we have seen in history. And I don't know that it's always directed at the right equipment. Democrats have long been for more electronic surveillance, more human beings to actually evaluate and separate the sheep from the goat, as it were, at the border. We have always erred on the side of more border security, but the building the optics of, putting people, surrounding them by alligators. This is a costly. It costs so much money to, the optics. Like Alcatraz, for example, it costs more money than it's worth in terms of incarcerating people. I think that the overkill is not only bad for people's personal rights, but for our budget.
All right, Congresswoman, we appreciate your time. As always, Democratic Congresswoman Gwen Moore, representing Wisconsin's 4th District, here with us on Balance of Power. And we'll have much more still ahead as we assemble our political panel next. Rick Davis and Jeannie Shanzano will be with us to talk more about that rescissions package I was alluding to. Unclear if it'll pass in the Senate, and if it does, what consequence that may have. That conversation still ahead right here on the Friday edition on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ higher, the S&P and the Dow. They are both trading lower. Stocks slipping from records as President Trump intensifies his trade offensive. Keep it locked into Bloomberg Television and Radio for the latest on any trade developments, with the S&P right now down 14, 62.66, down 0.2%. The S&P on track for a losing week. The Dow down 281 now, down 0.6%, while the NASDAQ Composite Index higher by 13, up by about 0.1%. The 10-year, 4.41%. The 2-year, 3.89%. Gold up $28 the ounce, 33.52. Precious metal up 0.9%. West Texas Intermediate crude 68.40 a barrel, up 2.8%. And a major move now for Bitcoin, up 3.5% at 117,625. Bitcoin trading at a record. Sources tell Bloomberg Performance Food Group has attracted takeover interest from U.S. Foods Holding Corp., a potential deal that would create a food distribution company with combined sales of roughly $100 billion. Shares of Performance, they're up by 5%. U.S. Food right now up by 0.2%. Balance of Power continues now, and back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet in New York checking on the markets for us. Thank you so much. The markets, of course, reacting in part to one Truth Social post we've gotten from the president in the last 24 hours, of course, threatening higher tariffs on Canada, specifically of 35%. But, of course, his musings on social media have not stopped there, as he also issued a warning to Republicans on Capitol Hill, saying in Truth Social, it is very important that all Republicans adhere to my rescissions bill. Remember, this is a $9 billion package intended to claw back funding that Congress had already agreed to spend. He says, quote, in particular, defund the Corporation for Public Broadcasting, PBS and NPR, which is worse than CNN and MSDNC put together. Goes on to say, any Republican that votes to allow this monstrosity to continue broadcasting will not have my support or endorsement. Thank you for your attention to this matter. And Joe, a threat to not support those who do not vote for this really puts a focus on some Senate Republicans who have indicated they aren't super comfortable voting for this package.
As we've suggested more than once, the likes of Mike Rounds, other Republicans who are in rural areas are concerned that a lifeline for emergency information and news could go away here. A lot of these stations do, in some cases, carry material from National Public Radio, which is what they're talking about, but they also have homegrown newsrooms. And after what we're seeing today with the president touring this disaster area in Texas, it does make you wonder if it's worth eliminating them. But this is an easy target, and we talk about defunding NPR and PBS on the regular. The question is, will Democrats be on board? Probably not. Republicans may not be either, though, which is where you're going.
Yeah, but to your point on Democrats, if Republicans ultimately can get enough votes together in order to pass this rescissions package, it could very well complicate efforts to reach an appropriations deal, which is going to require bipartisan compromise. You need Democrats to go along in the U.S. Senate. And the question many Democrats are asking is, why would we do so if you might just recant on the deal and claw back the funding later?
Let's see where the panel's thinking is on this right now as we assemble our panel for this Friday edition. Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick and Jeannie, you're more than familiar with this debate, and we've been getting to this the last couple of days. I just wonder, Rick, at this point, is $9.4 billion worth blowing up a budget deal on, realizing that we've got a fiscal year starting on September 30th. Is it worth it for John Thune to go through with this?
Yeah, look, I think this is all in the context of a much bigger issue. No, $9.4 billion is a nothing burger in government, but this was specifically put together, this package, to highlight, as you pointed out earlier, issues like NPR that Republicans like to rail against. So it's kind of the best possible package of its size. But this is all about the executive branch taking control of the budget that is normally held in Congress. Kayleigh was right. 60 votes to pass an appropriations budget, right? One that the government that Congress has been forced to do in a bipartisan way to get to those 60 votes. But then to do these rescissions, it only takes 51 votes. or even 50 with the vice president voting break a tie. So the president's trying to basically reset that clock and say, you know what, you can do all you want to do on a budget bill, but I'm then going to take just Republicans and skinny it down. We used to call this a balanced budget amendment, right? Where we would say the president should be able to strike things. And that's in essence what he's trying to do. So he can get rid of the same issues that the Congress has had to grapple with 50 votes that they've required 60. And that is more about Democrats and Republicans, because Democrats have to go along if they want to get a budget bill for Congress for the federal budget, but then they can be cut out in the process of doing these rescission bills. And so they see flashing red lights all related to this little $9 billion time bomb sitting in Congress.
So then what are Democrats to do, Jeannie?
Well, you know, Rick is right. This is very much akin to what we used to have, which was the line item veto. That was taken away. The Supreme Court said it is unconstitutional. And this is another way to get to the same end. And it is putting Democrats in a very, very difficult position. Number one, when Chuck Schumer went along last year or several months ago with helping the Republicans keep the government open, he was lambasted for that. Their base under no circumstances wants them to aid and abet, as they see it, Republicans in anything they're doing. And so that is going to be pushing on them very, very hard. And on the other hand, this is a party and many members who have always said, don't allow a government shutdown. It's not good politics or good policy. And of course, what does it say to Democrats that they vote for something that can then in just a few months be clawed back in this manner? And particularly things that are near and dear to them, like, and many of us, like public broadcasting or PEPFAR. So it's a very difficult position for Democrats to be in. And I would just add, with the president down in Texas at this very minute, does any of that reality change his view on this longstanding commitment from Project 2025 and elsewhere about rural communication as it pertains to public media? I hope it does. I will be curious to see what he says after touring that devastated area.
Yeah, same here, Jeannie. It's a great point. Although I'll tell you, I mean, this is something that goes around Republicans and Democrats. Rick, the line item veto. Remember, this was something that Bill Clinton used to talk about all the time. Does it take Donald Trump to bring it back?
I think this is basically the line item veto in absentia, right? Republicans too. John McCain was a big fan of line item veto. Supreme Court says you can't do it, and at least not the way it was constructed when we tried to pass laws around it. And so what this basically does is give the president a line item veto, and yet all he needs in this case is Republicans to give it to him when he passes that back as a rescissions package. And remember, this is $9 billion of $150 billion worth of rescissions that they have loaded up in Stephen Miller and Russ Vought's gun in the White House, ready to punch through the minute they get a green light that something like this can pass. Even the White House didn't give this much credibility to say, there's no way Congress is going to let us do this because it takes away their authority. And yet we are only a week away from seeing the United States Senate either do nothing and kill the bill or pass this and give the White House basically control over the budget process.
Well, Rick, I'm glad you mentioned Russ Vought, because he, of course, gave an extensive interview on another network earlier today, in part talking about this rescissions package and the desire to defund things like PBS. But he also talked about an investigation the OMB is now opening into specifically the Federal Reserve and Chairman Jerome Powell over the cost of the remodel of the Fed building here in Washington. This is what he said.
This is about the renovations that are occurring, the extent to which they are largesse. The cost that we're talking about is now $2.5 billion. If you look at the actual Palace of Versailles, if you were to update those figures for where we, in modern numbers, it would be $3 billion. The Capitol was about $2.5 billion.
actually making those comments to reporters outside the North Lawn of the White House. But Jeannie, as we consider this kind of investigation into the cost of the renovation, into the chair of the Federal Reserve, which I would keep in mind, Pulte of the FHFA has also called for, and the Judiciary Chair of the House, Jim Jordan, suggested to Joe and I earlier, just about a week ago, that he would be considering a congressional investigation as well, or at least looking at that. Is that the way to put the pressure on the chair of the Federal Reserve, who the president at this point has said he's not going to outright fire, but just a different way to make life uncomfortable as he pushes for lower rates?
Yeah, I never considered the Fed chair a Palace of Versailles guy myself. Listening to Russ Vought, he said this many times. I think what we're seeing is an extension of the attacks that the president has been making against the Fed chair for a long time. We know that he has this nickname for him. We know he would like to remove him. He has said he won't do that early, likely because of the impact on the market. And what we're seeing, I think, is a real, concerted move forward on that, with other members of the administration going on the attack in other ways. And Russ Vought is a good example of this. It does put pressure on the chair. Whether that pressure amounts to anything, whether we see him change his mind or take different actions, or whether they are angling to see if there is indeed a way to get him out early, which is what the president would like. And we know there's nothing that Russ Vought and many members of this administration want to do more than please the president. And at this point, I would say removal of Jerome Powell is one thing that would really excite Donald Trump. And I think we're seeing people angling for a way to do that. And this is one way.
It's hard to tell exactly what's going on inside that building, Rick. Russ Vought said in a letter to the Fed chair that there were plans for the projects, including rooftop terrace gardens, VIP private dining rooms and elevators, water features, premium marble, and much more. Sounds pretty nice. Powell, in recent testimony, responded to this. He said there's no VIP dining room, there's no new marble, there are no special elevators, no new water features. He said there's no beehives, no roof terrace gardens. I have to admit, this sounds like something that would be on brand for the Trump White House. The president just a couple of days ago was pointing out all the new gilding that went into the Oval Office and the cabinet room. What seems to be the problem with this?
Yeah, hard to imagine that anybody from this White House would complain about the sprucing up of a federal building. Look, this is all just an effort to try and jam the chairman. And look, my mama always taught me you catch more flies with honey than you do with vinegar. And I guess I got a different mama than Donald Trump, because he has made it harder for him to get a cut in the discount rate than or the interest rates than he otherwise would have had if he'd done nothing. He's making it almost impossible for the chairman of the Fed to lower rates, because it looks like a capitulation. Give him a day off.
All right, Rick Davis and Jeannie Sheehan Zaino. Was that a veiled reference back to the bees that do or do not?
That was pretty good.
Exist,
yeah.
Honey.
Maybe they need a beehive on.
Our political panel here on Balance of Power on this Friday. Thank you so much. We'll be back for more here on Bloomberg TV and radio.
It's 1:41 on Wall Street. We do check markets all day long here at Bloomberg. Developing story. Right now we have got shares of Kraft Heinz advancing by 3%. According to the Wall Street Journal, Kraft Heinz said to be eyeing a big breakup. It's said to be eyeing the spinning off a chunk of its grocery business, and Kraft Heinz split could be finalized in coming weeks. So again, this all according to reporting from the Wall Street Journal. But bottom line, market reaction. Kraft Heinz shares, they're up now by 2.4%. The Dow, the S&P, NASDAQ, all in the red right now. Stocks slipping from records as President Trump intensifies his trade offensive. We've got the S&P down 18 to 62.62, drop right now of 0.3%. Dow Industrials down 278 on the Dow, a drop of 0.6%. And NASDAQ down 13 for the NASDAQ Composite Index, a decline of 0.1%. On a down day for the rest of the market, we do have the Bloomberg Mag 7 Index advancing by 0.4%. NVIDIA up right now by 1.1%. The 10-year 4.41% with the 2-year 3.89%. Gold up $28 the ounce, $33.52. That is a gain of 0.9%. Crude, West Texas Intermediate up 2.8%, $68.44 a barrel, and Bitcoin now up 3.3% at $117,300. GE Vernova is going to pay $10.5 million to the island community of Nantucket after one of its offshore wind turbine blades broke into pieces and washed ashore last year. GE Vernova shares down now by just about 0.6%. Again, we're monitoring a developing story right now. Kraft Heinz said to be eyeing a big breakup, that according to the Wall Street Journal. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet monitoring the markets for us here on Balance of Power. Thank you so much. Meantime, Joe Matthew and myself are monitoring the activity in Kerrville, Texas, where, of course, President Trump and First Lady Melania Trump are visiting today in the aftermath of the devastating floods that have claimed at least 120 lives. We're going to check in with our colleague, Bloomberg's Texas Bureau Chief Julie Fine, in just a moment. But we also wanted to focus on a subject area the president actually spoke about with reporters before departing Washington for Texas. He was talking about immigration, Joe, and a direct quote from the president in his remarks this morning: "We're getting the criminals out, and we're getting them out fast." Now, as we know, a lot of the people who have been arrested as part of these efforts in the administration to arrest and deport people do not necessarily have criminal records, and also their means at getting to these people have frequently been to raid workplaces.
That's true, and this has been a byproduct of Stephen Miller's urging of ICE and immigration officials to increase the number of detentions per week, per month, that are still running below what we saw in the Biden and Obama administrations. There was a big raid yesterday, Kaylee, California, in which tear gas was sprayed at protesters. They were going after a cannabis grow facility, I guess, in Southern California. Footage taken that we've taken a look at show them executing criminal search warrants. They say they got 10 juveniles, 8 of them unaccompanied, found at one of the facilities raided, that all of them were in the country illegally. When we talk about these raids, we discussed this earlier in the hour with Congresswoman Gwen Moore. In many cases, these agents are masked and are wearing plain clothes, making it very confusing for the people who are there. You see a call on social media, citizens come protect the immigrants who are being targeted, and things get pretty ugly pretty quick. And it's part of the conversation that we wanted to have with Wendy Edelberg, who's a senior fellow in economic studies at the Brookings Institution, former chief economist, incidentally, at the CBO, the Congressional Budget Office. We could talk about a couple of things here with Wendy. Welcome. It's good to see you as we consider the impact that this policy is having on our workforce and our economy. When you hear stories like this, the chill could go much further than the people who were at that site. What does that mean for workers?
Absolutely. I mean, so let me first say, I'm coming at this as an economist. That's my lane.
Understood.
So I'll talk about the economic effects, but I think those are dwarfed by just the visceral effect as an American looking at these images. I think that effect is far more important and far bigger than I think what's going to sound like pretty modest economic effects that I'm about to discuss. So with some colleagues, we put out a report not so long ago where we think that it's more than likely that as a result of this immigration policy, we will have negative net migration, which is to say more people leaving the country than entering the country this year for the first time in many decades. And that's going to mean a smaller economy, and that's going to mean a labor market with numbers that are going to be not so recognizable, really startling labor market numbers as we go forward.
Well, and we've seen that in the past several jobs reports when we're thinking of the share of the foreign-born workforce. That number is going down, and it's going down substantially, raising the question of who replaces those workers. Wendy, who does, who can, who's willing to?
So let's first step back a bit and talk about what's probably happening in the labor market right now. So I appreciate that the published statistics are showing things about, share of foreign born and the like. Those statistics, while, I don't mean to impugn them at all, these are large changes that are happening right now, and those statistics are probably not fully catching up with what's happening. My guess, my analysis suggests that the surge in immigration over the past few years is actually still pushing up labor supply. And the reason I say that is because there's a big swath of immigrants that are new to this country that are eligible to apply for work permits. And we have seen a surge in those work permit applications. And while approval rates are down, like for example, between April and May, this administration approved almost 700,000 work permits for recent immigrants. And so I think one of the reasons that we've seen such strong employment numbers over the past few months, on average 150,000, I think that is because labor supply is still being pushed up by the recent surge in immigration, but we can't ride that wave forever, and we're probably just about at the moment that increase in labor supply comes to an end, and we start seeing payroll employment numbers that are closer to like 30,000 a month.
Really?
10,000 a month. In a year or so, we could start seeing payroll employment numbers that are negative, and that will be like a healthy, sustainable, full employment labor market, just with declining labor supply and so declining employment.
So what does that mean for participation and the unemployment rate?
So there's going to be some near-term gyrations.
A year from now, though, to your point, if we're in a negative growth on payrolls, what's the rest of the job market look like?
So I think the rest of this is going to be the cognitive dissonance, the thing that's going to be really hard about understanding the labor market that this policy has created. It could well be that we have a healthy labor market, an unemployment rate that starts with a 4. Labor
starts with a 4.
Starts with a 4. It could be a nice, healthy labor market, but just we have a shrinking labor supply, and that just means shrinking employment. There are other economies.
Are wages through the roof in that world?
For a time, I think that there will be near-term gyrations. We're going to see stronger wage growth in some occupations, stronger wage growth in the agricultural sector, stronger wage growth for home health workers. But I think other parts of the economy, and particularly some cities, some areas, are actually going to see big reductions in consumer demand. We're already seeing this in some areas where we're seeing, big raids on immigrant communities. And businesses there are complaining that they're seeing much less demand for their products. Those businesses are going to lower their prices. They're going to lay off workers, and you're going to have deflationary effects.
Wow. I want to focus on the labor supply issue you're referring to, because we know there are people on the sidelines in this. That's why we don't have a full labor market participation. The Ag Secretary, Brooke Rollins, suggested in an interview this week that if you take the agricultural sector, for example, and the workforce that may be lost by migrants, that there are people who could replace those workers, people who need to work in order to be eligible for Medicaid. Do you expect that actually is a dynamic that will take place, that kind of changes to how you're able to access Medicaid could bring people off the sidelines?
So it's the theory of the case. I mean, I'll say there's a lot of economic analysis that suggests that if you make people poor enough and desperate enough, they will work. So I get it. If we decimate the safety net, we will increase labor supply. I don't know that it will happen nearly enough to replace the, hundreds of thousands of immigrants that we're talking about no longer being in this country or not coming. And And I'll also say one of the reasons why I'm skeptical that this will be a huge effect is that the labor market has been quite strong for some time. And it has been a pretty good time to get a job. And we've seen stronger labor force participation among some groups, but not those groups have actually largely been women who have increased their labor force participation rates. There's some excellent work coming out of the Hamilton Project at Brookings showing that labor force participation among women has been particularly strong. Even this strong labor market has not been enough to get these prime age men off the sidelines. So I'm not sure that incrementally stronger wage growth is going to have some cataclysmic effect. But yes, if you make people desperate enough, they will work.
All right, Wendy, really great to have you. Appreciate the conversation. Wendy Edelberg, Senior Fellow in Economic Studies at the Brookings Institution and former Chief Economist at the Congressional Budget Office, here with us in Washington. Much appreciate the time. Of course, no longer in Washington, at least for the remainder of the afternoon, is President Trump, who departed Washington earlier today and has actually just touched down via Marine One after Air Force One landed in Texas earlier in Kerrville, Texas, where he will be surveying some of the damage in areas affected by last week's devastating flooding. And of course, we'll be meeting with state and local officials participating in a roundtable this afternoon in the aftermath of this tragedy, with more than 170 people still unaccounted for. We want to get the latest and turn to our Texas bureau chief. Bloomberg's Julie Fine is joining us from Dallas. So Julie, just walk us through, if you could, what we expect to see from President Trump's visit this afternoon.
Well, you already saw him with the governor, with the senators, clearly trying to show unity in this situation. Now he'll sit down with a roundtable and he's going to get a briefing, and he's really going to learn firsthand. I mean, he's gotten the briefings at the White House. He's gotten the briefings from FEMA. He's gotten all these briefings, but he's going to really sit down and get a real look into what's happening in Texas and what's going to happen for a long time forward. This cleanup should take a very, very long time. A disaster declaration was declared for several surrounding counties today as well. He's going to really see the work ahead. Then he will go and actually tour the damaged site, which, you know, the media's been through now. You've seen it from the air as well. It's devastating. You will see cabins. You will see really debris that a human being is very hard to fathom. So that's what's ahead today.
You wonder exactly how that's going to affect the president and the first lady, for that matter, when they see it, Julie. There has been a call for flood alarms to be put in this area. It's not the first time we've heard this, but Governor Abbott, who I know you're in contact with, is calling for this to be adopted during a special legislative session. President Trump telling NBC News he supports that. Will it happen?
I think it will happen in this session. I mean, I think there will be a little back and forth with the details involved with it and the actual funding of it. But when you have the governor and the lieutenant governor on record saying we are going to get this done, you have lawmakers in just about a week now, it will be very difficult for them not to take some very serious action in the aftermath of this.
Well, and when we consider the aftermath of this and how it's going to inform policy decisions, not just in Texas, but federally going forward, Julie, as we have questions around what the administration's intention is when it comes to FEMA, is there a sense in Texas that this, the aftermath of this could be properly managed by the state alone, or is it necessary that FEMA is on the ground there right now?
Well, I'm certain that they want FEMA here right now. I mean, I saw a local official the other day saying simply anybody that wants to be here that can volunteer and help, we want you here. So certainly FEMA being here is going to help in the aftermath. You have to look at, Joe and Kaylee, how much money and support is going to be needed for such a long period of time. I mean, the Hill Country is an extremely popular destination for people in the summer, but there are also people that live there. There's also an economy. It's 55,000 people, so obviously not a huge city, but there's an economy there that is going to need to be rebuilt essentially outside of the city. So FEMA definitely will be needed. I imagine the governor will be reaching out as well. Now, Texas does have a very large response. Sadly, this is a state that's had to really manage quite a few of these type of tornado type rain situations because of the weather here and the topography.
Julie, thank you so much for the great reporting. Our Texas Bureau Chief, Julie Fine, the president will be there for about 3 hours soon to sit down at a roundtable with first responders. We'll keep tabs on it. We'll have a lot more for you in the late edition of Balance of Power. That starts at 5 p.m. Eastern. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily on this Friday, July 11th, 2025. I'm Tim Stenivek, along with Bloomberg News equities reporter Nora Melinda. She is in for Carol Massar this afternoon. Nora, we are off of all-time highs thanks to some concerns about trade.
Most definitely. I mean, I think that's really what's been the focus this entire week. The headlines can't stop. But what's interesting to me, the S&P 500, the worst performing sector right now, is healthcare.
Well, we got a healthcare story coming up at 4:40. That's called a deep tease. Coming up, though, over this hour, trade certainly front and center. Josh Wingrove going to be joining us in just a few minutes. He's our senior White House correspondent. Also focused on how Vietnam was caught off guard by President Trump's recent announcement about a so-called trade deal with the country. Also, is there, quote, complacency in the market like Jamie Dimon said yesterday, Nora?
I mean, there could be. Let's see what people are saying here.
Also coming up, speaking of stocks, we're going to speak to the CFO of Levi's as shares surge post-earnings.
And an update on the war in Ukraine as President Trump teases a major announcement.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Good day to you both. We are looking at gains right now for the NASDAQ Composite Index, while a slump for both the Dow and also for the S&P 500 Index. So here's where we stand right to the numbers here. S&P down 13, now down 0.2%. NASDAQ, though, swinging between gains and losses, looking at an 8-point gain right now. We've got the Dow down 252, drop there of 0.6%. Stocks slipping from records as President Trump intensifies his trade offensive. The Bloomberg Mag 7 Index on a down day for much of the market is gaining by 0.5%. NVIDIA pushing higher as well, up now by 1.2%. 10-year 4.41% with a 2-year currently yielding 3.89%. Gold up $30 the ounce. Spot gold up 0.9%. West Texas Intermediate crude up 2.8%, 68.47 a barrel. In the meantime, we've got Bitcoin surging another 3.7%, a record there at $117,750. Briefly, ExxonMobil borrowing crude oil from the Strategic Petroleum Reserve due to quality issues in crude supplies coming from the Gulf of Mexico. And Kraft Heinz said to be preparing to split off a chunk of its grocery business into a new entity, that according to the Wall Street Journal, citing sources. Recapping, S&P down 13, drop there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. One thing I will add that we are paying attention to this afternoon is President Trump's schedule. We are expecting to hear from the president as he tours the devastation in Texas. When we do hear from the president, we'll bring you those comments live as soon as he does start to speak. In the meantime, I mentioned trade certainly front and center, and it's front and center for markets because President Trump threatened a 35% tariff on some Canadian goods. He also raised the prospect of increasing tariffs on most other countries, ramping up his trade rhetoric and comments that weighed on stocks and boosted the dollar today. Separately, our Bloomberg News team was the first to report that Vietnam's leadership was caught off guard by the president's announcement of a 20% tariff. That's according to people familiar with the matter, and that the country is looking to negotiate down that rate. Josh Wingrove is a part of the team that had the exclusive. He's Bloomberg News senior White House correspondent. He joins us from Washington, D.C. Josh, I want to start with this Vietnam story because the president announced last week that Vietnam had agreed to a 20% tariff. Did this come as a surprise to the leaders of Vietnam?
It seems to have come as a surprise to them, and it seems that this deal that the president announced is actually maybe a little bit closer to these tariff letters in that there's a unilateral element to it. It looks like the Vietnamese were hoping for a number, several points below that one, and the number 20 caught them off guard. Our colleagues there saying that this deal, or if we're calling it that, this announcement of the president, the U.S. president, has not been amplified by Vietnamese state media particularly heavily. So it remains a little bit unclear. Now remember, this is the only deal with one of the countries that was facing a potential tariff hike this week, about the nearly 6 countries. He also has sort of a framework deal with the UK itself, had some questions. And of course, they've got that deal with China to essentially keep talking. So, the deals just really aren't materializing. Now, Trump himself has said he's not particularly stressed about that because he simply wants to set unilateral rates anyway. So whether he'll do that or not, we will see. But there have been a lot of developments here on trade this week in the past 48 hours or so. But the Vietnam one is a reminder that even the things that they do announce as deals come with all kinds of caveats on them.
Mm-hmm. Definitely a lot of news that we're getting this week as it pertains to tariffs. But Vietnam here, can you just put into context here for our viewers, how big of a trading partner are they for the United States?
They're a major trading partner in the United States, and they were sort of a bellwether because there have been long-standing, and I mean pre-Trump administration and bipartisan concerns about what's called transshipment, essentially the Chinese routing stuff through Vietnam to get around whatever tariffs are applied to China. So they were sort of a test case. Hey, how are you going to deal with this? And what Trump announced was essentially a double tariff for transshipped goods and this 20% rate for all other goods. And that, you know, there's still some questions swirling about that, including whether, you know, it would include sort of roll in previous tariffs or not. And that, the Secretary Bessent was asked about that earlier this week. But it really does look like it's, let's say, more fluid than not. And so that, of course, hangs in the air as we look forward to these China talks. Secretary Bessent, Lutnick, USTR Jamieson Greer, we're expecting a new round of China talks, they said, early next month. But it also looks like Bessent and Lutnick are going to Japan, where they could perhaps cross paths with the Chinese or even pick up the talks with the Japanese, which themselves are having problems right now in those negotiations. So lots of moving parts here right now. But remember that market shock on April 2nd when President Trump announced these Liberation Day tariffs, initially rolled them back amid that market fallout about a week later. Right now, we're sort of barreling towards another Liberation Day in a few weeks.
And you know, we're going to be speaking to Ann Maletti exactly about that point, Josh. As some folks have said, it doesn't seem like the markets are really taking that August 1st deadline seriously. You said there are a lot of moving parts here. Certainly just in the last 10 minutes, we're getting another headline that the U.S. is working toward an interim trade deal with India that could reduce its proposed tariffs to below 20%. This according to people familiar with the matter. And it puts the South Asian nation in a favorable position against its peers in the region. Our Bloomberg News team reporting that. Back to Vietnam, though, because you and the team on this story reporting that Vietnam is looking to negotiate that 20% lower to maybe the 10 or 15% so level. How exactly would they do this? Like, what do you think the president wants to see, and what concessions could Vietnam make?
Your guess is as good as mine, because the way President Trump has announced it, and again, we don't know that the Vietnamese agreed to this, was that they agreed to open their market to U.S. goods, full stop. And therefore, that's kind of what he's looking for. It's hard to imagine offhand what kind of other carrots they can put on the end of that stick. Now, of course, they want a lower rate. Trump has really not been, you know, horse trading. There's not really been an indication of that. And you mentioned in the top about this sort of musing about setting a higher floor. That is one of the biggest questions I had this week. He told the NBC yesterday, hey, we're looking at maybe 15% or 20%. We don't know whether he meant just for these countries, about 5 dozen, the ones where the U.S. has a goods trade deficit. Is he talking about those, the ones that have been paused at 10%? Are they going to go up 15? Or is he talking about everyone? He's talking about every country, including ones where the U.S. runs a trade surplus, and including ones that are like friends, like Australia, the U.K., that kind of thing. And if that's what he's talking about a very widespread increase. And not to drone on too much, but last night we had the Canada development, that letter on to Canada saying he'd raise the rate to 35%. Really important caveat here. Right now it's a three-tiered system for U.S. tariffs on Canada. 25% for a lot of products, 10% for some energy products, and 0% for USMCA compliant goods. That's Trump's reworked NAFTA from his first term. We are told that the 35% rate is poised to be applied only to that 25% rate. The 10 would stay where it is, and the USMCA would remain with its carve-out as of now. That's the expectation, but our sources cautioning us that this is a fluid situation, and as we know with Donald Trump, anything's possible. But the Canada one also came a bit out of left field last night, but it does look potentially like a more targeted increase of that tariff than perhaps other scenarios where it was sort of an across-the-board 35.
Josh, sticking with Canada here, I mean, of course, this 35% threat for tariffs here would be really huge here for Canada. Is Mark Carney doing enough? How much stake do they really have in the game, and how much progress is President Trump making here?
Carney has been more private in his negotiation tactics than his predecessor, Trudeau, and we'll see. The Canadians, when Carney and Trump met at the G7 last month in Alberta, Carney set a public sort of 30-day deadline that we're kind of coming up against in a week or two. The Americans never said that deadline. They never published it. It's not in writing like the July 9th and August 1st deadlines are. And so it's unclear whether or not they're still trying to reach something by then. Now, of course, Trump has put this August 1st date on there. If all that's happening on August 1st with Canada is that the rate goes from 25 to 35, but other things don't change, it's not clear how Prime Minister Carney will react and whether he'll have much incentive to, give stuff in return to try to haggle to a lower rate. I should note, of course, Canadian public sentiment is very sour People are upset there about how the country is being treated, a major trading partner of the U.S. And so the political push for Carney is not so much to bend the knee and make a deal, but arguably to do the opposite, to dig in and play tough with Trump.
Josh, we are bringing up live pictures of President Trump right now. He's touring the devastation in Canada. He's there with the First Lady. He's also there with Governor Greg Abbott of Texas. I'm wondering about the unanswered questions that you still have. You know, we've gotten quite a few letters this week from the president about trade and about different tariff rates on other countries. You and the team have reported on Vietnam and on Canada. Going into the weekend, what's the unanswered question that remains for investors who are watching this and really for the global investing audience?
I mean, if you squint, you can look at these tea leaves in sort of two completely different
All right, guys, I'm free.
One, we don't have details on the EU. The China
We lost our volume. We need a 3-bar average of 3,000 to stay in business here on the ES. We're below that. We did have an order block just fire.
If all those dominoes fall that
So
way,
maybe we come back, test the order block, and go higher. Maybe.
The flip side is if you just keep
But without enough volume, it's tough. You can't really do anything. That's why we're grayed out.
like with Vietnam that maybe the other countries balk at, then we could just have an August.
We look at the NQ. We still have enough volume on the NQ to do some action. We did get the order block fire here. So maybe we retest the VWAP, respect the order block, and go higher. You know, let's just see. Right now, we got a huge forecast cloud. So even if we drift down a little and the control EMAs cross and we dip down to the 20 or the 50, we still got more buying volume than selling volume. So we got to be careful. We're kind of drifting sideways here a little. You see here the forecast cloud changed. You got the cross, then you got your, you got your run down to the 200 almost. Maybe that can happen. Well, I mean, you need the forecast cloud to close up before you look at the short. So that's the NQ. Yes. I mean, we're in a no trade condition, so I'm going to let it drift by. I got about another hour. Trade box turns off at 3:20 Eastern New York time. Unless you want to gamble on MOC, mandatory order close, and the end of the day.
What is the difference?
I don't like taking a trade after 3:20. Maybe a few minutes after if it's really good, and everything's perfect. But if you start entering trades after 3:30, you're basically gambling on MOC. So we're going to try not to do that. I'm not saying I've done it a million times, but you know what? That's just reality of what it is. So let's give it another 15, 20 minutes, another 4, 5, 6 candles, and let's see what it looks like and if there's another entry before the end of the day.
Going on behind the scenes.
So it sounds like you're saying the market is not fully pricing in a hard and fast deadline of August 1st.
Probably not a hard and fast deadline, and probably not peak tariff rates either.
Mm-hmm. And when I'm looking at the VIX index right now, we saw it surge up about the 52 handle back in April. And if you look at it now, it's about 16 right now. Yeah. But I mean, of course, people are really looking to see whether or not it'll rise to 20. At what point would you raise an eyebrow and say, hey, the market is really nervous about what's going on right now?
Look, I think volatility can still exist. And I wouldn't be surprised if we woke up next week and we get a sharp rise in volatility because of some announcement that we're not thinking about today. I mean, typically those sharp rises in volatility happen because of something unexpected. The one thing I do have to say that I feel a little bit better about more recently is the breadth that we're seeing in the market. And instead of that broad or that intense, deep concentration in just a handful of names, you're kind of seeing positive performance out of almost all industries in the S&P, and more broadly even down cap. And within those industries, you're starting to see companies with good fundamentals starting to act more favorably. And that's a healthy sign. And it shows that there's, to the point of complacency, I think there's some real work that is being done to really look at company fundamentals and try to position where you want to be for the next, event.
So if you look at the market from New Year's Day to now, it's almost like we're in the same place. So much has happened in between, but we're still flirting with all-time highs here. But that being said, I won't necessarily ask you where are the safe haven areas, but where are the areas for opportunity right now? What are you telling your clients?
Yeah, it's a great question, and it's a question we get asked often, right? So I always think about it as risk versus reward, and I would say from a market cap standpoint, I really like the kind of the mid cap space. So not all the way down to small cap, but that mid to small area. There's still a lot of names and companies that have continued to perform well, especially ones with strong balance sheets, experienced management teams, and companies that can kind of control their own destiny, have a lot of flexibility, even given all the changing kind of rules and things happening around them. That's a sweet spot in the kind of size space. In terms of industries like healthcare, I see a lot of our investment teams taking interest there, but not out of the typical, healthcare services, drug areas. Underneath, if you think about where the next layer of innovation is going to come from, how are we all going to get healthcare a little bit more efficiently and in a new probably way? There's a lot of companies that are exploring and interested in that area. And then lastly, from an asset class standpoint, I think emerging markets and international space is really interesting here.
Just 30 seconds.
Yes.
Help us look ahead to the bank earnings next week. We heard from Delta yesterday, Levi's yesterday. Solid reports, stock higher as a result. Good start?
I think it's a good start. And I think, we're going to see some volatility within earnings. Not all things will be created equally. And this is where I think active managers really do. This is where all the work comes out to play, right? Where, in this environment, some companies really can adjust quickly and others just can't.
Anne Maletti, good to see you. Thanks so much for joining us. That's Anne Maletti, Head of Equity Investments, also Chief Diversity Officer over at Allspring Global Investments. A redhead crossing the Bloomberg terminal just moments ago. JP Morgan tells fintechs they have to pay up for customer data. The company is going to start charging fees amounting to hundreds of millions of dollars for access to their customers' bank account information. It's a move that threatens to upend the industry's business models. For more on that, check it out on the Bloomberg terminal and at Bloomberg.com as well. Also, taking a look at what's happening in Texas right now. The president, the first lady, and Governor Greg Abbott are touring devastation in Kerrville, Texas as we speak. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. Actually, the NASDAQ Composite Index now swinging between gains and losses. Right now, we're looking at an advance of just 1 point on the NASDAQ Composite Index. The S&P down 16, drop there of 0.3%. The Dow down 292 for the Dow Industrials, a decline of 0.7%. 10-year at 4.41%, the 2-year 3.90%. Spot gold up $33 the ounce, advancing 1% to $33.57, while West Texas Intermediate crude up 2.7%, $68.40 for a barrel of WTI. Bitcoin surging, up 3.5% right now, trading at a record. We've got Bitcoin at 117,587. Bottom line here, equities slipping from records as President Trump intensifies his trade offensive. NASDAQ now higher by 7 points, the S&P lower by 0.2%. Levi Strauss shares, they are surging 10.8%, this after raising its revenue outlook. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Let's talk about shares of Levi Strauss, jumping as much as 12.5% earlier in the session, up about 11% right now. The company raised its revenue outlook. It said yesterday that it expects sales growth to outweigh the effect of President Trump's tariff. Back with us is Harmeet Singh, Chief Financial Officer and Growth Officer at Levi Strauss. He joins us from our San Francisco bureau. Also with us is Bloomberg News Senior Editor Nina Trentman. She writes the Bloomberg CFO Briefing newsletter. You should sign up for it if you haven't already. Bloomberg.com/CFO-briefing. Harmeet's going to be featured in an upcoming issue of the CFO Briefing newsletter. Nina's here in our studio. Harmeet back in San Francisco. Harmeet, welcome back. I do want to start with tariffs because your team said yesterday that the impact of tariffs on profitability, excluding the mitigation efforts, is expected to be between $25 and $30 million through the end of this year. What happens, though, if the high tariff level persists into next year? What happens to that number?
Hey, Tim, good morning. Nina, good morning. It's good to be talking to you guys from your Bay office here in San Francisco. As you saw and heard yesterday, we delivered a Q2 beat, and we raised our full year guidance. A special shout out to our teams around the world for what I call delivering the power of the and, which is not only growing our direct-to-consumer business, but our wholesale business, growing our U.S. business and our international business, growing men's and women's, and I can keep going on. And that really explains the momentum we have. We delivered our third consecutive quarter of high single-digit growth and growing our profitability. And that is why we believe that we are stepping into the second half. We believe we can manage through the uncertainty of tariffs. The tariff situation is fluid. We assumed an incremental 10% on tariffs from the rest of the world and 30% from China. Our view is we are competitively in a better spot to manage through this. 60% of our business is international. We have a fairly diversified supply chain, and we've been agile over the years in managing through some of the uncertainties. We've got some mitigation actions, Tim. We are working with our vendors. A large piece of our growth is driven by higher volumes, and that makes a difference when you're negotiating with our tenured relationships over the years. We are driving higher full price sales because our product offers are working, and we are targeting some pricing actions with minimal impact to the consumer. To your question about 26, we are working through that. Some of the mitigation actions will continue. We believe the brand momentum continues. The brand has never been stronger. This year, it's all about center of culture, driven through music. We've got a partnership with Beyonce. We've got a partnership with different musicians around the world. Think Diljit Dosanjh in India. Think different influences in Europe, etc. Next year is about
maybe I can
sports.
jump in there quickly. We'll ask about the music partnerships in a second. Just wondering, in terms of earnings, of course, an interesting thing is happening right now. We were expecting tariff clarity by July 9th. Now we're hearing from the White House it's going to be August 1st, and that won't be moved. But of course, you are on the lucky side that you have already reported earnings. Still, at the same time, you gave an outlook. You provided commentary about what you're thinking about the future. And you're doing that in an environment where we're hearing tariff announcements from the White House basically on a quasi-daily cadence. How confident and comfortable can you be as CFO to provide forward guidance at this point, given that the tariffs are still such a moving target?
Yeah, a couple of things give us confidence, Nina. Number one, the momentum that we're entering the second half. It's been sustained over the last 3 quarters. The second is our product offers. The consumer so far has been resilient. Our customers, our wholesale retailers, are still buying our product, especially our new product. And because we are a global company, international, for example, has been fairly strong. So as we manage through the uncertainty, we are trying to do it thoughtfully. We don't take anything for granted. Our view is you've got to continue to earn the trust with our consumers every day. And, especially in moments of crisis, consumers tend to gravitate to brands that are relevant and also, brands they trust. And, because we have been around for 170 years, navigated different crises, that's really been the genesis of why we think we can manage through it. We talked about the impact. We talked about actions that we're taking.
All right, if you see this chop,
and more importantly,
this is due to the volume being so low.
I mean, yesterday after earnings,
here we go.
News about certain
We just
tariffs,
averaged
we went
back in.
and game planned.
I have no idea which way this is going to go. I'd be careful. I mean, in my mind, we're due for a short, but
the agility of our supply chain and our teams around the world. And, let me pause here. I hope that addresses your question.
Yeah, Harmeet, you
mean,
mentioned
EMAs
a
are about to
music partnership
cross.
that we, of course, all
The
know,
cloud is
Beyonce,
closing up.
And this was a really major deal for Levi Strauss. I mean, you
But
mentioned the brand being relevant.
I don't know.
I was just at the Cowboy
I'd be
Carter
careful
concert
either
on
way,
Friday, and I looked
unless
around,
you've
there's
got
Levi's
something.
everywhere. How influential was this partnership
Unless you've got
with
something
the
that
company, and how much of an impact
That gives
did
you
it
the
have on
edge
sales?
right now.
Yeah, it's been really important. We have
Same
had a
on the
relationship
NQ.
with Beyonce for decades.
It's getting
She's
tight
an
on the
icon.
NQ.
She's in the center of
It's coiling
culture,
tight.
and we are just privileged and honored that she chose us for this partnership.
This could easily blast
It's had
off,
an
or it could,
impact. Our women's business is on a roll. We have doubled the business over the last many years. The partnership really accelerated there. We are nowhere near done. We think we can double our women's business. Our women's business is about a little less than 40% of our business. When I joined the company 12 years ago, it was about 20%. We think that our women's business can be about, half our business. And I would say the partnership is important. Her styles and what she's wearing, you see the products right now on the screen. They're selling really well. Take the Beyonce hat. I was in Europe, early June, and I was hearing stories of consumers wanting to wear and shop the hat and the product before they went to the Beyonce concert. They come to our store. We have store managers who help customize the product. Emily, who runs our store in Regent Street, is a great example. And so, from my perspective, building and coming up with these memorable moments for our consumers is what connects us with our fans and makes a big difference.
We should note Harmeet Singh, who we're speaking to now, is Chief Financial and Growth Officer at Levi Strauss. If you're listening on radio, he's dressed head to toe in Levi, but he's not actually wearing the Beyonce hat right now. So next time he joins us, he can shoot for that, Nina.
I'm sure he'd look great in it.
Yeah.
Harmeet, you talked about the importance of your supply chain. I'm curious to see what you're hearing from suppliers. We've seen about a 10% decrease in the dollar against major currencies around the world since the beginning of the year. Are you seeing any demands from suppliers to be paid in local currencies to not carry some of that currency volatility that has come with the dollar?
Yeah, no, we have tenured relationships. We source from about 28 countries. Relationships are deep, have been there for a long, long time. Currencies go up and down. There are times when the dollar is weaker, there are times when the dollar is stronger. So, and I think our suppliers, our vendors and our partners are used to that. So we're not seeing any pressure to change it into local currency. because people have lived through, pieces. The more important thing is what goes into the production and manufacture. Cotton is a big piece, and cotton as a commodity has actually traded down, and that also helps offset some of the currency pressures. And because volumes have been a big piece of what's driving our growth, and we're thinking long, and and we believe we can sustain the growth at mid-single digit over a period of time. I think that's what helps us ensure that it's a win-win both for our manufacturers and vendors as well as the brand. And so I think that's how we're dealing with it, Nina.
So while Levi is focusing on direct to consumer, the wholesale channel is also growing, right? What kind of retail is specifically doing well for the company? Department stores or more so e-commerce?
Yeah, so it's the magic of the end. It's great to see our stores perform well, our e-commerce perform well, and wholesale. And, I mentioned jokingly within the company, it's a great trifecta on
I agree,
DTC.
Ladioff.
We have a growing
I think
comp
it's
sales.
just
We
going to
just
drift
reported
around and chop
13
people up. I
consecutive
think
quarters
I'm
of
with
comp
you. I
sales
don't think
growth.
I'm going to do
We're
anything till
opening
Monday.
doors, so we're, increasing our market reach. We have 3,200 doors
I
right
agree.
now. We're adding 50, 60 a year. And we're growing e-commerce in the mid-single digit. Beside all this, wholesale is also growing. And where DTC first really helps, Nora, to your question, our wholesale customers see the new product, which is introduced in our direct-to-consumer stores, see how the performance is doing, and in a lot of cases is working. And that gives them the confidence to buy into the product. So wholesale customers are growing largely because DTC is growing. They're seeing the product introduction. They see things working, and that makes a big difference. And also with our wholesale retailers, our relationships have been here for a long, long time.
Harmeet, we only have 30 seconds left, but given the tariff uncertainty, are you having serious discussions about moving any production or more production, or any production, to the United States?
No, Tim. 98% of all apparel sold in the U.S. Is actually imported. So, that's not a conversation that's happening. We believe long-term the tariff uncertainty will clarify and settle well, where the consumer in the U.S., doesn't bear the cost of the incremental tariffs. And companies like ours, different apparel companies, continue to grow their businesses in the U.S.
Harmeet, always good to see you. Thanks so much for taking the time and joining us on Bloomberg Business Week Daily this afternoon. That's Harmeet Singh, Chief Financial and Growth Officer at Levi Strauss & Company. Also, Bloomberg News Senior Editor Nina Trettenman. She's the author of the Bloomberg CFO Briefing newsletter. You can sign up for it if you haven't already at bloomberg.com/CFO Briefing. Coming up next, earnings on our radar, so too what's happening in geopolitics. That's next.
Hey, what's up, water bottle? How you doing, man? You trading futures today? Not sure we're going to get any more action today. We got about 45, 50 minutes for something to frame up, but we're kind of drifting sideways right now. You're looking at the ES, S&P 500 futures. You a trader or are you looking to learn? All right. Hey, I just had a quick and random question related to futures. What would you think of me trading a contract of MES for the long term, like 10 years? And I would have a bunch of extra capital in my account so I don't get liquidated. This was just a random thought from my head. And do you think this could work over a course of 10 to 15 years? Okay, so you want to open a brokerage account with cash. Enter a trade in the MES and not exit it for 10 years. I guess you could do that. Yeah, I guess you could do that. I would talk to the brokerage just to make sure, just to figure out what their rules are. I don't know why you couldn't if it was a cash. I've been in trades for 3-4 weeks at a time. And as long as I had enough money in there not to get liquidated, I was fine. But maybe, I might not go 500 to 1 leverage, maybe go 30 or 50 to 1 if they'll allow you to, put more money up front.
Down Friday right now with the S&P 500 index lower by 12, drop there of 0.2%. Traders and investors certainly keeping an eye on the latest tariff developments. We've got the Dow
with 6,000 points over 10, on one MES. MES pays $1.25. Say if it doubles in 10 years, that's 6,000 points, 24,000 ticks. It's like $35,000. Something like that, maybe. On one MES.
$3 the ounce, now higher by 1%. Gold 33.57. West Texas Intermediate crude surging 3%, 68.
Have you ever traded before?
And Bitcoin up 3.5% to a record 117,520. A group of Microsoft investors is pressuring the company to assess how effectively it identifies customers who misuse its AI tools, a push that follows reports detailing the Israeli military's use of Microsoft software during its war in Gaza. Microsoft shares up now by 0.6%. Recapping, S&P down 12, drop there of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. I want to get to the latest on
I'm
Russia's
just
invasion of
investing in
Ukraine.
some
North
stocks for the
Korea
long
is
term.
now
I was
supplying
just
as much
thinking
as
anyways to make a
40%
little
of
more.
Russia's ammunition for the war in
Well,
Ukraine.
I mean, I don't
As the
know.
partnership between
I don't
Pyongyang and
think
Moscow
you could
deepens.
lose.
This is according
I
to
mean, the
head of
market's at a
Ukrainian
historic
military
high right now. If we get a
Separately,
pullback,
President Trump
you're
said
probably
plans
going to
make
get
a, quote,
liquidated.
major statement on Russia as the U.S. prepares to send more
I
American
mean, I
weapons
don't know
to
how much
Ukraine.
money you want to leave in
Also,
there.
President Trump's special envoy to Ukraine, Keith Kellogg, will arrive in Kyiv on Monday and
You
spend
know,
a
we
week
could
in
pull
Ukraine,
back
according
1,000
to a report from the
points.
Ukrainian
You know, you
news
just
site Novinai Live. Nick
you got to
Wadhams is
really
with
kind of
us.
think
He's
about
a
what
Bloomberg
you're
News
doing.
national security team leader. He's usually based in Washington, D.C., but he is
You know, if
here
this
in
tariff
New
this
York.
tariff
Nick, I wanna
stuff is
start
not
with
settled.
what we heard late yesterday. This quote major statement on
Yeah, SM is right.
set to come on Monday. Do you have any idea what
Futures
this
is
will be?
not an investment.
We have some
But
suspicions. Of
if
what
your
may
idea
be. We have
was
seen
to
in the
hold
last
it for
couple
10
weeks,
years,
the president has dramatically shifted
that would be
his
an
tone
investment, but
toward
you got to
Vladimir
make sure you
Putin.
don't
So
get
whereas he had
liquidated.
previously been effusive in his
And what I'm
praise
saying with where it's at
of
now,
the president and really
if we get some
condemning President
bad
Volodymyr
tariff
Zelensky in
news,
Ukraine, he's now
the
shifted and essentially said
ES
he's
could
run
rock
out of
back
patience
6,
with
7,
Vladimir
800
Putin
points over
over
a
the
day
fact
or
that he
two.
has refused
And
to
I don't know
stop
how
the
big your
bombardment of
your
Ukraine.
liquidation
So it could be a
account would
couple
be,
things.
but you're
One could
probably
be
going to get
sanctions.
liquidated.
He's talked favorably about a bill.
If you
working
think you're
its way
just
through
going
the
to put
Senate.
$100 in there and be able to hold it,
Well,
that's never going to
the
happen.
bill would go after sales of Russian oil. So they imposed this price cap that allowed Russia to sell some oil. Basically, they wanted to restrict oil but not tank the oil market. So there is the possibility that they would ratchet that up. So that's the big one. The other is the possibility that he'll really open the floodgates on weapons.
You got to
So
make
he
sure
has
that when
not
you close
sought
your,
more money
like if
from
you close
Congress,
Ninja Trader,
in
you
his
know, it may
second
close,
term,
it may
to
close
provide
the.
more weapons to Ukraine. A possibility.
I don't
that
know,
he'll
man.
say- we know he's more.
I'd have to
favorable
look
toward
more
the
into
idea of
it.
Sending weapons, so he may say we're going to put some money where our mouth is on that.
But is that politically tenuous for the president, given the, especially during the campaign, there was this idea that, okay, if Democrats win, we're just going to keep sending money and weapons to Ukraine. There's also this wing in the Republican Party that's like, hey, this is not our war to be fighting.
Well,
Yeah, I
mean,
don't
it's-
see why
it's-
not.
the-
I'm
the
sure,
politics
yeah.
of it aren't really clear, but you have this sanctions bill.
You should be
in the
fine
Senate
doing
that
that,
has
but you
like
want to make sure
85
you talk
senators
with
on board,
whoever
so
you're
very
doing it with to
bipartisan
make
support. There
sure
is a very
that if you
strong
don't
wing of the
if you
Republican
don't log
Party that
into it
supports
for a
lot
year,
more
what's going to
aid to
happen? You know what
Ukraine.
I'm saying?
And then you have the fact that, you know,
Or at least have the app on your
he's
phone.
said openly, you know, I get to define what America first is, so get on board, you know, and we've seen a lot of evidence that a lot of the MAGA supporters have really been supportive of whatever he decides to do, including bombing Iran. So that's a big question. There are several people, though, including J.D. Vance and Secretary of Defense Pete Hegseth, who have been much more ambivalent about the idea of the U.S. committing more weaponry to Ukraine. So you could,
Yeah, I
a
don't
lot
know,
would
man.
depend if he does do that on the dollar figure. If
I'd
it's,
really want to know
you
exactly
$60
how
billion
they were going
supplemental
to
like Joe Biden signed
how they were going to handle it.
term. That would be a very big signal. If it's anything less than 10 billion, I think you'd see that as sort of a hedge by the president.
Nick, so
I'm sure you
with North
could.
Korea supplying
Sure
as
you
much as
could.
40%
Do you have
of
a
Russia's
brokerage now,
ammunition,
like
we know
Ninja
that Russia's
Trader or
providing money and technology
Trade
to
of Eight or
North
something
Korea
like
in
that?
exchange for these weapons. What chapter are we in right now in the war? How big of an asset is this for Russia?
Well, it's a huge asset. What they really need is a lifeline. They need continuous weapons. They're spending a lot of their munitions. You've seen this uptick in attacks by Russia against Ukraine, drones.
I don't even
things
know.
like
I hadn't
that.
even
So,
thought about anything like that, but
they
the
are
idea
running
makes
low,
sense.
and they need as
I
much
mean,
help as they
honestly,
can get.
4 or 5
Iran
years
is no
ago, the
longer
S&P
really
was
part of
at like
the
what,
procedure, part of the
3,200 or
process,
something like
because
that.
They, you know, obviously
I would
with
talk
what's
to Trade
happening
of
in the
Eight
war with Israel and the strikes by the
and tell
US,
them what you're looking to
they're
do
really
and what
sort
would
of
be the
scraping
best way to
bottom of the
do it
barrel
with them.
North Korea. The challenge is
I would definitely
that
talk to Trade of Eight.
there is no end in sight there. The U.S. cannot really put any pressure on North Korea, so it is.
But I don't know if I'd
fairly
I don't know if I'd
consistent and
enter.
reliable
Well,
lifeline for Russia.
I don't know when
that
you would
it
want
just
to enter
would
the
not
trade
otherwise get, and it's becoming more and more dependent on.
because I don't think the
So, of course, this has been
volatility
going
is
on for
over.
years, this
I don't think
conflict,
we
and as you
found her.
mentioned,
Like,
there's
this
not
is me.
much
I'm a
more the US
perma
can do.
bear,
It
so
seems as though there's nothing
I'm always
left
thinking
here.
the market's going to
But
pull
really,
back
where are we?
1,000
How would you
points.
describe this time period? Who's pushing ahead right now?
Well, it's really a crucial moment because Russia has stepped up these air attacks and the weapons that Ukraine needs to defend.
Are you going to
against
set
these
your
drone and
take
missile
profit at
attacks from Russia are
10,000?
precisely the things that the U.S. has
10,000
been
ES?
sort of waffling on. So the big question now is, if you have this gap in supplies to Ukraine, who fills it? Is President Trump on Monday going to say, okay, we're going to open up the floodgates again and send all that stuff? Or is Europe going to fill in the gap? We do have some indication that Trump is going to be willing to sell weapons to NATO countries, that the NATO countries, specifically Germany, France, the UK, would then say, okay, we're gonna send those weapons to Ukraine. So rather than seeing the U.S. do it directly, NATO countries would do it. The question is, can they get there fast enough? Because this air war we're seeing from Russia right now is just really punishing for Ukraine.
The special envoy to Ukraine, Keith Kellogg, set to arrive in Kyiv on Monday. He's going to spend the week there. Could this be finally the beginning of the end of this war?
It's the challenge there is that Vladimir Putin has shown no sign that he's willing to give up his principal aims, which are essentially he wants Volodymyr Zelensky out, and he wants de facto control over Ukraine. So if Vladimir Putin is undaunted, and you have countries like North Korea, as you guys are saying, continuing to supply more weapons to Russia, what incentive do they have?
Yeah, I see what you're saying. I think when news comes down after fighting the tariffs, I'll enter the trade. Yeah, I'd want to make sure we found a good, comfortable base. I don't think 6,300 ES
if Russia's not
is
willing
the
to give
base.
up, I think that's what you're going to see from the president on Monday, where he's
You know, you want to be at least low enough where you're like, there's no way it can drop 500 to 800 points from here. So you got to figure out how much your 10 or 15 grand is going to cover if the market drops right away.
There could be the sanctions
You know,
that could actually get through.
and you know, if you're never going to miss that 10 or 15 grand, but you can start pulling some of that when you know, say 2 or 3 years, we're in the 7-8 grand range. You can pull some of that cash out too, because you'll accumulate
do a sort of mental shift
margin as it goes up. You know what I'm
where
saying?
For the last 8 months since President Trump has
Within
been
the
in power,
trade.
the idea has been, okay, Trump is going to be a pushover. He's going to,
Or you could invest it into something safe.
If he does actually start to
Stop
put
being
some
rational,
stuff
SM.
and really put pressure on Russia, does that change Vladimir Putin's calculus? Where he
Maybe he
decides,
wants to
okay, now
gamble.
I have to come to Russia?
So during the Biden administration, of course.
Well,
there was
hey
a
SM,
lot of
do you think in 10 years
especially when we think about resources
the ES will be over 10,000 in 10 years? Hey, all right.
Damn good too. But you can't be any
Thanks
geek
for
off
following
the
me.
street. You gotta be handy with the steel if you know what I mean.
You got to be handy with those entries if you know what I mean. You got to earn your keep around here. Forecast traders, mount up. So if let's say you took
It's not coming from the U.S. The Europeans are not
two
in a position to be able
ES
to do that
or two
with any
MES.
sort of
Two
reliable,
MES is going to pay 250 a
sustained
tick.
supply. We do now see
2.5.
that
So all
Trump
right.
is
So how
going to
many
do it,
ticks
but
is
the
that?
big
So
question again for
let's
Monday
call
is,
it
you know,
an
they're
even
running out of money.
4,000
The US
points.
the amount of money
4,000
that Joe Biden has
times
set aside
4.
to send
That's
these weapons to
16,000
Ukraine
ticks
is not limitless. It's
times
starting to run out. Once that
2.5.
money really hits the bottom,
$40,000.
Does President Trump decide, okay, we're going to re-up this now?
So
Because
if he
Europe is
entered
just
today
not
and
gonna be
got
able to
out
fill
at
the gap
10,300 in 10 years, he'd have $40,000.
Thank you.
Don't be a stranger here in New York. That's Nick Wallace.
And that 10 or 15 grand, he wouldn't even have to keep in there the whole time, because let's say you got up to 7,000-8,000 on the ES and you weren't afraid of liquidating, he could pull most of that out and do something else with it. You know what I'm saying?
Stocks on the move. After this is Bloomberg Business Week Daily.
So that could be like a set it and forget it thing, and that's like, you know, if you have an emergency in life 5-10 years down the road, you can close that trade and take your cash. You know, or you can buy a shit coin. You can buy like a meme coin and see what you got in 10 years. Or a long spy. Yeah. Well, that's what I'm doing. I don't do options. I've never played with options, so I'm not really even sure how that would work, to be honest. But with an option, he has to pick a day that it hits 10,000 or he loses, right? How's that work? Is that how that works? Oh, we're getting a rollover on the NQ. Look at that. That might be a front run. So if you're looking at the ES and you see the NQ roll over like this, maybe the ES is going to follow it. Maybe. Look at that. So do you go short right now on the ES thinking it's going to follow the NQ here? I'm not gonna do it because I'm up 700 and I don't want to fuck around, to be honest. I don't know, honestly, man, I kind of like that. If that's money you're not gonna miss for 2 or 3 years. Yeah, it is. That's why I'm doing it. Yeah, I agree. Unless you can afford to drop $50,000 to $100,000 and you're only gonna trade like a max of 5 ES, 5, 6, 7 ES or NQs, then you can hold your trade all day almost no matter what happens. You know what I'm saying? If it goes 20 points against you, you don't give a shit. You just wait for it to come back.
You're listening to Bloomberg Business Week Daily.
All right,
with
hey,
Carol
just so
Massar
you
and
know,
Tim Stein on
water bottle
Bloomberg
is
Radio and Television.
okay. I gotta go. Appreciate the advice. Okay. I was gonna tell you, I have a corporate sales job. I work during the day, and I kind of go back and forth between these. But yeah, hey, stop in if you do it. Stop in and let me know like how you did it and what they said, and kind of let me know how you had to structure it. If that, going in, if that's the plan. Okay. I'm really interested just to see what they say if you research it more.
9 sessions, 9 trading days, and we saw 5 records.
But you got to talk to the brokerage if that's your intention to see what they say, how that's going to work for them.
We're still seeing a sense of optimism to an extent.
And look at this, guys. NQ is like taking off.
48 hours. We do expect to hear from the banks next week. JP Morgan on Tuesday. We'll hear from Bank of America on Wednesday, among others. So that is certainly on the radar of investors. Let's take a look at some
Think the ES is right behind it.
I'm Tim Stanovic along with Nora Melinda. We're joined by Bloomberg News equities reporter Natalia Knijevic. What's on your radar?
I actually have 3 gainers for you guys today. Let's start with energy. Venture Global, ticker VG. The stock is up by almost 7% today. Sources told Bloomberg that the company is close to reaching an agreement for a $20 billion financing package to complete one of its LNG, liquefied natural gas export projects. Sources also said that European banks, Banco Santander and ING Group, are also among the arrangers. And finally, they said that the deal decision, at least investment, could be made as soon as at the end of this month. So this milestone could potentially put Venture Global.
No, we can't do it. We don't have enough volume.
The largest U.S. LNG exporter, Cheniere Energy. But guys,
this is how you get sucked in.
Today's gain, I have to point out that the stock is down by almost 30% since its IPO in January. That was one of the IPOs that was kind of highly anticipated because fundamentals are there, but it was a big disappointment for the market.
And we've seen so many of those IPOs recently where we had them really blowing coming out of the gate, and then now people are getting a little bit more apprehensive.
Exactly. It looks like crypto. That's the sector that always, does well.
Yeah.
Always until it doesn't.
Right. That's
always until it doesn't. Who knows? Who knows what the future holds? Wild to think that, just a year ago, this was still a privately held company. So Venture Global.
Are you done for the day, SM? I don't think I want to enter another trade. I don't want to get greedy.
Let's talk a little bit about some apparel. Levi's.
Exactly, Levi's. So shares are up. Let me check, guys. By
I got 24 minutes.
After, of course,
I got 24 minutes before the trade box turns off. Right now, there's not even enough volume to run it.
And then, for example,
dude, I'm sorry, man.
They reported earnings. They expected revenue.
Just bomb your. You know what, man? Find everyone within driving distance that has a role like that open and apply to them all.
And also, Bloomberg
Just apply to them all.
is saying that this forecast can still underestimate.
You can't just do one and quit. You got to do like 50.
Your show, guys, earlier today, he said that The company has no plans to move production to the U.S., right? And then the company said that
You got to
the
do
simple
50 and
impact
somebody will give you a
on
chance. You just got to do
profitability,
enough of them.
excluding mitigation efforts, could be somewhere between 25 and 30 million dollars. Just to compare, Gap expects this.
You knew how
tariff
many
hit to be
resumes I
somewhere
put
around
out during the year or during the years
$300
over my life,
This
you'd
is
be
just, you know, it's
like, what the
interesting to
fuck?
look at all those retail
You got to give
players and
everybody
how
a
they
chance to
expect
say
and
no.
anticipate.
And I'm looking at analysts here
Somebody
on
will
the
say
street.
yes.
We have 9 buy ratings on this stock in comparison to 3 holds, 0 sells. So we really are seeing people pretty bullish on Levi Strauss, especially with shares up about 23% this year, and that's in comparison to single-digit gains the past 2. So really seeing a rally here.
Are you
for the
on your
stock.
funded
You're looking at
futures
AMC as well.
or are you on
AMC,
Top
I
Step
think
right now?
everyone knows this company, ticker AMC.
Or that Bolinox?
It
Which one are
is
you
up
working right
today
now,
also
SM?
by above 10.6%. After Wedbush upgraded this
Practice.
stock to
Oh, okay.
outperform from neutral, the analyst is saying that the company can benefit from more consistent release slate over the next several years. AMC also either
Yeah, I
repaid
know.
or
That's good, though.
postponed its year debt that was due to 2026. The price target was
That's
raised
good.
to $4 from
Uh,
3. Today's
Once you
price
start
is
figuring out what
3.3.
doesn't work
And
and
by
what
the
you
way,
gotta,
this is the
you
only
know, what you
one
gotta
buy
filter
rating
out.
among analysts
Basically,
tracked by
what I
Bloomberg.
did to get to
Year
this
date,
point
the
is
co-
I
the
just
stock is
every
down by
time
16%, and I
I,
just checked
you
the
know, I
short
would
interest
filter
of the
out
stock.
the
It is
places I
currently
shouldn't
covers
trade.
at around
You know,
15% of
like
just compared to the overall
if the volume's too low or if the
traded
volume's too
shares,
high or certain
and
times of
it's
the day or
actually
during
rising. So
volatility or
potentially
if the
short
price
sellers are
on the
coming
ES
back
is
this
above the
move.
VWAP but the
I wanna
NQ is
remind everybody
below,
about
you
the
don't trade that,
NIRSAC
you know.
status
So
that
I would
this company
filter
had
all
back in
that out
2021.
until I
It
had
reached a
down
market cap of
a combination that
$29 billion.
worked
That was back on
as a signal.
June 30th,
And that's kind of like the
2021.
A
Now it's
plus
at
EMA
$1.44
cross
billion.
when the cloud
Is it no
changes.
longer a meme stock?
I don't know. Maybe all retail traders, they just moved to crypto and other.
Right, they're moving on to other sectors now.
Yeah, and but also speaking of fundamentals, you know, I don't know.
That
who
front run
goes
on the
to
short's
movie
looking
theater.
pretty
I was
sweet,
thinking,
isn't
like,
it?
I don't remember when was the last time I was there.
I had the same
You got
thought.
everything right
I had
now.
the same thought.
Streaming.
Fucker, man.
Exactly.
You fucker.
Natalia
Look at this shit.
Kenijevic joining us. She's Bloomberg
coulda got
News
in at
equities
10
reporter with your stocks
when
on
I
the
started
move. For more
talking about it.
conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere.
Big
you get your
talker.
podcasts. That is going to do it for Bloomberg Business Week Daily on Bloomberg Television. If you're sticking with us on radio, we got a great program ahead. The close is on TV now.
I don't know. I'm not going to do it. I bet this fucker goes right to the VWAP. I bet we go right to the VWAP.
This is
If there was
Bloomberg
enough volume,
Business
this
Week
is pretty
Daily,
much the front run of the A
reporting from
plus
magazine
setup
that
right
helps
here.
Global leaders stay ahead.
If
with
they
insight
touch.
on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily. with
NQ
Carol
is just
Massar and
diving.
Tim Stenivek, live on Bloomberg.
You gotta be
Radio,
careful. The
television,
NQ
YouTube,
just touched
and
the
Bloomberg
200.
Originals.
Bloomberg
So it could
Business Week
bounce
on
and
this
bring
Friday,
everything right
July
back.
2025. I'm Tim Stenivek. That is Nora Melinda. She is in for Carol
Yep.
Massar. Nora is a Bloomberg News equities reporter. She's hanging out with us for the next couple of hours, and I think for a few days next week too.
Yeah, I'll be here. I mean, earnings week next week, gonna be crazy.
You picked a good week.
I'll be here for the roller coaster.
Awesome. Well, speaking of a roller coaster, we've got quite a roller coaster ahead of us. We're going to talk a little bit about Delta's novel way to get grounded planes back in the sky. Also, some logistics that we're going to be focusing on.
Massive trade disruptions and tariff concerns that we know have been ongoing. Founder and CEO of logistics firm Cart.com is going to be joining to discuss how the logistics firm is navigating the uncertain waters.
Also, we are on standby right now. We're watching the president who is in Texas right now. He is making his way to make comments.
Well,
He's set
we
to
got
be at an
volume now.
emergency operations center and get an update there. And we do expect to hear from him after he toured the devastation
This looks pretty tasty.
in Texas. He was joined
I gotta be
earlier
honest.
by Texas Governor Greg Abbott. He was also there with First
Looks
Lady
pretty
Melania
tasty.
Trump. Some of the images of the folks who are set to hear from the president. We did see Ted Cruz.
Problem is the
and Senator
rotation's
John
almost
Cornyn
over.
there as well. We will bring you the president's
We're almost
comments as
oversold
soon
on
as we hear
stochastic,
them.
on the fast.
Well, all that and more coming up
Stochastic's
over the next
almost
2 hours
oversold.
right here on Bloomberg Business Week Daily. First up, though, check of the day's trade and top business stories. Let's get on over to Charlie Pell.
Hi, thank you very much indeed. We got 58 minutes to go ahead of the closing bell. Looks like we are on track for a losing week for the U.S. equity market. Stocks lower across the board right now. A lot of red on the screen. The S&P down 16 now at 62.63.
We go back and touch the 200 or the 20. If we touch, if it bounces up and touches the 20, and the 20 becomes resistance, I might consider the short.
1%. 10-year 4.42%. The 2-year 3.92%.
Should have already been
Stock
in it.
slipping as
No,
Donald
you
Trump
can't. I can't. I'm not
intensifies his
breaking my
trade
rules.
offensive. The price of gold is advancing by 1%. Precious metal now at $33.56 the ounce. West Texas Intermediate crude up 3.1%.
See, on the NQ, if the 200 turns into support, it'll push it back up.
US exports to crimp.
Then you got to get through the VWAP, which is
And Bitcoin
volatile.
3.6%.
And all this will affect the ES will follow
We
it.
are looking at a record for Bitcoin. Wall Street's focus is about to shift to earnings, with 6 of America's biggest banks reporting next week. As for the backdrop, Cameron Dawson is Chief Investment Officer at New Edge Wealth, and she was a guest this morning on Surveillance.
I've been at conferences this past week and people have been whispering in my ear saying, hey, we do think that earnings are going to come in better than expected. So it seems like there is this lifting bar of people saying we're going to get big beats this quarter.
Cameron Dawson of New Edge Wealth. So again, the S&P 500 index trading lower, down 0.3%. The earnings train will be going express next week. Reports on Tuesday out of JPM, JP Morgan Chase, Citigroup, and Wells Fargo. Recapping, stocks lower, S&P down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Delta has got what appears to be a novel way to overcome a shortage of planes and avoid aircraft import tariffs. The company has been cannibalizing new Airbus SE jets in Europe by stripping off their engines and using them to get grounded planes in the U.S. back into service. We've got Sid Phillip right now here in the Bloomberg Interactive Brokers studio. He's Bloomberg News chief correspondent for global aviation. What exactly is going on here? What are the new planes in Europe? What are the engines that are being stripped, and why does it have this fleet of jets here in the U.S. that are grounded?
So
there we go.
This is
Shit,
that Delta
dude.
Airlines uses something called the Pratt & Whitney
I missed it.
geared turbofan engine.
That's all right.
And that engine has been has some problems with the in-service fleet because
A
of
plus
climate
setup, man. Hit
degradation
again.
and also the contaminated metal parts which required their replacement. And so airlines have been forced to ground planes while they wait for the engines and wait for the replacement parts to get in. And so that's been a sort of big sort of supply bottleneck for the airlines that want to get their planes back into service, get them into the air, and fly paying passengers around. Given that they can't do that now, they're looking at ways that they can
Yeah, I know.
get those grounded planes off the ground. And one of those ways is these brand new planes that are sitting in Europe, and they have, we understand from one person that they have seats that are not yet certified.
You
So
like
they
the
can't go
long
back-
now?
They can't go into service immediately. And also they have the little issue of
Well,
tariffs because Delta
it's gonna
said
have
that they're
to
not going to pay any
reject
tariffs
the
on
VWAP
planes,
pretty hard.
And you have a 10% tariff on Airbus planes made in Europe.
I thought Delta
That
was
was a
able to
pretty
get
strong
around
drop.
some of these tariffs by essentially flying the planes from France or wherever to another country and then doing some fancy accounting before bringing them back to the U.S.
A nice detour.
So they've been doing that. They've
Exactly.
been doing a nice detour as well on their wide body planes. So the wide body planes have been sort of spending time in Tokyo before coming back to the US.
And that's
sort
the
of
way to
helped-
get around tariffs?
That's one of the ways they can get around tariffs because the tariffs don't apply on secondhand or used aircraft. They apply only to brand new ones. And so the way they can get around it is by sending them to Japan, operating them from Japan for a little while, and then transferring them to the US.
Are they still owned by Delta?
This is
when they're in
going
Japan?
down.
We don't know which entity owns those planes.
I should have
but
took the
it is
trade.
operated
It
by
was
Delta.
too
brand new
perfect.
plane-
but-
brand new wide body.
You know, when you don't have volume like that, when there's no volume, it can get blown up.
Doing this right now? Or are we hearing from
When
other
somebody
aviation
comes in
So
with
as
a,
far
you
as we
know, with a
Delta's
huge
the only
order,
one
it can
that's
move
doing
it.
but they're also highly exposed.
Look at the-
I mean,
look at the
most of their
NQ.
fleet is Airbus. And
NQ's
so
in
most
free
of their
fall.
new planes and most of their order book is Airbus. They have a large order.
Now
for
we got too
Boeing
much
737
volume.
MAX 10s, but that aircraft is not yet certified. So that's not
This
coming
is
in at
crazy.
the moment. So the aircraft that are coming in are Airbus planes, and Airbus does have, so it's not just all of Delta's brand new A321s. It's just the ones that are made in Europe. So Delta
don't think
also
there was
takes
news.
A321s from the Airbus factory in Mobile, Alabama, where there aren't any tariffs.
So are the how hard is it to get the engines off the planes and then bring them over and put them on new planes?
It's fairly easy. It's a fairly straightforward thing. I mean, airlines pull off engines and pull back engines all the time on from aircraft and switch them out. So it's a fairly modular design. I mean, they're the same engines. So it's the same
And
type.
the same planes too?
The same aircraft, yeah. So it's A321s that are grounded, A321s that are brand new.
How old are the grounded ones? Like how long
I mean, they could
does
be-
it take for the engines to degrade?
I mean, it could be anywhere. Could be 2 years. It could be 3 years. It could be 4 years.
How long should an engine typically last? I mean, longer than that.
I mean,
right?
engines typically last longer, but given the
hope
fact
so.
that these engines have the issues that Pratt & Whitney's had with these engines, it's taking them slightly longer to get them back into service.
So is Airbus the winner here? I mean, you mentioned a lot of Airbus. Is Boeing still behind on some of its fleets?
Boeing is sort of ramping up production. I mean, we've seen Boeing, their monthly deliveries reach 60 last month. And so they are ramping up deliveries. But at the same time, I mean, obviously Airbus is the world's biggest plane maker. And in those years when Boeing stumbled with quality, I mean, last year famously, the production was capped by the FAA because of quality concerns. And so Airbus is building more planes, but then at the same time, Airbus has said that they can't build any more than they can at the moment because supply chains are constrained. So engines, which is also the engines made by General Electric's joint venture with Safran called CFM, those engines are also in short supply. And so engines have become a bottleneck for the overall aviation industry.
Well, let's take a step back. What has overall travel looked like? I know earlier we had Delta Airlines yesterday issuing a strong outlook. They said that vacationers are coming back, and they said that it's really just a fresh sense of confidence. The CEO saying that consumers are becoming a little less numb to the ongoing trade activity, so they're getting out there. What is it like right now?
So I think it's still premature to say what demand looks like. I mean, we did hear from the Delta CEO saying that the back of the plane is still hard to fill. So there is demand for premium seats, there is demand for long-haul travel, but main economy cabin, domestic flights are still hard to fill. And there's lots of competition out there, and a lot of the assumptions rely on airlines pulling back capacity once summer is done. And that is something that airlines are hoping to do so that they can start charging more for seats. Because at the moment, you have seats chasing customers and not customers chasing seats.
So if you do have airliners grounded right now, maybe that's an okay thing.
It is. It helps you moderate capacity.
So on that and onto the engine issue, because this isn't the first time that you've written about the challenges that Pratt & Whitney has faced. This is a company owned by RTX, publicly traded company. The main competitor is GE.
Yep.
Are the engines such that you can put a GE engine on an A321, or does that not work?
No, so they're not interchangeable between the two configurations. So you have an A321 with an option to buy an RTX engine, or you can get a CFM engine, and you can't switch between the two.
The contaminated metal powder that are in Pratt's geared turbofan engines that have forced airlines to ground some of the A320 family fleet. How big of an issue is that for Pratt & Whitney?
It's a fairly large issue. I mean, they've had to issue lots of charges on it. They've also talked about how they expect the peak to be this summer, and then they expect the fleet to go down. So, I mean, Jeffries put out a note today saying they expect about 613 or 660 planes that are grounded at the moment.
My understanding is the engine is one of the most expensive parts of an actual plane. Do you know what the cost is, or the percentage of the cost that goes into actually manufacturing a plane? Is the engine, or like how much one of these engines costs?
I don't have the number offhand, but it is a significant cost. And I mean, typically airlines tend to agree deals with the engine manufacturers that include the servicing and maintenance and all sorts of power by the hour contracts. They're called power by the hour contracts, where you pay for the engine while you use the engine. So it's more of an engine as a service rather than you buying the actual engine. So it all depends on how the airlines structure their finances and structure the deals.
So a month ago, we had the worst aviation accident in India in decades, and we know that authorities are set to release a preliminary report into the catastrophe, some people saying today. What's the latest there, and what is the expectation from this report?
So at the moment, we don't yet know when exactly the report's going to be out. I mean, the usual timeline is a month after the incident is when a preliminary report comes out, and that's sort of, we're waiting on the Indian Air Accident Investigation Bureau to put out that report. And we understand that it might be in the next couple of days, but when exactly that drops, no one's really quite sure. We expect the report to be fairly basic in terms of establishing the facts and also possibly detailing the lines of inquiry that they're following, because air crash investigations typically take months or even years. And so we're not going to get an immediate answer as to what really went wrong, what was it, but we might get some hints as to what are regulators looking at and what are investigators looking to see.
At this point, is it fair to us to rule anything out? Could we rule out a bird strike or a dual bird strike?
I think it is, I don't think we can rule out anything at the moment, given the fact that it's still unclear what the things is. But we do understand that one of the focuses that the investigators are focusing on is the fuel cutoff switch on the 787.
Okay.
And that is something that the operation of that switch is something that regulators are looking at to see. But we don't yet know whether the switch was on or off.
What do you mean by that, the operation of the switch?
So the 787 has fuel cutoff switches that can be in run mode or cutoff mode. And the 787 manual for in the event of a dual engine failure calls for pilots to switch off and switch on that switch in order to reset the computer which powers the engine. So we don't know whether the switches were operated before or after the incident. Was it in response to a dual engine failure? Was it the reason for a dual engine failure? Because the moment those switches are turned off, your engines lose fuel, which basically then causes them to stop.
Is this something that can be, or was this something that is able to be found out in the flight recording?
It will be. Because the 787 is such a digital plane with lots of software, we expect investigators to be able to determine when that switch was flicked, if it all was flicked, and what the reasons were. And we'll have to wait for the investigators to come out in the next few days and tell us what exactly went wrong there.
I cover aerospace and defense stocks, and there was a note that came out yesterday from Benchmark Research. They were essentially saying that reports are pointing toward the cockpit movement versus a potential Boeing or GE engine design flaw. But who ultimately makes the call here?
So the thing is, that's something that the investigators will actually come to terms with, and they will have to come out and say that. I think because of the fact that we've seen very little by way of memos or notice to customers from either the manufacturer or the FAA or the other aviation authorities saying that these are what have been sort of urgent fixes that need attention from airlines. That's why the sort of focus at the moment is that maybe there isn't something wrong with the aircraft itself. So we'll have to still wait and see. We still don't know yet for sure. We can't rule out there was an aircraft issue, but at the moment it does look like it probably was a pilot issue.
Because this is unprecedented when it comes to the 787 Dreamliner, in the days and even in the few weeks that have followed this disaster, have airlines that have these planes put the 787 under additional scrutiny?
Air India did. I think the Indian regulators asked Air India to investigate and check each of their planes. And so Air India did put their 787s under the scanner. But we haven't really heard of any other airlines sort of putting any sort of focus on the airliner.
What's general sentiment right now? I mean, of course, when we think about last year and into this year, just all of the crashes that have been happening and how it's really just made investors, Wall Street more worried, and also just the general consumer traveler. What is sentiment? What are you hearing?
Sentiment still, I mean, people are still traveling. I think the pocketbook is sort of more a concern than safety at the moment. And I think people at the moment are holding off on travel, not so much for safety concerns, but because they're worried that they may not be able to afford it, or they may have financial crises later on that they need to conserve the cash for and conserve their savings for potentially difficult times ahead financially.
You know, just a few days before the Air India tragedy, I saw a video that our team in India had made about a rebrand, or a brand refresh, I should say. A new CEO, relatively new CEO. I think he came from Singapore Airlines, yes. Is that right? Trying to really shed the image that Air India has had as a company that didn't keep at least the interior of its planes in top shape, didn't have great service. How big of a setback has this been for the company?
Oh, this is a huge setback. So Air India was state-owned for the longest time, and essentially the Tata Group acquired it 3 years ago, and they have invested a lot of money in turning the plane around, a rebrand exercise in terms of new logos, new aircraft. They in 2023, they announced a large mammoth order for almost 530 aircraft at the Paris Air Show. So they have sort of this massive ambition to turn Air India around and make it sort of a credible player in the world, where Emirates and Qatar Airways take a lot of Indian customers through their hubs in Dubai and Qatar.
So is that out the window at this point?
I think it's still early to say it's out of the window, but I mean, they definitely will go slower in terms of making sure that their safety record's unblemished before they can actually expand so fast.
What are the lingering questions right now? What are you looking to see?
Oh, we're looking to see what really went wrong with that aircraft. I mean, the 787, what really went wrong with, like, that caused such a catastrophic failure and caused such a big tragedy. I mean, we've all seen the videos of that aircraft sort of struggling to take off and then, like, the fireball after. Yeah. And I think there's so many unanswered questions as to what really went wrong, who's at fault, and essentially what lessons we can learn from it and essentially make aviation safe again.
Sid, thanks so much for joining us.
Thank you for having me.
Appreciate you taking the time this afternoon. Sid Phillip, he's Bloomberg News chief correspondent for global aviation. Check out his work and his entire team's work on the Bloomberg terminal.
Get the latest news wherever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, or wherever you get your podcasts.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we wrap up the trading week. We have got the S&P 500 index down 15 right now, on track for a losing week with the S&P now at 62.64, a drop of 0.2%. The Dow down 265, down 0.6%. Nasdaq Composite Index down 17, drop there of 0.1%. The Bloomberg Mag 7 Index up by 0.5%. The 10-year 4.42%, with the 2-year currently yielding 3.90%. Gold up 1%, 33.57 the ounce on the precious metal. West Texas Intermediate crude up 3%, 68.59 a barrel, and Bitcoin up by almost 4%, now at $118,000, a record for Bitcoin, up again by 3.9%. So it is a down day for the U.S. equity market. Earnings season kicks off in earnest next week. Emily Rowland is co-chief investment strategist at Manulife John Hancock.
This is going to be more about the haves and the have-nots going into Q2. So we're going to have to see which companies can deal with revenue growth slowing. Margins are starting to get compressed. Profitability here is coming under a bit of pressure. Those high-quality companies that can maintain those margins in the face of some of these headwinds, we think are going to be the relative winners as we head into the back half of the year.
Emily Rowland of JH Investments. Tesla aiming to bring its driverless taxis to California and Arizona. According to the carmaker's plans for expansion, CEO Elon Musk predicting on his social media service X that Tesla robotaxis could launch in the San Francisco Bay Area probably in a month or two, pending regulatory approvals. Tesla today up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. Happy Friday, everyone. I'm Nora Melinda here with Tim Stenovic. I'm in for Carol Massar today. Tim, let's talk logistics.
I love talking logistics.
Okay. It's Omer Tariq's. He's a specialty for this. This is his specialty. He's the founder and CEO of Cart.com. That's a logistics firm based in Houston, Texas, and it provides services for B2C and B2B companies. Think about online store management, fulfillment, marketing, and customer support. He's joining us now from Houston. Omer, talk to us a little bit about Cart.com. Seems like you all have done a lot over the past 4 years since your inception. What exactly is Cart.com, and what inspired you to launch it?
Thanks for having me, first of all. Look, we started the company to build the world's largest infrastructure as a service. The problem we're trying to solve is we have billions and billions of dollars of GMV flowing through our operational infrastructure. We power the technology, services, and operational capabilities for brands of all sizes. About $500 million in revenue, about $10 billion of GMV, 1,200 employees globally, and we're just 4 years old.
Wow. Okay, that's pretty impressive stuff, Omer. One of the reasons we like to talk with people like you is because you have a good idea of what's happening in the economy right now based on your customers, what you're seeing on the B2B and B2C level. Have you seen a significant difference in order fulfillment given the uncertainty around tariffs post April 2nd?
Yeah, I mean, look, there has been a volatility of things going up and things going down for the last 2 years. Consumer sentiment has been shifting almost every quarter. The last couple of quarters, we've definitely seen a couple of very interesting trends. The first was, in Q1, we actually saw a pretty big influx of consumers buying to get ahead of the tariffs, and the retailers kind of, filled up the warehouses to have the inventory to take care of the consumers that are shopping. Q2, as the sentiment sort of continues to be around inflation and tariffs and uncertainty, there's a little bit of slowdown that we're seeing across the retail landscape.
Omer, bring us into the boardroom. What are conversations like right now? What types of changes are you all having to implement given the uncertainty?
Yeah, I mean, look, I think in times like this, we are doubling down because if you think about it, right, scale is something that's going to become so much more important as you think about economies that these brands are now looking for. The larger we are, the faster capabilities that we can provide to the brands we work with, the better off they're going to be by working with us. So we're actually, we've just announced a couple of acquisitions in the last 9 months, and we're actually going to announce a couple of more acquisitions in the next 6 to 9 months. So we're going both organic and inorganically pretty aggressively towards the next couple of years.
Who would you say When you were building this company, when you founded this company, what was the problem that existed that wasn't being solved?
Think about a company called Janie and Jack. They, make beautiful dresses for girls. And if you think about them selling through their website, selling through their stores, and their end consumer continuously shopping in other channels outside of just online and their stores. So think TikTok, think Amazon, think eBay, think Walmart, think Nordstrom, everywhere the consumer is going. For a mid-market retailer to be able to provide their product catalogs, their inventory, their pricing across multiple channels, across a pretty complex permutation of product categories is really hard, especially when you don't have billions and billions of revenue and scale to kind of fulfill that, right? So what Cart.com does is makes that easy. If you're a brand wanting to sell in every channel in the world, we enable that technologically and operationally. And today we're obviously North America focused, but very soon we're going to be international, where if you want to add Italy or France as an international market, you can just come to Cart.com, and within 24 hours, you can start selling there.
Omer, you mentioned acquisitions. What types of companies are you targeting? What comes to mind when you guys are thinking about the companies that you'd like to acquire?
Yeah, I mean, look, I think we're looking for very interesting categories that are growing really fast. Logistics companies, software companies, services companies. Look, the thing about Cart.com is that we're known as a logistics company, but we're really the broadest infrastructure company and the deepest infrastructure company as a service in the world today. We do logistics, we do order management, we do services. So when we think about acquisition targets, we're looking at categories, not just product categories, but companies that are doing software, companies that are doing services, and companies that are going to help sort of augment our operational infrastructure and scale. So we're very, very broad. We're essentially trying to replicate the infrastructure that Amazon has built, except in a not marketplace format where we're partners with them, not competitors.
So speaking of scaling, where are you all currently positioned, and what are you thinking about in terms of regions that you could potentially scale in?
Yeah, look, I mean, today we're shipping about 350 million units a year. That's our last year numbers in the US alone. We're looking at the UK, we're looking at Europe, we're looking at the Middle East and Asia and LATAM. So in that order, right? So the idea is to sort of start moving eastwards into one geography at a time over the next couple of years.
What are some of the challenges that come with expanding into international markets, especially given the volatility right now and the uncertainty regarding tariffs?
Yeah, look, we're in the business of making it easy for the mid-market brands that we work with, which means that we have to do the hard work. So when you enter a new market, you're not only thinking about localized supply chain, the mid-market challenges that occur, the regulatory challenges that are now being thrown because of tariffs. You also have to think about, okay, it's not just about procuring, it's also about selling. It's about increasing demand for these brands. So we sort of solve a three-part problem. One, we help consumers drive to these brands. Two, we make sure that they have the technology to basically sell in the languages and geographies that we're enabling the infrastructure. And then three, we have to help with the procurement, which is the last mile delivery of those packages, right? So now we are actually taking over the complexity of the problem so that the brands don't have to. Essentially, we do all the hard work around the complex infrastructure, from technology to logistics. Brands can just connect and integrate into our infrastructure and sell in these geographies.
How are you thinking about artificial intelligence right now and implementing it into the work process?
I mean, look, AI has been in our DNA from day one. One of the first three hires we made was a chief data scientist at Cart.com. We have been leveraging AI very significantly over the last 4 years in things like figuring out how to connect demand with inventory management. How do you predict demand? So if you think about it, right, the logistics problem actually starts with the consumer clicking yes that they want to buy something. And if you can have very large data sets that connect the demand problem with the supply problem, then you're essentially optimizing the entire value chain. So we have forecasting models that are using and leveraging AI today. We predict demand before it occurs, and we're continuing to invest very heavily in that technology so that we can give the brands we work with a much upper hand.
There seems to still be this disconnection between what companies know about me. And look, I think consumers value privacy. No question. But I also think that it's like kind of weird when you're browsing the web and you get an ad for something that you just bought. because the browser doesn't understand that you have just bought this good. Is there a way that your software can and your solution can actually help companies understand consumers' online and offline behavior better?
Yeah, absolutely. I mean, look, we're big believers of privacy and security and consumer preferences. So this is like a very important topic that we talk about almost on a daily basis. We use very large anonymized data sets to do and power the analytics that we ultimately end up providing for the brands we work with. So once the consumer feels comfortable that the way their data is being used is only to help them, not to invade their privacy, they then become more willing to actually have allow you access to it. The way we're connecting for these brands the data from the time that the consumer starts thinking about a product to the time the product actually shows up to their doorstep. We're the only company in the world that has that breadth of information, right? Because we sort of connect the demand side with marketing services and marketplace services. And we obviously have the operational infrastructure, tens of millions of square feet of space.
How do you think about sustainability as it relates to AI implementations?
I mean, look, the first thing is that you have to prevent AI from running amok, right? You have to keep control and tabs of how artificial intelligence is being used. I think too many companies are either using AI as a buzzword and not really using it, or they're using it in a way that's maybe abrasive and not actually what consumers really want. So you have to find the sweet spot of using artificial intelligence in a way that you're optimizing for the profitability of these brands, for the growth of these brands. And obviously, there are lots of internal use cases that we're using AI for. But ultimately, what we're really trying to do is help these brands grow faster and make more money.
Omer, how do you make it so that your order book grows? I mean, you mentioned a couple of your clients, Janie and Jack. Authentic Brands is also another, Tom's, PacSun, certainly brands that our audience is familiar with. How do you grow that number?
Yeah, I mean, look, we're known as a company that does a lot of work in the B2C space for mid-market retailers. But the interesting story about Cart.com is that about half of the business, half of our revenue is actually with B2B companies. So, first of all, you've got a virtually almost $1 trillion addressable market in the mid-market retail segment. And then you've got another $1.5 trillion addressable market on the B2B side. So we actually do a lot of work with B2B companies. Charismatics Brands is one example where they're the providers of scrubs for doctors, and they work with a large number of shops across the United States, where small mom and pop shops where they provide their scrubs to, and we're powering their order management and logistics platform. We actually do a lot of work with the federal and state government. So we're actually doing a lot of work in health and pharma. So when you think about the infrastructure that we've built for the B2C segment, that's only about 1/3 of our overall customer segment. But the other one, 2/3 is actually B2B and the government. So growth is virtually unlimited when we think about the addressable market and what we're going after. That's why we have gotten so big so quickly.
Omer Tariq, thanks for joining us. Really appreciate it. Founder and CEO of Cart.com, the logistics firm, joining us from Houston. We are just about 25 minutes until the close of U.S. equity trading. The S&P 500 down 0.2% as we speak. Charlie Pellet has been keeping an eye on everything happening in the markets and also some business news. Here he is. Hey, Charlie.
Hi, thank you very much. Indeed, that's what we do here at Bloomberg. We got you covered with the Dow, the S&P, NASDAQ, all lower. 25 minutes to go until that closing bell clangs on Wall Street. On track for a losing week right now. The Dow, the S&P, NASDAQ, they're all in the red. Stocks slipping from records as President Trump intensifies his trade offensive, sending the dollar higher. S&P down 13 right now. It's 62.66. That is a drop of just about 0.2%. We've got the NASDAQ Composite Index down 25, down 0.1%. The Dow down 248, down 0.6%. On a day when stocks are declining, our Mag 7 Index is higher, up by about 0.5%. NVIDIA up by 0.6%. The 10-year at 4.42%, with the 2-year 3.89%. Spot gold up 1.1%, $1.59 the ounce. West Texas Intermediate crude oil up 3% now. WTI $68.57 a barrel. Oil is rallying as traders brace for fresh U.S. efforts to crimp Russian energy exports. Kraft Heinz jumping today as the Wall Street Journal reports the company is preparing to break itself up. Again, the Dow, the S&P, NASDAQ, all declining. S&P right now down 14, down 0.2%. Cannot ignore the move in Bitcoin, up 3.8%, 117,928 right now on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. As Charlie mentioned, we are close to the close of trading on this Friday afternoon. I want to bring in Dave Hardin, founder and CEO, also CIO of Summit Global Investments, an investment advisor. Got close to $2 billion in assets under management. It's headquartered in Utah. Dave joins us once again from Salt Lake City. Sometimes he's here in New York in our Bloomberg Interactive Brokers studio, but he's out there in beautiful Utah for maybe some nice summer weather out there. How is it?
It's wonderful. Today's been great.
Okay.
The weather's been fantastic. So hopefully the lakes are not so packed this weekend.
Hey, good
Yeah,
job,
well,
SM
It's pretty
today.
humid here. It's kind of like in New York City. I don't know if you've seen this, Nora, but it's like I look at the weather and there's always a chance of rain every day over the past 10 days.
I don't know how to dress right now, Tim.
Yeah,
my
well,
wardrobe is split.
Inside in air conditioning. That's what I'm dressed
Sounds
for.
better in Utah.
Yeah, it does sound better in
Yeah.
Utah.
I
Dave,
gotta
talk to us a
I
little
gotta
bit
finish
about
up a
the
couple sales here.
incredible,
I'll check in a little
rise
bit, but
in
that's about
US
it for
equities
today.
that
Unless
we've seen
you
since
got
April, 25% from those
12
April
minutes to
lows.
mandatory order close,
The
MOC.
question
If
I'm
you're gonna
asking
play that game,
everybody
get
about
ready.
is,
Are we going
what
long
has
or
actually
short?
changed in terms of tariffs, given that there's still a much higher rate on tariffs than there was back in January?
For sure. I think I think we're just getting tired of tariff news. I think we're going to maybe have some communication here from the president momentarily, but I think we're just worn down, right? And so we've heard a lot about tariffs, and you're right. I don't think we're lower than where we were. That's for sure. And the threats more recently have come out that we're going to be actually higher coming August 1st. So they're still being used to kind of get what he wants. And I don't think he's necessarily shown that he's one to give in. So I think we're going to be talking about tariffs for a little bit longer.
Yeah, lots of tariff headlines right now, Dave. And you talked about being worn down. It's really interesting as we look at how the market is really trying to digest a lot of these tariff headlines. But when you look on a year-to-date basis, we're seeing the S&P 500 up about 6.5%. Do you think that we have further to run, especially when you look at January versus now and us kind of still flirting with all-time highs right now?
It's a great question. I think if you look at the glass half full scenario, there'll probably going to be some trade deals around these tariffs. Who knows? Maybe the Fed may cut one time or will cut the Fed. One of the two is happening here with all the interaction going between Trump and Chairman Powell. We may have, obviously the bill was passed. There's some fiscal stimulus there. So if inflation can be tame enough, we've had solid performance, like you mentioned. Industrial's really leading the way. There's a lot of positive things. Now, on the glass half empty side, August and September are typically the most volatile months. We still have geopolitical risk, and it seems like we can't remember that Iran and us were just in a little bit of a spat recently. So inflation is probably more sticky than what we think. The national debt with this fiscal stimulus is getting higher. And in a lot of respects, if inflation doesn't tame, I don't know if we'll get any Fed cuts at all. So it's a messy trade deal situation. So it's kind of this half glass, half full, half empty. I would be cautiously optimistic that the second half hopefully is smoother. I don't know if we'll get another 10%, but smoother than the first half.
Dave, we have earnings season coming up next week, so it's going to be, I'm sure, lots to keep up with. But from the earnings that we've seen thus far from Levi and a number of others, seems like we're off to a good start. What are your earnings expectations? Do we expect to see any sort of impact from tariffs during this time period, or is it a little bit too early to call?
My gut tells me those that don't do well will definitely lean on some type of blame. We don't like to be, take blame ourselves. So I think those companies that don't do well are going to mention more tariffs. And I think you could see that correlation for sure. But companies have been magnificently self-reliant in the sense that they've gotten more out of their people. They're well managed. There's some really great companies out there, and I think that's why we see these very high valuations in the stock market that we're able to maintain month over month and year over year. There's really not a correlation right now between high valuations and monthly returns. And I think the reason, and negative monthly returns at that, and I think the reason why is this very good management. And earnings in general have been very good. I think it actually, if I was to bet on a group, I think the Magnificent Seven still have the best opportunity to outperform in earnings.
So not too expensive?
Well, I mean, heavens, you don't want to pay up per se, but then again, you don't want to miss out. So this is kind of like, it really depends on the investor and what that investor wants. And managing risk for investors is key. You have to manage risk or help them manage that risk. So it's really what they're looking for and what they want out of the stock market.
But Dave, when you say Mag 7, I mean, you're specific about which stocks you think people should buy and which ones you think they should sell. You say investors should sell Tesla. And on that, I just want to bring in a headline that just crossed. Elon Musk's xAI seeks up to a $200 billion valuation in next fundraising. That's coming from the Financial Times. Speaking of Elon Musk, Tesla is not one that you say you want to own right now. Why?
I just think I think there's some other advantages you can take advantage of. And I think there's going to be more volatility in Tesla than bang for the buck in the return. And I mean, let's face it, Elon Musk is one that he doesn't let you decide on yourself. He's going to let you know when it's time to get into Tesla. He hasn't talked about it for a while. It's kind of been off his radar from a public, his voice, so to speak. And so he'll let us know. And I think that until he does, it's probably time to take a back seat there and let that be volatile to the traders, if you will. And there's just other better options for foreseeable future. And I would say that's at least 3 to 6 months where you can look at things like the Microsoft or the Google, these other parts of the Magnificent Seven.
So Musk, of course, has a pretty strong following, a loyal base here. What's your feedback, your takeaway from bulls who say to continue piling in?
Well, I mean, their time frame might be longer term, and that's okay. Let's face it, Elon has not been one you want to bet against. He's been very, very good at giving returns to shareholders. So I understand that concept. I just think in the intermediate time frame, he will let us know, and he hasn't. And so those signs aren't there for that stock, and that's my least favorite stock. That doesn't mean that I don't think he's a wonderful person or he's not going to, this isn't a character session on Elon Musk. It's a company decision. And from a company decision, I'll wait on Tesla. And he may talk tomorrow and that might change my mind. But until he talks, I think Tesla is a sell or a hold. At least look for other options with new money.
Microsoft and Alphabet, though, you're a buy.
Oh, for sure. I mean, I think Microsoft, they have great earnings, high quality earnings. I think they've only started with their Copilot and their AI tilt, and they have a great opportunity to continue to cut expenses. If we've seen some layoffs there, they have a lot of expenses they can cut. So I think Microsoft is an absolute great opportunity still, even at these levels of valuation. And with Google, same thing. A lot of AI spending here, but continued revenue and earnings per share growth. I mean, they generate around $25 billion every quarter in free cash flow. That's a lot of opportunity to spend and to grow in this space and become more profitable. So 28% net margin, net income margin on this, return of equity exceeding 30%. Like Google has a lot of great things going for them right now. So yeah, I'm very positive on both those companies.
Another red headline crossing the Bloomberg terminal, the Apollo-backed Legendary weighs an acquisition of Lionsgate Studios. You can read more about that on the Bloomberg terminal. Speaking of alternatives and private markets, what is the appetite that you have right now and that your clients have right now for asset allocation in privates?
Oh, it's huge. You got to look at it, right? You can lower standard deviation for portfolio depending on, again, the qualifications of the clients. A lot of times this is for maybe more the high net worth or the accredited investors. But There's been some great private capital funds that have come out where they're even available for non-accredited. But you see this quite often. You can lower the volatility from a standard S&P 500 at about 15%, and usually private capital comes in around 1 to 3% in their standard deviation. And so this is a very good thing for diversification of returns. It's a very good thing for a risk perspective and how you get the most out of these. I think it's actually not in the beginning innings. For us, it's probably more like the 5th or 6th inning of private capital, but I think there's still a lot to go on here. And so huge need, huge, when I say that, like almost every client we talk to talks about private capital. And if they don't, it seems like every advisor that's talking to that client talks about private capital to the client.
But
so alternatives is a big space.
Yeah, well, when we talk alternative, it is a big space. I mean, we could talk about private credit. We could talk about alternatives such as hedge funds, venture capital, private equity, real estate, even crypto is kind of to some people considered an alternative. What would you say a typical asset look, everybody's different, but what would you say a typical asset allocation for one of your clients is in alternatives?
Yeah, well, let's say a more aggressive client or maybe moderately aggressive client. You see typically around a 10, and you can see even people maybe double that, but 10 to 15% allocation into alternatives is usually what we're recommending when you're looking at that kind of longer term, higher risk type of client. And it helps to actually reduce some risk. So it's very beneficial to that type of client. And that's a mix.
Dave, forgive me. We gotta go. The president is speaking in Texas now. Dave Hardin, founder, CEO, and CIO of Summit Global Investments. Let's head now to Texas, where President Trump is making comments after touring the devastation. He's at Happy State Bank Expo Hall in Kerrville, with the First Lady as well.
This is a bad one. We just visited with incredible families that, I mean, look, they've been devastated. They lost their child or two children, and just hard to believe what, I've never seen anything like it. A little narrow river that becomes a monster, and that's what happened. But the First Lady and I are here in Texas to express the love and support and the anguish of our entire nation in the aftermath of this really horrific and deadly flood. Nobody has any idea how and why a thing like this could happen. It's, and by the way, I have to tell you, the people here, first responders, the sheriff's office, all of the police, law enforcement, they've done an unbelievable job. And in speaking to the parents, they said everybody has been so professional, from the governor to the senators, all the way down to the local people on the site that really are a little bit used to this. But they've been looking at this for years, but in much smaller doses, much, much smaller doses. 12 years ago, and then in 1932, they had a real bad one, but that bad one was half of what this was. But I was speaking to some of the great people in the town, and they said, no, every year we get a little bit, but it was like a little bit of a flood.
All right, SM, have a good day, man.
You were telling me, and it was just...
I'll see you on Monday if you stop by.
We had people, and we took care of it, and this year it was like, what's going on, right? So all across the country, Americans' hearts are shattered. I had to be here as president. First Lady wanted to be here. All the beautiful souls, and we're filled with grief and devastation. The loss of life. And unfortunately, they're still looking. They're still looking. There's a lot of missing children, possibly, mostly, we don't know. But they're still looking. And they'll find everybody, but it's not an easy thing. You would think it would be easy. It's very tough. I looked at what they're going through, what they have to do. But dozens and dozens of precious children taken from us with such, I looked at the pictures of almost all of them, and it's terrible. Following a torrential downpour, the worst that anyone's ever seen, Guadalupe River rose 26 feet in less than 45 minutes, and I've even heard it went well over 30 feet. There's one story that one person said it had to be 60 feet at one moment. This is like a giant, giant wave in the Pacific Ocean that the best surfers in the world would be afraid to surf. And it unleashed a catastrophic flooding as most residents were asleep in their beds. A very dark evening. The waters claimed at least 135, 140 lives. They're getting that count, but the count that they don't have is how many are still missing. But a lot of lives, a lot of young angels. At the Girls Christian Summer Camp, known as Camp Mystic, a legendary camp, a camp that people would want to go to from all over the country. People, parents, they come and they would stay with their children. They'd stay in other cabins just to be with their children, but a legendary place. They were there because they loved God, and as we grieve this unthinkable tragedy, we take comfort in the knowledge that God has welcomed those little, beautiful girls into his comforting arms in heaven. And we believe that, have to believe that, and we do. And we lost some wonderful people beyond the little girls. We lost some very brave men and women that tried to save the girls. As our nation, we mourn for every single life that was swept away in the flood, and we pray for the families that are left behind. It's amazing the incredible spirit from those families. I don't know. I don't even know how they do it. But moments ago, Melania and I spent a lot of time with them. That's why we're a little late. I think this was a good reason to be late, frankly. And we just gave our warmest condolences. But you say to yourself, you know, how do you give condolences? How do you do that to a young person that 3 days ago was here, 4 days ago was here and vibrant, and now is no longer here? The search for the missing continues. The people that are doing it are unbelievable people. That you couldn't get better people than this anywhere, Christy, right? Anywhere in the world, you couldn't get better people. And they're doing the job like I don't think anybody else could, frankly. And I want to thank them. I want to thank all of these great first responders who raced into very grave danger. We have some people that were incredible. The single Coast Guard rescue crew saved an incredible 169 children at Camp Mystic, 169. And the camp staff was also incredibly courageous. Are those Coast Guard people around here someplace? Because I hear some incredible, incredible people. And I actually, Scott Ruskin, is he around? Where's Scott?
He's not here right now, sir, but
So-
he will be here later, and I will be
Okay, would you let him
presenting
know?
them with some. I'll let him
And
know.
John Dunn, the owner of the Hunt store, was a flood. Where are you? Okay, good. We spoke a little while ago, and it sort of, John was telling me some stories about that store, and it was just really amazing.
Yes, Mr. President. First, let me correct. Was owner of the Hunt store.
We've been
from
listening to
2013
President
April
Trump
of
making comments at the Happy State Bank Expo Hall in Kerrville. He's there along with the First Lady of the United States, Melania Trump. They toured the devastation caused by the floods over the weekend and last week in Texas. If you are interested in following the president's comments, you can check out LiveGo on the Bloomberg terminal. We'll also bring you any headlines as we do get them. We don't know if the president will take questions at this event, but if he does take questions, and potentially those questions are about the economy, about trade, about the Federal Reserve, the Fed chair, we will bring those to you as we do get them. In the meantime, we are just a few minutes away from the close of equity trading here on this Friday afternoon. I'm Tim Stenbeck. That is Nora Melinda, Bloomberg News equities reporter. She's in for Carol Masser this afternoon. The S&P 500 down 0.3%, but off its worst levels of the day.
Yeah, financial is the worst performing sector right now. And of course, I imagine that that's got to be some of the fintech companies weighing on it right now.
Yeah, that's a really good point. It's one of your decliners I know that you're going to be talking about later. We saw a headline cross the Bloomberg terminal putting some pressure on these fintechs.
Most definitely. We have JP Morgan telling fintechs that they're going to have to pay up for customer data, and that's going to be hundreds of millions of dollars for access to customers' bank data.
Okay, hundreds of millions of dollars. How about $200 billion? Because that's the XAI valuation. in its next fundraising, or could be, according to the Financial Times. Elon Musk's xAI is preparing to raise more money from investors in a deal that could value the AI company as high as $200 billion. That would be 10 times its value early last year. This, according to the FT, citing unidentified people close
It's
to the
really
talks.
interesting seeing so many people just rallying behind this company as we think about AI more broadly and just the landscape right now. Lots of optimism, very bullish right now.
Yeah, big week for Elon Musk. Linda Yaccarino at X. She was the CEO for 2 years. She resigned. We spoke to Kurt Wagner yesterday about the challenges that Grok has had, and that now that Grok 4 is going to be released and the data that it's used from
Do you use Grok?
X. I do not use Grok.
Do you use Twitter?
I see it on Twitter.
I see it on Twitter.
But do you have to be a premium subscriber to Twitter?
I don't know.
to
I just see
X
people in
to-
the comments. They're saying at Grok. Explain this to me.
Yeah, I don't do that.
Sometimes it's wrong. Sometimes it's
haven't
right.
done that. Do you use any AI?
Not really. I mean,
No?
occasionally I'll look at ChatGPT for groceries. I look at what I have in my fridge and I'm like, hey, what can I make with this?
I check out ChatGPT sometimes. Not Perplexity. What's the other one? Anthropic.
Right.
Claude. I have that one.
All of
I don't
them.
pay for any of them yet, though.
Okay. Likewise.
All right.
Free.
For now, we just go with the original.
Free
We're old
99.
school. Yeah, old school Google. Hey, coming up next, we're going to be joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Originals. We're going to count you down to the close. Bloomberg's The Closing Bell. It starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld taking you through to the Closing Bell with a global simulcast. We're joined right now by Tim Stenovic in the radio booth, Nora Melinda in today for Carol Master. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, Tim Stenovic, on a day where the market decidedly on the back foot, a little bit of a breather from the record run that we've had.
Yeah, a little bit of a breather. We're off our worst levels of the day, but still seeing some red on the screen. Interestingly enough, it's risk on when it comes to crypto. A new record for Bitcoin, up above $118,000 per Bitcoin. So they're not concerned about trade tensions.
Risk on, but we're seeing a market that ended lower. I'm looking at financial stocks being the worst performing sector in the S&P 500 as we close on this Friday.
Yeah, we'll see how that changes next week, though. Of course, we know it's bank earnings kicking off. We have the 6 majors to get through, and it feels like, I mean, you take a look at the sell side, you take a look at investors, they seem to agree that the stars are aligning for financials.
Yeah, the stars are certainly aligning for financials, which, of course, at least as a group, we're trading near those record highs coming in to this week. And don't forget, we also get Netflix as well. So a little bit of a preview maybe onto the consumer side of the equation. And I do wonder about expectations, Tim and Nora, this idea that are investors prepared for the best? Are they prepared for the worst, or are they just kind of somewhere in the middle?
I think they're somewhere in the middle. I mean, look at the expectations a few months ago about what tariffs would do. That really hasn't materialized. And now the commentary seems to be, okay, well, just wait a few more months and we'll see it materialize.
All right, well, we get the closing bells here in New York. A bit of a mixed day and a bit of a mixed week for financial markets, coming off record highs or near record highs, with the Dow Jones Industrial Average closing out the day lower by almost 300 points, or about 0.6%. That's going to amount to a drop on the week of about 1%. The S&P 500 down 21 points on the day, or 0.3%. That's also going to lead to a loss on the week. The NASDAQ Composite and the NASDAQ 100 each losing around 40 points or so on the day, both closing out the week in the red. And there's the Russell 2000, which had been the outperformer for the last few sessions. Now the underperformer, down 0.6% for the day.
Decidedly
down.
down.
Excuse me, 1.3% on the day. Excuse me.
Oh, that's even worse.
Yeah, even worse.
Oh,
Yeah.
decidedly down day for the major indexes. And look at that, the S&P 500, only 110 stocks in the S&P 500 moved higher today, 390 declined.
All right, let's take a look at the sector level. You did manage to see some green, of course, when it comes to energy, when it comes to consumer discretionary, managing to poke into the green. This is a prettier picture, actually, than when I checked this board at about 9:40 this morning. You had every single sector in the red, but still overwhelmingly financials, healthcare, materials, consumer staples, all dragging this index down.
Okay, I managed to find some gainers today. I want to start with Levi Strauss. Shares higher by 11.3% today. They hit the highest level in more than a year. This after the company came out yesterday and boosted its net revenue forecast for the full year. A big question a lot of investors had was what has been and what will be the impact on the company from tariffs. Harmeet Singh, the company's CFO and Chief Growth Officer, he told our Bloomberg News team that it'll be about $25 to $30 million through the end of the year. We actually had him on our program a few hours ago, and I asked him specifically about moving production, moving manufacturing to the United States, because that is exactly what the president wants to see. It doesn't matter if it's in Vietnam or China or Indonesia or where it is. The president wants to see it here in the U.S. He was decidedly firm in his answer. That is not going to happen for Levi Strauss. He mentioned that 98% of apparel that comes to the United States and that is sold in the United States is actually manufactured outside of the U.S., and they're not going to change that here when it comes to Levi Strauss. Though he's still working through tariffs and even making last-minute changes based on the news that he hears from the president, even up to late last night after earnings, he mentioned. Also, Performance Food Group shares surged higher today. Bloomberg News reported that the company has attracted takeover interest from U.S. Foods Holding Corp. It's a potential deal that would create a food distribution company with a combined sales of roughly $100 billion. This is according to people familiar with the matter. Shares higher by more than 4.8% today. The company would become the #1 U.S. food service distributor with 18% of the $371 billion market. This is according to Bloomberg Intelligence. We should note there is no certainty that these deliberations will lead to transactions, and representatives for U.S. Foods and Performance Food declined to comment. And finally, this is a former micro cap that is now a small cap after today's move of close to 40%. Unusual Machines. It's a drone tech company based in Florida, and drone-related firms rallied today. This after Fox News reported that Defense Secretary Pete Hegseth has issued orders to ramp up production and deployment of drones. Unusual Machines higher today by close to 40%. Josh Sullivan over at Benchmark says the memo focused on 3 main goals: bolstering U.S. drone manufacturing, delivering thousands of low-cost drones to the military, and integrating drone operating into training. Once again, shares higher by close to 40%, Nora.
Well, we've got a few names in the red as expected with the market closing lower today. I'm looking at shares of PayPal. That was the worst performing stock in the S&P 500 today. And we're seeing a lot of other fintech companies like Block and Affirm also falling as well. And that all came after a headline that we saw earlier as we were heading into the close with JP Morgan telling that these fintech companies that they're going to have to pay up for customer data. That could amount to hundreds of millions of dollars for access to customers' bank account information. So we're seeing those fintech companies falling, but also credit card firms like Visa, MasterCard also lower, with the move really threatening to upend specifically the fintech sector's business models. Another stock I'm looking at is Albemarle. That's ticker ALB. $8.3 billion company. It's a lithium producer based in Charlotte, North Carolina, and it was cut to sell from neutral, at UBS, with its price target trimmed to $57 from $64. We have the analyst here encouraging investors to, quote, fade the bounce, as he expects lithium prices will remain lower. And one more stock we have for you, Boyd Gaming, ticker BYD, but not the BYD you're thinking of. It's a casino operator in Las Vegas, Nevada, $6.5 billion in market cap, and it was cut to neutral from positive. They're really pointing to the stock's valuation after selling its 5% ownership in FanDuel to Flutter, and this is all from Susquehanna Financial. They're also citing the renegotiation of its market access agreement.
All right, let's take a quick check in yields here. A little bit of a subdued day, but a lot of activity. When we talk about what happened on the week, a push higher once again across the curve, a second straight week where we see yields move higher, but more importantly is the complexion of that move, a definite slant to the upside, a steepening, a bear steepening of that curve, with most, of course, of the sell-off coming on the longer end of the curve. That 30-year yield up about 8 basis points on the day, and on the week, it's more than 9 basis points higher than where it was last Friday.
What have I told you
Go on.
Bear with us here. Come on.
What if I told you you could go somewhere and get some really good bagels, some really good pizza, some nice steaks?
Okay, you got my attention.
And it wasn't New York City.
Okay, now you lost
I
me.
just wouldn't believe you, Tim.
You're not going to say like Jersey or something.
No, no, no.
No, we can't do that.
Watch out.
Oh.
Katie's right there.
Oh.
Sorry, Drew.
Katie is right there.
I just moved here.
Apparently, London food is having a moment. New York food is having a moment in London. Kate Crater wrote a story for Bloomberg. She covers food all over the world. She's been in London these past few years. And she writes about some
Nice
restaurants in London that are really serving a lot of food that we focused on here in New York and that New York has become known for. And it's actually really, really good.
We're talking steaks, burgers, martinis. They have apparently got it all over in London. And it's interesting because they're saying that even though it's a high tourist season here in New York, things are a bit quieter than usual. I don't really feel that when I'm walking through these streets at all here, Tim, but apparently that's the case right now.
So, I mean, the idea with this, though, too, I mean, we talk about this idea, and this is just sort of the a part of the show where I get to dump on the British.
Please.
Because it's like all their good food, none of their good food is actually British food. It's just, it's like, I mean, you get some great New York food, as you just talked about. You get some great Indian food and
food there
South
is so
Asian
good.
food
Amazing.
in there. You get all this great stuff there. What happened to, like, British food?
I
the
hear
beans
just
on
like,
toast.
what is it? It's like
Bangers
peas and
mash.
toast,
The
right?
bangers and mash, the
Yeah.
fish and chips. There's
Fish
some
and
good.
chips.
There's some good stuff there, guys.
Yeah,
Yeah.
I
Teasing
remember going to a
crumpet.
Some local
breakfast in
food.
a local hotel there, and I was,
You can get blood sausage. That's
Yeah.
not really up my alley. But
Unappetizing.
that's great for these British people who are enjoying New York food. That's
good.
awesome.
And Brexit hasn't affected any of this?
Not that I know of.
Okay,
Wow. Anyway, do you want to talk about airplanes?
sure. Talk about airplanes.
Okay, let's talk about airplanes. There's an interesting story on the terminal. Delta apparently is stripping engines from new Airbus jets in Europe to use them on grounded planes in the U.S. This is according to Bloomberg reporting. This caught my
What do you mean
eye.
stripping from airplanes? What?
That's exactly what it sounds like.
Yeah, they're stripping the engines off and using them to get those grounded planes up. You might think
So these are planes they own. This isn't like the guy who comes down down my block to steal like carburetors
in
or
the
whatever.
night.
You
These
know,
are
from
brand
the-
new planes.
No.
Okay.
Yeah, brand new planes that they haven't taken delivery of in the U.S. because they don't want to pay the tariffs, but they
Yeah.
have this fleet of grounded Airbus A320s that have these Pratt & Whitney engines that have worn out quicker than they were supposed to wear out because of a metal shavings issue
Oh, go on.
from Pratt & Whitney. So what they're doing is they're taking these engines off, they're throwing them, they're bringing them to the U.S., they're putting them on the planes here. We talked to Sid Phillip about this a
Yeah.
little earlier. He said it's actually a pretty easy thing to do.
You could try it at home.
Well, you like the ingenuity there, right? I mean, the idea that, when you run into these
ingenuity.
issues. Yeah, absolutely. Give them
was a good
credit
one.
there. And the idea that you can just take those and move more. Why not?
Why not?
Yeah, why not?
Do you know what they're doing with some of the tariff to get around some of the tariffs too on the planes, right? Did you hear about this?
No.
I was
don't.
hoping you'd tell me.
The detour that Sid told us they can fly some of the wide bodies to Japan, and then they're considered used aircraft, bring them to the U.S. I mean, Ed Bastian has been very clear that he's not going to pay tariffs on these Airbus planes that are made in Europe. So,
A good workaround.
yeah, good workaround.
Yeah, until the president finds out about it, but sure.
All right, we got to go. Guys, have a great weekend.
You too.
Happy
It's really,
Friday.
really good to hang up. Happy Friday.
You too, Tim.
Have a good
Nice to
Friday.
see you, Carol, for another third day here.
Nora's here all next week, guys.
Earnings
All right,
season.
let's go.
Wait, Carol's off next week?
Yeah.
Yes, she is.
All right, we got to go. That's going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll be back on Monday, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That's Nora Melinda in for Carol Masser. I'm Tim Stenivek. AI dominates so much right now that it's kind of always a challenge to pick and choose relevant headlines because there are so many. I could have talked about XAI, with a $200 billion valuation.
Absolutely.
How's this one, though? Man Group's Quant Equity Unit says it's begun using a new AI system that can generate code and backtest trading ideas. It makes the arrival of agentic AI at the world's largest listed hedge fund. So what it does is it digs for ideas and data, it writes code and potential strategies, and then tests them on historic data. Such a system that can autonomously perform multi-step tasks is known as agentic AI. This is one of the hottest trends right now. in Silicon Valley. It's certainly of interest to Durga Malati. He's Senior Vice President and General Manager of Technology Planning, Edge Solutions, and Data Center at Qualcomm. Before this, though, when he last joined us a little more than a year ago, he was head of AI at the company. Durga joins us from San Diego. Durga, good to have you back on the program. When we spoke to you a little over a year ago, the AI PC was what we spent a lot of our conversation talking about. And you were talking about how this was the era and was going to be the era of the AI PC. Has that materialized?
The AI PC has, once it hit the shelves in terms of the use cases coming from there, I think it's come along pretty nicely. Use cases are still emerging based upon that. But I think the biggest way to actually think about this is increasingly there is the notion of AI being omnipresent. And in that sense, it's something that's present both on devices such as PCs, extending all the way into the cloud. And therefore, the notion of fully connected, the next generation of AI is all about the connectivity that goes all the way from the cloud to the devices. This, I think, is AI's biggest untold story at this point in time.
So how can AI infrastructure needs really help to evolve to meet the demands of the on-device and cloud AI?
When we think of AI, one of the ways of actually thinking about this, it's a growth story, which kind of is not just a trend per se. As Qualcomm, we power devices that can range from automotive industry into cars to all the way into smartphones, into glasses, into your wrist with wearables, and smartphones somewhere in between. So if you kind of look at it from that perspective, for AI to scale across devices and into the cloud, one of the important parts that comes in is that you have to be able to do a lot of the AI processing, both in devices and in the cloud. And hybrid AI, the ability to actually stitch it all together, becomes a key factor as we kind of go beyond where we are today. Today, when we think of AI, usually it's all about something that's done just in the cloud. Increasingly, we are talking about the edge, as in devices. But the way we look at it is that hybrid AI is going to be defining the future of how AI processing is done, both on devices. So any kind of a device will have the right kind of applications running on it, whether they are running locally on the device or in the cloud.
Well, let's talk about them running locally, because one of the focus that we've really seen come into sharp relief this year has been the idea of edge AI and not doing this stuff in the cloud, but doing this stuff more on-prem. Can you talk a little bit about what the use case is for AI that happens in the cloud versus on the actual device, or near a facility where an office is, or of the like?
If you think about the kinds of devices that you and I carry around today, and there will be new ones that are coming along, one of the important things is that we have data that is probably something that we might want to store in the cloud, and then there is data that we might want to just keep in the device because of privacy reasons. And increasingly, most of the consumers want some sort of a personalized AI experience. So if I'm wearing my Meta Ray-Ban glasses, which are powered by our Qualcomm Snapdragon solutions, then as you ask questions on that, you want the device to be far more in tune with exactly your tastes, your preferences, and your behavior. So personalization of AI entails the usage of the data that's locally stored in the device in itself. So that's kind of an important part as to why you want to run something locally in the device in itself. Second, these days when we talk of AI, it's not just about chatbots. It's not just about language. We use a combination of you're probably taking some pictures or taking some video snapshot in addition to simply talking to it. So you have all of these modalities, as they are called, coming in. You're using all the different senses as we think about it. And the processing of all of this is done best locally. The one question that I have constantly been asked is, why do you want to actually even run it on the devices beyond privacy and security? After all, we are kind of comfortable storing things in the cloud. Well, one of the other answers is because we can. It turns out that in most of the devices now, the processing capability of AI is pretty high, which means you can talk to your smart glasses as you're walking around, like in some of the Ray-Bans that I just mentioned. You can talk to your watch as you're kind of walking around. Use your watch or your wearable as some sort of an appendage to your phone in addition to your glasses. You kind of create an ecosystem of devices around you, and they're all acting on your behalf in a far more personalized way than ever before. That's one of the reasons why we firmly believe in the usage of on-device AI, as we called it, for not just privacy and security, but also for a far more personalized agentic AI experience.
So, of course, I would imagine other consumers are like myself in that we love things being a bit personalized, but you did mention the privacy element. Can you just speak to what that looks like and how you all are thinking about privacy in relation to making this experience a personal one?
A lot of the times when we think of privacy, I'll give you a simple enough example that we can all relate to. You probably have seen that a lot of times when you start to open an app, there is a notion of, do you want to share your location information with the app? And sometimes we hesitate to do that. Sometimes we are perfectly fine with that. But it's an example. It's a good example of whenever you have a question or whenever you have something very specific from an AI use case, your local context is important. It's like you looking at something and saying, what am I looking at? But it's kind of immediate question that can come back easily is, well, where exactly are you? And that's the notion of, well, you're sharing your location. That's one example of where some data that you might want to keep for yourself. That's the privacy part of it. The other one can be tapping into some medical records that you might want to keep just for yourself, not necessarily something to be shared with everyone, maybe just with some specific healthcare providers, and that might be okay. That's a second example of it. A more relevant example in enterprises is when we use our PCs, and especially in a software enterprise when there's a lot of code generation that's occurring, we want that data to be kind of attuned to the kind of code that is written within the enterprise in itself. And that's something that you might want to tap into some local information, some local documents that you have within the enterprise, not necessarily something that's out there. And in that sense, you want privacy to be of paramount importance. We've seen examples of this not just in corporate enterprises, but also in manufacturing